Welcome back. Turning to the energy sector and what could be one of the biggest U.S. infrastructure projects in decades. The Trump administration is pushing hard to tap into Alaska's natural gas supplies. And our Brian Sullivan is on the ground in the last frontier with more on this nat gas gamble.
You know, Frank, it could be 3 p.m. or 3 a.m. here because it is always this shade of light now this time of year up here in the Arctic. We're just outside of Prudhoe Bay here. This is the wellhead of the oil pipeline and exactly where they want to build a natural gas pipeline for 800 miles through Alaska. We're up here all day on Monday with the Secretary of Energy, Secretary of the Interior, Administrator of the EPA, the Governor of Alaska, and Senator Dan Sullivan of Alaska they're trying to push through this natural gas pipeline that would ultimately convert it to liquefied natural gas south of Anchorage and then sold to buyers in Asia. We did everything. We came when we understood what they wanted to build. We talked to them. We spoke with some of the indigenous leaders in Kiavik, a couple hundred miles west of here as well. Don't know ultimately how this is going to play out. But we can say this, Frank, if indeed this natural gas pipeline, the Alaska LNG project, gets built, it would be one of the largest energy infrastructure projects ever undertaken in the United States. We'll see if it happens. Been on the table for decades, but there is a huge new push from the White House, and this is the first time ever that 3 sitting members of cabinet have ever visited Alaska. Not this part of Alaska, Alaska as a state in general. Pretty cool to be part of that little slice of history. I'll send it back to you in a very warm studio from a very cold Prudhoe Bay, Alaska.
All right, coming up on Worldwide Exchange, the one word that every investor has to hear today, and the stock pick that every investor needs to know. Plus, one group of American companies losing ground in the U.S.-China trade war. Our Eunice Yoon is taking a closer look. We'll be right back. Welcome back. Turning to the trade tensions between the U.S. and China, flaring up once again on the back of ramped up rhetoric between Washington and Beijing. The latest saber rattling pointing to a potential deal at risk. But American farmers, they're already feeling the squeeze of President Trump's policies. Our Eunice Yoon has more.
At his restaurant in Beijing, owner Gong Xiaoyun used to offer a special dish, salt-baked chicken feet, or phoenix talons as they're called here, imported from America. But after prices rose 30% from March due to tariffs, he's had to pull the Chinese delicacy from the menu. American chicken feet are so beautiful, he says. Chinese feet just aren't as good. The tariffs and uncertainty they cause is why some American products have been vanishing from stores and restaurants. Beef supplier Liu Li says U.S. beef supply is unstable and now 50% more expensive. He switched to Australian beef, which has zero duty. U.S. beef is fattier and tastier, he says. It's a shame we're in a trade war. The high price is just too much to bear.
I'm taking you to a restaurant in Beijing that is famous locally for its American-style barbecue. It's known to source all of its beef from the U.S.
Until May.
The menu has already been completely changed. The staff here tell us that all of the beef is Australian.
Chinese customers are forced to adjust. I don't think there's much difference, he says. Not everyone is willing to compromise. Gong keeps a small stash for himself, but hopes to serve his salt-baked American phoenix talons once again. The price of American chicken feet will come back down, he says, as long as there are no big changes in the world's political situation. Quite a feat with U.S.-China tensions so high.
Gong said that he could source chicken feet from Brazil and now even Russia, but he said that they just don't stand up to the American ones, Frank.
You know, Eunice, we were during the break, by the way, we were talking to the producers. I've had, like, my family's from South Carolina. I had to eat chicken feet and gizzards and everything else growing up. Not my favorite. I don't know, have you ever had to eat chicken feet, or have you ever enjoyed chicken feet? Maybe you enjoy them.
Yeah, absolutely. Chicken feet goes into the category of, you know, you've been in China a long time when.
Oh, wow.
So they have a lot of gristle on them. You know, they're like really big. The American ones are really big. So yeah, they're good. They're kind of in the same category as donkey meat. So like when I first came here, I was like, donkey meat, and then now I've been here a while, I'm like, hey, donkey meat.
We're gonna move past the donkey meat comment very quickly before we let you go on a serious note. What about when it comes to things like soybeans and other American agriculture? What's the take in China? You see a lot of reports that China's buying more agricultural products from countries like Brazil.
Yeah, no, absolutely, that's the case. So we're seeing from many years before that the Chinese have been wanting to diversify their supply of a lot of different products that they've been reliant upon for the United States. Part of that was because of what they saw during Trump 1.0, and then now with Trump 2.0, they're having the same approach. I think that from a Chinese consumption standpoint, you know, not looking at the soybeans, but looking at more products like the chicken feet, people are not necessarily negative. They don't have a negative attitude towards American products for the most part. They're making decisions based on what's available and also what's affordable. And I think that one other point that Gong made that was interesting is he said that as these tariffs are going up, you're seeing that the economy here, the economic conditions, and the confidence here going down. So people are much more price sensitive, which also factors into the consideration on pricing.
You know, when we talk about farm to table here in the U.S., I don't think we're talking about donkey meat and chicken feet in this. Not one bit. Great to see you as always. And by the way, don't try to bring it here to the U.S. I'm calling customs myself. Leave the donkey meat
Oh,
there.
no, don't worry. Don't worry.
Eunice
I've
Yoon.
tried bringing an octopus before. It doesn't work.
Eunice Yoon live in Beijing. Thank you. Great reporting as always. All right, coming up here at Worldwide Exchange, the retailer, our next guest calls her top idea down about 5% since his last earnings report. We're going to reveal our mystery chart coming up after the break. Stay with us. Exchange, we have an update to a story that we brought you earlier. Just crossing the wires a short time ago. The European Union now saying it did not receive a letter from the Trump administration making a demand for countries to submit their best offer for trade negotiations by Wednesday. So again, we've been reporting the Trump administration says it has told countries in trade negotiations it wants to see their quote-unquote best offer by Wednesday. The EU saying it has not received a letter from the U.S. Again, this follows a call with the administration of European Commission President Ursula von der Leyen. After that, the president restored a July 9th deadline to allow for talks between Washington and the EU to continue. But again, the EU coming out today, just crossing the wire, saying they have not received a letter from the White House saying that they need to submit their best offer by Wednesday. Right now, taking a look at U.S. stock futures, you can see we're in the red across the board. Off of our lows of earlier, it looks like the Dow would open about 150 points lower right now. Joining me now to discuss the markets and much more is Nimrit Kang, CIO and Senior Portfolio Manager at North Star Asset Management. Nimrit, good morning. Good to see you.
Good morning, Frank.
So I got to get your reaction to this news right now. The EU saying they did not receive this letter. We were already talking earlier in the show about some of the tensions between the U.S. and China, not just negotiations, but also tensions. What do you make of this?
This is yet another data point to kind of, again, reaffirm for what we have known all through this year. This is a very headline-driven market. It's a trading market. That's why our playbook in a market like this is to think long-term, 5 years plus, stay diversified, and be very disciplined, and not get whipsawed back and forth on the daily news cycle.
All right. With that said, I just want to bring you a contrarian view. I was actually talking to Michael Hartnett, the Chief Investment Strategist of Bank of America yesterday. He told me tariff narrative's over. He believes it's all going to be resolved by Labor Day. He says right now it's about the spending bill and tax cuts. What do you think about that take?
Yeah, I mean, the spending bill is definitely what's front and center right now. What does that mean for increased debt, for longer term growth outlook as well? So I think that's definitely front and center, but the tariff news has not gone away, and we've seen that already end of last week, the back and forth. We saw that the news on the steel and aluminum. So we're going to continue to have these drips and drabs. It's difficult to see how we're going to resolve the tariff or the trade war we started with, almost 180 countries around the world to get resolved by Labor Day. So I expect this continued drip drab going on for a while.
So your word of the day today is whipsawed. What do you mean by that? What do you see being whipsawed?
Yeah, I think it's the back and forth that we keep getting. We have the market sell off, then the market bounce back again. So this is very much a trading market environment. And if you're not focused, if you don't have conviction on what you're investing in for the long term and just chasing the daily news feed, Frank, we think you're going to get really caught. You're buying stocks one day, they go down the next day on a tweet or a news item, only to see a different group of stocks lead. So that's what we mean by getting whipsawed all over the place. Even look at the bond markets. That's been yo-yoing all over the place. Yet, year to date, the 10-year is down only about 17 basis points. All
right, Nimrit, very quickly, we want to get to your pick. We're going to review our mystery chart as well. It's TJX. What's giving you so much confidence in this company right now?
In an environment like this, which we heard from all over the retail earnings, the consumer is feeling the pain, and consumer across every single demographic, every household income level is continuing to look for value. That's where a model like TJX really shines, the resilient business model. There's plenty of space for them to continue to grow. They posted about 3% comps in the quarter. Just continues to show you how important it is to invest with a resilient business model like TJX.
All right, Nimrit, thank you very much. Your pick for us today, TJX. Great to see you as always. All right, here's what to watch today. In the 10 a.m. hour, we get the latest JOLTS report and factory orders. And then this afternoon, we're going to hear from 3 Fed officials that on the earnings front. We get results from Dollar General, Hewlett-Packard Enterprise, and from CrowdStrike. And then tomorrow, Worldwide Exchange, a first on CNBC conversation with Sixth Street co-CIO Julian Salisbury. That's going to do it for us. Squawk Box starts right now.
Good morning. The Trump administration is seeking the best trade offers it can get from countries around the world, and officials are reportedly pushing trading partners to get their offers in by tomorrow. Meanwhile, we have a downgraded growth forecast for the U.S., tariffs, and government job cuts being cited as reason. And in Washington, the Senate is set to get to work on the president's reconciliation bill. We will speak with Kentucky Republican Senator Rand Paul. Later. It's Tuesday, June 3rd, 2025, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And so far, looks like we're in the red this morning. Dow futures off by about 150 points. NASDAQ off by 80. The S&P futures down by just over 23 points. Of course, what's happening in the morning, not necessarily an indicator of how the day will end. Yesterday, we saw red arrows in the morning, but all three of the major averages were higher. Take a look at the Treasury yields at this point, too. You'll see that at this point, yields are lower. The 10-year is at 441, the 2-year's at 392, and the dollar index sliding once again yesterday. It's near a 3-year low. It's up ever so slightly this morning, but that dollar index this morning at 98.91.
Tom, the Trump administration looking for countries now to provide their best offers, they say, on trade by tomorrow. With 5 weeks to go until a self-imposed deadline from the White House, it's according to a draft letter to trading partners seen by Reuters. It says the U.S. will evaluate countries' responses within days and offer a possible landing zone, potentially including reciprocal tariffs. The administration has teased deals over the last few weeks, but only one trade agreement, as we've described so far, has materialized. That, of course, is the U.K. Yesterday, the White House press secretary saying that President Trump and China's president would likely speak this week on his social media network in the evening. President Trump saying the U.S. doesn't stand a chance economically if it can't quickly and nimbly counter other countries' tariffs. Early this morning, he posted, quote, "Because of tariffs, our economy is booming." Presented with that comment.
You mean
I don't
because
know.
of tariffs or
The OECD doesn't think so about those numbers on Friday. I don't know how long they last. The personal income tripled expectations, and the deficit was half of what it was.
But do you think it's because of the tariffs?
It's hard to argue it's because of the tariffs.
Well,
it's counterfactual, but if we were no tariffs.
But Trump's doing, he believes tariffs are going to be beneficial.
Sure.
And I just don't think you can say, just say, close the door, say absolutely that is not logical or can't happen. We'll see what happens.
By the way, it's possible there's certain tariffs that make sense.
Right.
All I'm suggesting is, do you think that today's economy, the economy of the last 2 or 3 months, is doing well as a function of the tariffs? That's almost impossible to believe.
The tariffs are causing a lot of investment to come to this country. I'm not an economist to tell you why personal income tripled expectations. I don't know, and I'm not smart enough. I haven't looked into the details of why the trade deficit would be 80 billion instead of 160 billion. I don't know, and I don't know. One thing, people love taxes. The left loves taxes. Tariffs are essentially taxes, so there is money being raised. I don't know if this is the right way to do it, but it is an alternative way of basically raising taxes and collecting.
If you talk to big businesses, they'll tell you that their investments have been paused, put on hold to try and figure out. At least, and it's not necessarily.
We haven't
because
seen
of
that
tariffs,
yet. No.
But it's not necessarily because of tariffs. I'm telling you anecdotally from a lot of big business leaders and groups that I've spoken to.
I'm waiting to see it. I'm waiting to see in the jobs number on Friday whether.
All I'm suggesting is I am a believer potentially down the road that somehow, depending on how you do the tariffs, that actually could be helpful. But I've always thought that for it to be helpful, it would take years. And on the other side, if you get to the rainbow on the other side, it stops raining. That works. However, like Elon Musk, I'm with Elon. Elon said early on that there was going to be pain that would come early on with all this, and I think
he was talking about Doge.
No, I think prior to that he was saying it was prior to the election. He said that
the combination Doge, tariffs, you lived through the first Trump administration.
Yeah, I did. I'm still here.
You have seen President Trump say similar things about economies and whether there would have been a Ukraine war and how quickly he can stop it. I mean, you have seen bluster and you have seen the greatest economy in the history of the, you've seen all that stuff. So I'm just saying that, I'm just saying that this is, hearing what he said is not surprising. And maybe there's a bit of hyperbole and a bit of a stretch, but I'm just saying you don't dismiss it out of hand that it's not going to work.
No, but I will also
I'm not saying not it won't work in the future.
To that. It'd be nice to know what the tariff.
And we also don't, right? And we also don't know. Sometimes when bad things happen, it's remnants of the Biden economy, and some things when good things happen, you're going to hear. But this is politics as usual in Washington. But you're going to hear the good things are because of what I've done since I've come in January 20th. And the bad things are still, the inflation is still, they would say, a holdover. And that's just,
bluster is.
that's what you hear. That's what you hear all the time. The OECD, I'm not convinced they're going to be right about this, but a key economic group painting a grimmer picture of the U.S. and world economies, the Organization for Economic Cooperation and Development, cutting the outlook for the U.S. growth to 1.6%. That's down from 2.2% back in March. And that's what you would expect, but this is what we're waiting for, to see evidence that that is actually happening. And they're citing the reasons that you could probably come up with yourself. Fallout from the president's tariff policy, higher economic policy uncertainty, and a smaller federal workforce. Since the U.S. leads the world, the OECD is also saying global GDP growth will, at the same time, slow to 2.9%, down from 3.1, with the slowdown concentrated, obviously, in the U.S. We kind of the largest component to global GDP. Canada and Mexico, and the last time that global growth was below 3% was in 2020 during the pandemic.
There are some indications in China of economic pain that's being felt from the tariff battle with the U.S. A private sector survey showing China's factory activity shrank in May for the first time in 8 months. The reading on the Manufacturing Purchasers Managers Index was also the lowest in close to 3 years. The result is broadly in line with China's official PMI that was released last Saturday. Last week, China's premier said that the country is considering new policy tools as the established international economic order comes under stress.
Meantime, some updated language now on the economy from two prominent Fed members. Chicago Fed President Austin Goolsbee saying he thinks the U.S. Central Bank will be able to lower rates once the current tariff uncertainty clears up. He made those comments in a webcast interview with Midwestern Business Journal. Meanwhile, speaking at a banking conference, Dallas Fed President Lori Logan saying that monetary policy currently well positioned for Fed members to wait and watch incoming data. She said her and other jobs, her others' job is to make sure a one-time increase in prices doesn't become an ongoing inflation problem.
You know, Waller and Goolsbee both sound like those are somewhat shifting narratives based on some of the recent data, the inflation data. More, Austin's always been, I think, open to a rate cut sooner rather than later. Waller definitely came around.
And we'll have Loretta Mester here to talk about it.
And have her to talk about it. But I think that they don't coordinate these things, but I don't think Jay Powell says don't go out and say things like that.
I don't think so either.
But you have a lot of people, you got some saying we're just gonna, obviously this is a wait and see moment because of the tariffs. Others are saying if we look past those, maybe rate cuts. No one's saying rate hikes.
No.
Elon Musk's brain technology startup Neuralink closing a $650 million funding round. A press release says ARK Invest, Founders Fund, Sequoia Capital, Thrive Capital, and others participated in the round. Neuralink said the fresh capital will help it develop new devices that deepen the connection between biological and artificial intelligence. Hurry, Singularity, supposed to be here soon. Little glimpses of things like that. I had someone on Twitter say the Singularity is here in terms of machine-human sort of a merger someday, which would allow us to maybe live a lot longer. Separately,
do we know we're alive though? This is what I don't understand about the singularity. Are you aware of still being there? Even if you can exist and they have you kind of put through.
I come back to the soul a lot because I think
if you believe in heaven, it's a hard thing.
People are cloning dogs. They are.
Right, but that dog's not the same dog.
I've had someone say it is the same dog.
It's not.
I know it's not, but they say it is. But a lot of what makes someone who they are is obviously since you're born. I mean, you can imagine a clone dog could be raised by terrible people versus the first dog being raised by great people. That's not going to be the same dog.
And the clone doesn't have your memory.
It doesn't have any of your memories, but it makes it. But you do come back to. I don't know what makes someone so unique. I hesitate to use the word soul, but separately, the Financial Times is reporting that Musk's AI company xAI is launching a $300 million share sale that values the firm at $113 billion. The FT says the deal will allow xAI staffers to sell shares to new investors. But we're talking about like downloading all the software of your brain
onto a chip,
onto hardware.
Yeah, but it's your memory. It's how's that different than like a book or a memory?
Well, no, you'd have to the memory. We don't even understand how a lot of memory and brain function work. But if you download it, it's there. It's like there's billions of neuronal connections. I don't know how it could happen anytime soon. I just want them to hurry. But as a backup, I still pray.
First line
Just in
defense,
case.
maybe.
Actually, that's the primary thing.
Yeah. All right. When we come back, interest rates in focus as investors weigh the potential impact of inflation and President Trump's one big bill. We're going to talk about that and hear more on efforts that are getting underway by the Senate Republicans to try and pass that bill. Maybe make a lot of changes to that bill too. We will see. Stay tuned. You're watching Squawk Box, and this is CNBC.
update now on the trade story we've been telling you about earlier. Reuters now saying that it viewed a draft letter from the Trump administration asking trading partners for their best trade offers by tomorrow. A source now telling Reuters that the EU has not yet received that letter. We continue to bring you updates as we get them. I don't know whether they would have gotten that letter, frankly, because they were already told they had till July 9th, which is different maybe than some of the other countries and places. Meantime, Treasury yields lower this morning. I told you just a few minutes ago about the OECD cutting its U.S. growth forecast. Joining us right now is Priya Misra, fixed income portfolio manager at JP Morgan Asset Management. How low can it go?
In terms of growth or treasury rates? Because I think
let's go with both.
Okay, so in terms of growth, I think the starting point is pretty strong. If the economy is in a good place, was in a good place coming into all of these policy shocks. I think what we're thinking now is what's the end game? What effective tariff rate will we face? It is ultimately a consumption tax. Whether corporates eat that tax or consumers have to take it, so what's that effective tariff rate? That's what we're focused on. We're thinking 10% plus something higher on China. Maybe that's a 15% tariff. That implies lower growth, not recession. I think that recession risk has been taken off. We're thinking below potential growth. That's our base case, but a big part of that is that effective tariff rate. The other part that I'm really worried about, there's a non-linearity when it comes to uncertainty. We're living in tremendous amount of policy uncertainty, not just trade policy, fiscal policy. So at what point is that uncertainty? I think people are frozen right now. Companies are frozen. I think consumers are frozen. At what point does that uncertainty go away to allow people to start to invest, to plan those big ticket item purchases? I think that's the part.
Well, no, that's a different question. Go back to the conversation we were just having in the last segment, which is you're saying that we were saying there's uncertainty. The president came out publicly and said the economy is doing spectacularly because of the tariffs. Does that make sense to you?
I struggle a little bit with that. I think there was a lot of front loading. So growth was strong because people realized we're in this tariff mode, let's build inventories. So companies have built inventories. I think consumers bought cars. We saw evidence of that. If this uncertainty goes away July 9th or fiscal, we get something by July 4th, I think then we have the scope for the economy to do okay. If it continues, I'm a little concerned around strategic uncertainty, as Secretary Bessent has talked about. If that lasts for a while, at what point do companies start to lay off people? I think that's the labor market is strong. We're going to get a lot of labor readings this week. But at what point does it go from I'm not hiring to maybe I need to start to cut costs? I think it's really squarely about the labor market. So far, okay, though.
Okay, let's look at the 10-year and the 2-year right now. Maybe we could pick that up because I'm curious what you think is going on there. We're just at about, well, there it is. On the 10-year, we're at 4.4. You saw the 2-year, we're about, what, 3.98, I want to say? No, 3.918.
There's a lot going on. The Treasury market is trying to grapple with the stagflationary shock of the tariffs, plus this one big beautiful bill. What are the fiscal implications? So I like that you brought up the 2-year and the 10-year. There are different factors on both parts. I think the front end, that's why we have a lot of conviction. I think the front end of the Treasury curve is attractive because I think the market's saying the Fed is in wait and see. I think rightfully so. They're looking at risk to both sides of their mandate. But when we look at tariff, in our view, that's a price level shock. Look at inflation. We just got inflation readings last week. Inflation is heading closer to the Fed's target. If tariffs end up being just a price level shock and we don't see it in wage inflation, I think the Fed's going to cut. They'll be a little late, I think, to start. They want to make sure that inflation's not getting embedded in expectations and wages. Once they see that, then they're going to look at the growth impact and we think cut a lot more than is priced in. The long end is a lot trickier because there's a lot of uncertainty. You have to pay me more to price that in, which is why that curve is steepening. I think the curve can continue to steepen. The long end is a risk asset. So the 10-year, the 30-year, I think we're watching what's happening in Congress. What does this one big beautiful bill end up in terms of the deficit? Is the rest of the world still going to buy treasuries? So I'm a little nervous about the long end. I think the risks are two-sided. The front end is attractive.
Thank you for coming in this morning. Early. Appreciate it. This is good.
Maybe we're back to looking at this economy in total. And remember what people said, wow, deregulation's great. Knowing that corporate taxes aren't going to go up is great. Grow, baby, grow is great. If only these tariffs weren't part of the equation. Everything else would be a tailwind. So,
Although drill baby drill, they're not drilling. They're taking down the rig count because oil
but
prices are low.
there's whatever. I mean, it's a much better place.
Regulation
It's a much
would be
better
a point
place
here.
for other types of regulation too. So maybe when he says the economy is doing well because of tariffs, maybe it's doing well even though there are tariffs because of all these other things, and the tariffs aren't holding it back. I remember those numbers. Santelli at the end of his report, I think, was saying there are some good things in these numbers happening, and there is investment coming, and so maybe it's not due to the tariffs. But I was just thinking, if you had most corporate leaders, if you said, would you rather be in this environment, even with the tariffs, or the Democratic administration, I think they'd take this hands down. Coming up, how should some of the biggest musical artists in the world get compensated if their music is used by artificial intelligence? Music publishers are trying to figure that out. I'll tell you about that after the break. Sparkbox.
NBC.
Major music companies are negotiating licensing deals with AI startups that could create a roadmap for how artists are paid for remixes that are generated by AI. Multiple reports say that Universal Music Group, Warner Music Group, and Sony Music Group are seeking deals with AI startups Suno and Udio over the use of music by artists that they represent to train AI models and produce new music. Those music companies represent some of the world's most popular musicians, including Taylor Swift, Bruno Mars, and Ed Sheeran. The reports say that the negotiations center on protections for the artists for the way that their content is used and creating new revenue streams to boot. Each label is negotiating with the AI startups individually, but I don't understand if the label does it, does that mean that Taylor Swift necessarily goes along with it, that Bruno Mars necessarily goes along with it? Maybe it's laying the groundwork to see if they would sign up for each of those deals.
So the story, I don't know how it works ultimately.
I mean, you want to get paid for it. You don't want them ripping it off, but at the same time, could they possibly pay you enough for what you think is going to be taking your stuff and then mixing and making their own music from that point on? And
it depends where you are in your career.
Yeah,
if you have a lot more albums to do, or maybe you say, look, I'm done. Or you say, I'm just going to play concerts. If you think the future of your career, because the other thing is, there's an argument to be made.
It's worse for the younger musicians.
But that the AI piece of it could actually help extend other people's careers.
Yeah, but it really stinks if you're a new artist trying to get attention and out there. Like, how do you make a name for yourself?
No, that's going to be harder. But think about somebody who's sort of at the end of their career, and all of the people who are going to mix. Like, think about all the people who've been done collabs or done different mixes, and all of a sudden it's re-energized their career.
Yeah.
So if AI is able to do that, that all of a sudden becomes really interesting.
But everything in the way of music over the last 20 years has been beneficial to people who are already big names and can just go on concert and do these things.
I think AI is going to do that to just about everything and everybody.
Industry.
Has there been any good music in the last 20 years?
Okay, Boomer.
I was thinking,
You've been into some of the new ones.
I was kidding. I do like some of the but I do listen to a lot of things from the 40s and 50s.
Well, sure. You have to be able to appreciate over.
People still listen to like the crappiest 80s songs. You hear them.
Dental receptive. My dental.
Don't you always hear them?
When I was doing my dental cleaning yesterday, was listening to the 80s.
That's what
I was like, wow.
What do you listen to? Don't you hear?
I grew up in New York listening to Z100.
I'm serious. You're serious?
And WPLJ.
Don't you have classic?
5.5. That's my. That's
your groove.
That's my.
Don't you have classic vinyl, classic rewind, first wave on Sirius? Don't listen to all that?
Yeah. That's you know, most people aren't on Sirius. I'm sorry. I mean, the stock is doing well, but let's just. Yeah, well,
I don't have to think about
Sirius.
Spotify. Don't drive.
Most people don't drive. Are not on Sirius.
You're talking about in the city. Most people who drive stop.
Your life is not like yours.
Thanks.
Maybe it's better. But it's not.
Yeah,
better. It is. I know you.
Coming up, we're going to take a closer look at the path of the reconciliation bill in the Senate as Majority Leader John Thune charts a course to try to pass the legislation by July 4th. And by the way, a shout out to all of the folks who are listening to us on Sirius.
Right.
There you go.
Bless you.
Unbelievable.
God
I was
bless
listening
you.
on my way in this
Yeah,
morning.
no. Look, I'm not a driver. I'm not a driver. But later we're going to hear from Kentucky Senator Rand Paul, who has publicly opposed the bill over the increase in the debt limit. And as we head to a break, a look at yesterday's S&P 500 winners and losers. We got some breaking news this morning involving Meta, and Pippa Stevens is here with more. What's going on?
Good morning, Andrew. Well, Meta is inking a nuclear power deal with Constellation Energy, signing a 20-year agreement today to buy all of the power generated at Constellation's Clinton Clean Energy Center in Illinois, which has one nuclear reactor, beginning in 2027. The companies didn't say how much Meta is investing, but they did say without the backing, the plant would have been in danger of closing in 2 years. This nuclear plant is not going to power a Meta data center directly. Instead, it will continue to power the regional grid while helping Meta reach its goal of 100% clean electricity. This is just the latest instance of hyperscalers teaming up with nuclear as their energy needs grow thanks to data centers. Alphabet is funding the development of 3 nuclear sites and partnered with Kairos Power to develop SMRs. Microsoft signed a 20-year deal with Constellation that will restart 3 Mile Island. Amazon also backing SMRs and bought a data center powered by a nuclear plant. Now today marks Meta's first nuclear deal, but it likely won't be the last. In December, the company said it's looking for partners to add 1 to 4 gigawatts of new nuclear to the grid. And so this is just one part of their overall nuclear strategy.
I know they didn't release the terms of the deal, but is this billions of dollars you think that are being plowed into this?
So if we look at the Constellation and 3 Mile Island deal back in September, Microsoft paid over 100 megawatt hours, $100 per megawatt hour for that power, which is about double where power prices are currently trading. And so it is a very good deal for Constellation and ensures that longevity. And so they are probably paying above market because nuclear is the only baseload emissions-free form of power, and they do have that 100% clean electricity goal. And so for them, it's really a drop in the bucket in order to secure that reliable power.
It just seems like such a weird thing that these companies are being forced to go find their own energy for this. I get it, they have huge data needs, but it also seems like it could be fraught with some problems along the way. It's not their core competency. They're paying somebody else to do this. You're saying that somebody else is getting paid very well for it, which means that maybe they're not getting the best end of the deal on some of these things.
Well, they've always been very big power buyers because they've always had data centers and always had needs to, to power their operations.
But this is not going to be going directly for them.
No. And so, and that is one reason that critics say it's not a one-to-one offset. And so if you really want to add more clean energy to the grid, you need things like hourly matching, regional matching, and this is not that. It's contributing to their overall goal, but it doesn't necessarily take dirtier forms of power off the grid.
Fascinating. Let's see what happens. Pippa, thank you.
All right, when we come back, what to watch as the Senate prepares to take up President Trump's big, beautiful bill. Senator Rand Paul will tell us that the changes he needs to see, he'll tell us about those changes to win his votes. That interview is coming up at 8:30 Eastern Time. And a reminder for you, you can get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back.
CNBC.
The Senate taking up President Trump's big tax and spending bill this week. It was passed by the House last month, that bill anyway. Emily Wilkins joins us now to talk about the latest on the bill and whether some of the big Doge cuts are going to stick. Good morning, in-studio person. Yeah.
Good to be here.
Nice to see you.
I mean, certainly a lot happening back down in D.C. I mean, as you mentioned, of course, the bill passing the House, now it needs to go through the Senate. They've got a really tight deadline to do it. Senators, of course, returned to D.C. yesterday to get this done. But at this point, remember, any 4 senators would be able to sink the bill going forward. And so a lot of the tensions that you saw in the House when it comes to things like Medicaid, when it comes to things like spending, we're expecting to see them rise again in the Senate and be debated over the course of maybe this next month, maybe longer, depending on how quickly they want to get this done. Thune says he wants a July 4th deadline, but there is a lot of skepticism on whether they can meet that.
We had Senator Mullen on yesterday, and he went to great lengths to bring up Senator Collins, saying, we love Susan, and is she the, okay, we got Ron John, which is a surf shop, but he called him Ron John, but he's going to be tough.
Ron Johnson of Wisconsin.
We got Senator Paul on Leonard Day. I don't know what he wants. Lisa Murkowski?
He's a no, because he doesn't like the debt limit. So he's a no on the debt limit.
What's Murkowski at this
point? So let's see here. If you want to talk about your folks who have concerns about Medicaid, that's Susan Collins, Lisa Murkowski. Josh Hawley has really emerged as a very strong voice when it comes to that and a lot of the concerns. Also keep an eye on Jim Justice with West Virginia. We should know, I mean, they're actually okay with the work requirements, which is one of the big things in this bill. It's other things like provider taxes that states will put on hospitals and nursing homes that they have a concern with. And then, of course, you can't ignore the green energy tax credits. That's something that Tom Tillis of North Carolina has been very vocal about. He has an election coming up. Susan Murkowski again, a couple other senators as well, who say, look, we have these big investments in our state. We've donated a bunch. There's been a bunch of money invested. There's been a bunch of jobs being created. And if these phase out too soon, that could be jeopardized.
We have had some people who have come through here and suggested that the Senate was going to be tougher on putting more additional cuts in, but it sounds like they're really going to be tougher on making sure that no money is cut, because they all have projects or spending within their state that they want to see continue.
And that's going to be the big thing here, Becky, because that is the tension between those who want to see the bigger cuts, want to try and figure out a way to do that, and then the tension between a lot of senators who say, look, you can't touch Medicaid, you can't touch these green energy tax credits, you can't touch, but there are other pieces of this bill too that are beginning to cause a lot of tension and a lot of concern in the Senate. And really, it's a very short timeline to try and get this done, because if they want it on Trump's desk on July 4th,
yeah, but as soon as they touch it, it's got to go back to the House, and if they touch it and put a lot more spending in, it's going to be a serious
problem. But it sounds like the dynamic that controlled the House and basically gave you what some people think is a pretty toothless bill in terms of cuts, that same dynamic is playing out in the Senate. So they may send something back to the House that satisfies the Freedom Caucus and the blue state Republicans. The Senate was talking tough. Now it doesn't sound like they're going to do anything either, but that would be, you get the bill done. We'd all probably.
And this is the thing, they want to get the bill done. They know that if they don't, that's Trump's priorities. They know that that leads to a tax increase if they don't wind up extending that 2017 tax bill by the end of the year. So they know there's a lot of political risk in not getting this done.
But if you get it done and it ticks off the bond market, that's another.
Exactly. And I think for a lot of the fiscal hawks, they're seeing things like the bond market, other warnings, and they're saying, hey, this is the time that we really need to push, because where are we going to get another?
They're going to fall back on the $1.6 trillion, and even the bond market probably will at least take some solace in that. It's better than it would have been with the one. And then they're going to be talking about growth, the certainty of having the tax cuts extended, and the $1.6 trillion. That's what you're going to hear about. And that the growth is being underestimated by the CBO. It's not going to be 1.9. It's going to be 3%, and everything's going to be great. Scott Bessent is going to say we're going to go down from 7% as a percentage of GDP. We're going to get to 3 by the end of the Trump term.
You've got it. You've got the entire talking points down. I think one thing, though, as you're looking at cuts, we're going to have this really interesting parallel going on, because as we have this Trump mega bill going through with this $1.6 trillion in cuts, we're also going to see the White House start to ask Congress to rescind some of its funding. It's only $9.4 billion.
Weird times to use the word only with that, but that's something that Congress is also going to have to take up. The White House might send that request as soon as today, and at that point, a 45-day clock begins ticking for Congress.
I said billion. Did I say billion again? 1.6 trillion. Yeah.
1.6 trillion. I think I said billion.
Yeah.
You said I might, because I did. Yeah.
Billions, trillions, zillions.
What we've.
Because
There was a time years ago we needed, the way things are going, what's after trillion? Quadrillion.
When is zillions?
Zillions is, I don't even think it's real. But just talking about that we need.
Is zillions not real?
Why don't you use Google? Google's 100 zeros.
Oh, yes. Do that.
But
Zillions.
quadrillions, you think zillions is an actual, at that point, does it really matter?
Well, according to the dictionary, zillions is an extremely large number, but not an exact number.
That's what we were saying while you were using it as a, no, quadrillions is next, and then quintillions probably.
oh yes, yeah.
Scientific notation, you don't need names if you use scientific notation.
Okay, folks. Coming up on the other side of this, we're going to go inside the latest developments in the oil market. OPEC Plus production in focus for investors. We have an important conversation right after this.
Well, let's talk about the energy complex, specifically oil, but also we'll get some natural gas in there too. Prices rising at the beginning of the week. Among the major issues for investors to focus on, output from OPEC this might have been it yesterday. Canadian wildfires threatening supplies and the U.S. rig count. Joining us now, Amrita Sen, Energy Aspects founder, director of market intelligence. Sometimes we forget about refining too, in terms of just overall trying to figure out the whole complex and why prices do things. But that was weird yesterday because the headline was continued production increases and maybe even higher increases, and yet we had that big jump. Was that due solely to worries about the wildfires, Amrita?
I think it's a combination of factors. The first thing, like you said, OPEC plus accelerating increases in July, about 400,000 barrels per day, but that was expected and it was priced in. What then started happening last week, towards the end of last week, some media reports, some analysts started to say, oh, OPEC plus might be increasing more than the 411. They might be doing 800,000 barrels per day and so on. So I think the market got a bit spooked. You know, we kept saying, no, it is going to be 3 times, i.e. the 411. And then I think a lot of people actually went short on that. Then, of course, when the confirmation came that they were actually only going to increase by 411, some of those shorts covered. And then the second thing, as you could rightly point out, is the wildfires. We've got about 350,000 barrels per day of Canadian production shut in, potentially more that is at risk of being offline. We've also got some kind of noise out of Libya, no production losses yet, but potentially some going on there as well. So there's quite a few supply risks, geopolitical headlines as well. Russia-Ukraine talks obviously didn't go very well. We had the weekend Ukrainian attacks on Russian bases. So all of that kind of led to the rally we saw yesterday.
Is it going to be short-lived? We had someone yesterday, a guest, not an oil expert, but he was willing to make forecasts anyway. He said this is the beginning of a big uptrend, back to 70 or whatever. It looks to me like this could be something that, I don't know, sort of peters out. I don't know. I know as much as he does. So I think down, he thinks up. What do you think? 60 still above or below that is going to be where we are for a while?
So the right here, right now story is bullish. We are low on inventories. There are these supply outages. The problem is the outlook isn't. All of us are calling for these big builds from Q4 onwards because OPEC Plus is bringing back barrels and the demand outlook isn't particularly good, right? We've had some Chinese macro data today, which isn't healthy either. The trade war hasn't gone away by any stretch of imagination. And I think that is the challenge. And I think that's why oil's rallies will be capped. We are already starting to see producers hedge anytime there's a rally. So I can't see how we go to 70 or 80 unless there's an actual big geopolitical outage. If that happens, of course we can get there. If that doesn't happen, I think towards the end of the year, we'll probably get more downward pressure on prices than upward.
So it's going to be hot this summer. That's a pretty good prediction usually, although it hasn't been yet. Again, like 50 degrees this morning, but what about natural gas? We're going to need a lot of air conditioning?
Yeah, I mean, look, weather is, like you say, if we started talking about weather, we could be here for a while. I mean, in some parts of the world, it's hot, Middle East for sure, but yeah, I mean, if it's going to be hot, and yeah, we are expecting more kind of gas demand this season. But again, I think the bigger driver is probably going to be on the production side. As oil prices are lower, you get lower oil production and therefore less associated gas production. And I think that's going to be the thing to watch out for.
I see. Okay, and then we always have, I think, hurricane season's coming up.
Absolutely,
again,
never far away.
Right. It's supposed to be they were
It
wrong.
started already.
I think they were wrong last year. It wasn't as bad as, we had a couple bad ones, but what is they're saying this is going to be an active year, or I don't know. Check the farmers all
Yeah,
around.
the saying is they're talking. Yeah, I think they're talking about an active year again, but like you said, the last couple of years haven't been. But look, I think you mentioned refining. I think that is worth a quick word on. Refining is actually very tight, and you and I consume petrol and diesel. We don't really consume crude oil, right? And I think one of the things you've seen, even as oil prices have come down, we haven't seen the same impact on gasoline and diesel prices because we're shutting down refineries everywhere, Europe, US. That's going to remain tight, and we should watch that space.
Becky has like 4 SUVs. I don't know why every year isn't really.
No, I don't. I have a Toyota Sienna, which is.
I thought you used to have them big
I still have one big yes.
All right, so it's going to be an active hurt because of her. And Rita, thank you. Good.
Okay, coming up, we're going to take a look at the state of small businesses. They're being monitored closely to see if they're displaying any impacts from U.S. tariffs. Stay tuned. We'll come right back.
All right, welcome back, everybody. A new survey out from Paychex on the state of small business showing flat job growth and slowing earnings growth. Joining us right now is John Gibson. He is the Paychex CEO. John, break this down for us. What you see is really important because it's what's coming from small businesses across the country. I think they've had a rougher time than a lot of big businesses because they can't adapt quite as quickly to some of the changes in policy that have come their way. It's certainly been reflected if you watch the Russell 2000 versus the other major averages. But what are you seeing at this point? How would you describe it?
Yeah, well, Becky, first of all, thanks for having me. It's great seeing you again. Look, I think despite the rapidly, changing news cycle, as you said, boy, you turn on your program every day and it's something new. What we've seen in terms of small business labor market is a fundamentally healthy, stable, and resilient. I mean, small businesses have been resilient. They're making the best of it. You go back all through 25 and really the fourth quarter of 24, we've seen really no signs of deterioration. We've also not seen any signs of picking up to date. So there's no signs of recession in our macro data. When you look at the wage inflation, area, that continues to cool. We just hit a 4-year low, and then when you look at our 3-month rolling average, that's the lowest we've seen since 2020. So it's a stable labor market. I tend to find right now small businesses are a little frozen. They're not making any big decisions either way. They're not hiring, and they're not laying off at the same time.
Look, the wage growth, not great news for employees, but maybe good news overall from the inflationary perspective. If that wage growth is slowing, that signals that you're not going to see the same sort of inflationary pressures we've seen to this point.
You're absolutely right, Becky. I think that wages are not going to be adding to the Fed's concerns relative to inflation as they're balancing all the other trade impacts. But what I see is a very healthy job market. I mean, it's still a pretty healthy job market, but employers are not willing to pay the inflated wages they were back during the pandemic and post the pandemic. And we've seen a continued kind of gradual slide. And as I said, now this index has been below the 3% point for some time. And so that's what we see. We also don't see it in job switchers. So when we're looking at people that are going and getting a new job, we're not seeing the type of increases we were seeing just a year ago.
Let's talk about this from the industry sectors. Which ones are kind of leading the way in terms of job growth? Which ones are struggling a bit more?
Yeah, look, education and health services has continued to be a leader coming out of the pandemic for 12 months in a row, been really strong. Services in general have been strong in small business. Remember, about 80%, a little over 80% of small businesses are in the services area, so they're not directly impacted by tariffs. Certainly, there's supply chain inflation issues from tariffs, but generally, small businesses are in the services area. So education and health services and general services. Where we see the laggards really been leisure and hospitality. It's remained last among all of the sectors for the 4th straight month. And when you really go back in leisure and hospitality, it's been below, the index has been below 99 for the last 12 months. Its wage inflation is below 2%. So again, leisure and hospitality really the weakest, and the services areas tend to be the strongest.
What about construction?
Yeah, we saw a little bit of a drop in construction, and I'm watching this a little bit. Construction had been reasonably stable. Last month, we did see a dip, the first dip since March of 2021. And one of the things, Becky, that goes back to something I said earlier, is I sense that small businesses are not making any big decisions. And they're kind of waiting to see kind of how the tax situation comes through. You were just talking about that on your program. And they're trying to see how this tariff before they're putting shovels in the ground. So we did see a little bit of dip in construction. I want to see if that continues in the months ahead.
Okay. John, thank you. Appreciate your time.
Thank you, Becky. Always great to see you.
Meantime, it's 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. Among today's top stories, the Organization for Economic Cooperation and Development now cutting the outlook for U.S. growth this year to 1.6%. That's down from an expected 2.2% back in March. We'll see whether they're right. Among the reasons cited for the downgrade, President Trump's tariff policy, higher economic policy uncertainty, and a smaller federal workforce. Meantime, Meta striking a nuclear power deal with Constellation Energy. Meta signing a 20-year agreement to buy all the power generated at Constellation's Clinton Clean Energy Center, that's in Illinois. Shares of Constellation, they're up sharply on the back of that news. And Elon Musk's brain technology startup Neuralink closing a $650 million funding round. Among the investors, ARK Invest, Founders Fund, Sequoia Capital, Thrive, and others participating in that round. Neuralink saying the fresh capital will help it develop new devices that deepen the connection between biological and artificial intelligence. And you'll note that some of the funds there also have stakes in OpenAI, which I thought was sort of interesting given the competition. Sometimes they take one or the other. Meantime, I want to get to Frank Holland with a look at this morning's pre-market movers, which includes an earnings alert right now from Dollar General.
Hey, good morning, Andrew. Yeah, we're going to start with an earnings mover first. Take a look. Dollar General shares up over 6.5%. You see a big spike after earnings. The discount retailer beat on the top and the bottom line. also beat expectations for same-store sales. That came in well above estimates. And the company also raised its full-year EPS guidance, coming in pretty much in line with the estimates right now. At the same time, the company cited some tariff uncertainty and also consumer uncertainty along with that guidance right now. They said they're also trying to shift what goods that they bring into the U.S. for sales. They said that situation is basically evolving. But again, beats on the top and the bottom line. Also raising full-year EPS guidance. Shares of Dollar General now moving even higher, up over 7.5% following earnings. All right, also looking at CrowdStrike reporting after the bell today. The cybersecurity firm is forecast to see its revenue grow by 20%, but its EPS decline by 30%. The stocks recovered pretty significantly since the company's widespread outage last July, which grounded flights to Delta and American and caused a number of other issues. I'm sure you guys remember. Taking a look at CrowdStrike shares right now, pulling back very fractionally, but over the last year, they're up just about 55%. This morning, we're also looking at shares of Pinterest. They are higher this morning after an upgrade to overweight from neutral at JP Morgan. You can see shares are up over 4%. The analysts are citing its user growth and AI advertising capabilities as reasons for that upgrade. Also raising its price target to about $40. That's just about the street average. 81% of analysts, they now have a buy rating on the stock, according to FactSet. Again, shares of Pinterest, they're up over 4%. Back over to you.
Frank Allen, thank you, sir.
Thank you.
All right, coming up, will it be a summer of volatility for investors? We're going to check out some of the sectors to watch next. And then later, Congressman Ro Khanna will join us on set this morning on the reconciliation bill and attracting talent to Silicon Valley. Plus, Donald Trump Jr. and Omid Malik will join us in the 8 o'clock hour. You're watching Squawk Box, and this is CNBC.
Hello, Dave.
Welcome back to Squawk Box Futures. Taking it on the chin a little bit this morning. Down triple digits. We saw similar numbers yesterday and everything closed higher. Treasuries have pulled back in yield slightly for more of the markets. Let's bring in Andrew Sliman. He is Senior Portfolio Manager at Morgan Stanley Investment Management. I'm trying to figure out what you're feeling. You think that hedge funds are underweight equities, and there seems to be sort of an underlying bid, but you expect another drawdown. I mean, the S&P's at 59.35. We're in spitting distance of an all-time high. Are you bullish or bearish?
Well, my base case for the year has been it's a pause year. We've had 2 great years in a row, and the market needs kind of a timeout, a breather. And if I work backwards, Joe, from the end of the year, it's tough to see the market substantially above 6,000, and at 5,900, that's not a lot of upside. And I learned that the market doesn't just go creep along slowly; it deviates around that central norm. So somewhere along the way, we're going to get another drawdown. I suspect it'll be later in the summer. But I will tell you this, Joe, I'm always very intrigued when the actual data diverges significantly from what is projected by the supposed experts to come. And the actual data, earnings came in strong in the first quarter. They beat by $3.50 versus consensus, but the full year number is down $10 because it's bad is yet to come. And this does remind me a little bit of COVID, which was, analysts ended up being way too negative on earnings for 2020 and 2021. I suspect that will be the same case. So I do think we'll get a rally into the end of the year as analysts are forced to kind of raise their numbers, chase the numbers. But in the meantime, I wouldn't be surprised if, not much happens to the market between now and fourth quarter.
Well, you say that you're still, this is the same bull market from 3 years ago. So we're in the third year of a bull market, okay, and that can be not as good as, I guess, the first 2 years.
Correct.
You think that there might be some, in the second quarter, that earnings will not be as strong, and that's when the sell-off begins from levels about where we are right now. So we get stuck where we are here at 6,000, then go back to what? Some of the lows that we saw a couple months ago?
Yeah, I think it's possible. I would be surprised if we go down to that level only because earnings now have come in stronger. I think second quarter earnings are going to surprise again on the upside, but again, I know we all search for how it's going to happen, but the reality is I just think that there's not enough upside for the year. It will cause a lot of these people that were pessimistic the last 2 years that have been forced to turn optimistic, they'll go back to being pessimistic. I think it's going to be a healthy year to root out a little bit too much optimism we had at the beginning of the year. And I just know that you can't have a market just creep slowly higher. It is volatile around that case. You tell me what it will be. I just think you're going to have more volatility. Could we see it low again? I would be surprised, but 10% drawdowns happen, and that it happened last summer. It can happen again.
6,000 is the upper end of your range for the rest of the year, and you think we could be somewhere 5,200 on the S&P would be the worst case scenario. You have a $6,000 price target on the S&P. That sounds like what you're saying by the end of the year.
Well, I'm not I'm a portfolio.
Well, if you had to be one, I know what you are, but if you,
what I'm more interested in, Joe, is all these companies that beat in the first quarter and their numbers went down. Right, because it's about to get bad. It's about to get bad.
If we end at 6,800, I'm going to say you were dead wrong. So you don't have to say, give me a target. But
Joe, maybe you should make fun of the people that were dead wrong in the last 2 years. I mean,
I have. None of them were. But this is eerily similar to other times where it's really hated by the market. Is hated by most people. They have a lot of reasons why it's not going to go any further, and a lot of times it seems to.
This reminds me of COVID.
Well, then it would be going higher, and you're not saying you're getting it both ways. It reminds you of COVID, but you don't think we're going higher.
Well, yes, except the difference is, Joe, the market. Why is it, if earnings estimates have come down so much for the year, how come the market's almost at an all-time high? The stock market is telling you it doesn't believe what Wall Street is projecting.
Sounds like it doesn't believe you.
We'll see. We'll see.
All right, Andrew, thank you. We'll definitely check back. I won't make fun of you, but I will remember what you were saying. Anyway, thanks. See you later.
You bet.
I can't help it. I can't help it.
When we come back, the retail dilemma: mitigate tariff costs or pass them along to the consumer. Courtney Reagan will bring us some examples of the potential impact at the checkout counter. And as we head to a break, check out some of the retail names and how they're trading this morning. Everything from Walmart to the Gap. Squawk Box will be right back.
NBC.
While tariff policy remains in flux, retailers have to decide what to do. Either mitigate the tariff costs, find a way to make up for it, or pass it along in prices. Most large retailers are trying to work on mitigation strategies, although Walmart and Macy's are among those that have said that even with mitigation, some prices will increase. But what if the retailers didn't mitigate it or couldn't and stay in business? Here's Courtney Reagan to explain it. And Court, I get the feeling that even those who aren't talking about it as publicly are realizing they are going to have to pass some cost on consumers in some areas.
Absolutely, and this is very nuanced. So we're going to try to simplify this as much as possible in sort of a worst case scenario. The true cost of tariffs is almost impossible to quantify, but if a retailer didn't or couldn't absorb the cost and passed it all on, how much would prices increase? Well, AlixPartners built these example models exclusively for us to illustrate it. So before the April 2nd tariffs, a cotton men's sweater made in China cost $6.80 to produce. Pre-Liberation Day, a 41.5% total tariff was already in place for that sweater shipped to the US. That equals $2.82. The cost of logistics and sourcing, that adds another 95 cents. So put together, the total cost of making that sweater is $10.57. At a typical initial markup rate to get to a 65% gross margin, the retail price before Liberation Day for that sweater would have been $30. So here's the same sweater at today's tariff rates. The China manufacturing costs, logistics and sourcing costs, those are constant in this example. But at the 41.5% existing tariff for that sweater before April 2nd, and then the 10% universal rate, 20% fentanyl tariff, the current tariff rate is 71.5% of the manufacturing cost, or $4.86, making the new cost the retailer pays to make that sweater $12.61. So holding that 65% markup to maintain that level of profitability and a new price the consumer would pay, $35.80. So that's a price increase of more than 19%.
That's only if you pass the entire cost on.
If you pass the entire cost on right now at where we're sitting today.
Right.
So let's look what happens if the full tariffs announced April 2nd would be enforced. At that 41.5% pre-April 2nd existing tariff for that sweater, plus the additional 145%, the tariff rate is 186.5% for the sweater, or a tariff cost of $12.68, making the new cost the retailer pays to make this sweater $20.43. So if you use that same 65% markup to maintain the level of profitability, the new price a consumer pays, $57.97. That is an increase of 92.3%, almost double the original retail price.
So I guess that assumes that they don't do pushback on their suppliers and say you're going to eat some of this.
100%. This is an example of if there is no mitigation strategy. If that retailer pays the cost of the tariff when that good comes ashore, and they take that cost and pass it along, maintaining everything else, and if we pay the full amount in the end.
And it assumes those very high tariffs that I don't think anybody on the street, at least, is thinking that all of that is going to go into play.
Let's hope not. But even if you look at where we're sitting today, and if they passed along the full thing, you're looking at a 19% increase in the price that we pay. Again, on this example, if there's no mitigation on a cotton men's sweater made in China, sold in the United States.
And then you can view it whether profit margins right now are too rich because corporate taxes are too low.
So I think
I don't know why Democrats don't like this plan, because instead of raising corporate taxes, corporations have to eat some of it, so their margins are squeezed a little bit. If they don't mitigate it all, they do maybe raise some prices. It raises revenue. Is it? As a Republican, nobody wants higher corporate taxes. Nobody wants higher.
I was going to say,
I don't, but Democrats do.
If you wanted to frame it that way,
yeah,
and say, look,
you want to hear it that way. You don't want to hear.
I think it would help actually, because I think people go, oh, okay, I understand what's happening.
I understand.
We want to do. We think that this is a better way to raise taxes and to raise revenue. You can even say just raise revenue, and that if that's how you want to do it, and that's what this is about.
Right, but
that's not what we're saying it's about. We're saying
I know that it's about fentanyl. Believe me, I understand all those things. But you wouldn't think you'd have Republicans and Democrats both united in just saying it's always bad. In the old days, Democrats liked tariffs.
You know, that's funny. I've also thought about that. I'm not a political expert, but you're right. And I know that there's a lot of political inherent bias when you're talking about tariffs on whether you believe it's a good thing or a bad thing.
I mean,
and that's why this gets very complicated.
And it's a Republican president. Republicans should hate him because it's like raising corporate taxes. But then on the other hand, corporations, if you're Elizabeth Warren or Bernie Sanders, they've been controlling things for so long that maybe it's not so horrible that they need
the problem is from the Bernie Sanders and Elizabeth Warrens of the world, if some of this gets passed on to the consumer, then it's a regressive
Well, I'm saying
tax.
if it's not passed on, if it's eaten.
And obviously there are studies out of Yale and out of Wharton that are sort of also looking at the scenarios if the retailer eats the whole thing, if they pass along the whole thing, or the 50-50, and I believe it was Wharton and or Yale that sort of said 50-50 is actually not great either, because a retailer eats the cost, but But then in order to eat the cost, they have to cut costs somewhere else, which can very often be something like headcount, right? So then you have job losses.
Right.
So maybe you've lost your job and you're paying more at the cash
Yeah,
register.
we had somebody here yesterday, it was Peter Bookvar, talking about how the tariffs on steel and aluminum might help the steel industry in particular in terms of jobs, but it may have a greater offset in terms of jobs for related industries that use steel as an input from construction and other places.
And that's why this is so very, very complicated.
But across the board, similar things would happen with higher tax rates. And almost across the board on one side of the political aisle, 25, they would give anything to raise corporate rates from 21 back to 25. And all the same things that you just talked about apply. You might have to lay off people, you might have to raise prices, you might have to, all the same things apply, but that's, you can't have you get on a vote to raise 25 in the House, you'd get probably, on the Democratic caucus, you get 100%. In the Senate, you get 100%. To vote for that. The tariffs, oh my God, the world's in.
You know, this is why I'm not in politics, Joe, because I don't know the answer to these conundrums.
Nobody does. Thanks, Courtney. Coming up, the Department of Education making a change when it comes to paying back student loans. And check out the shares of Constellation Energy up sharply after Meta signed a 20-year agreement to buy all of the power generated at the Clinton Clean Energy Center. It's a nuclear plant in Illinois. Squawk Box coming right back.
Calm.
Welcome back to Squawk Box. A live look at the White House there. The Department of Education pausing a plan to garnish people's Social Security benefits if they've defaulted on their student loans. This according to an agency spokesperson. The move amounting to an abrupt change in policy by the Trump administration. It announced in April it would resume collection activity on the country's $1.6 trillion in student loan portfolio. Now, during the pandemic, you may remember the government stopped going after people who had fallen behind on their payments. Normally, Social Security recipients can see their checks reduced by up to 15% to pay back defaulted student loans. More than 450,000 federal student loan borrowers age 62 and older are in default on their federal loans, which is a remarkable stat. Coming up a little bit later, the new face of NBC's nightly news. Tom Holland's going to be here. He just took over from Lester Holt. We're going to get into some of the big stories right now and get his take on the competition in the news business when Squawk Box returns.
NBC.
A new era of NBC nightly news started this week after Lester Holt signed off after 10 years in the anchor chair. Joining us right now is a man in that chair at our table, though, NBC nightly news' new anchor. Tom Yams, good morning to you, sir.
Morning to you, Andrew. Morning to all of you. Thanks for having me.
Great to see you.
So, okay, we're going to talk about the TV landscape, what it means to be on at 6:30. I mean, this is like a vaunted chair, first of all.
It is, yeah.
So what does that feel like? First night out?
It feels incredible, yeah. First night was last night. Look, it's the honor of a lifetime, right? I walked into 30 Rock in the year of 2000. I was an intern, making no money. And I'll never forget when I came in, I heard, Tom. And I thought, oh, these people know the intern. This is so nice. But it was Tom Brokaw, who was just behind me. And I remember thinking how cool that was, that people knew him as Tom and not just Tom Brokaw. But I've worked really hard, Andrew. You know, I've been doing it for more than 25 years, worked a lot of weekends, a lot of overnights, every shift, every job in a newsroom. And to take over for somebody like Lester, who's been a friend and a mentor, is incredible.
Okay, so here's the hard part.
Yeah.
How do you feel about the fractured media landscape? And the reason I mention that is you mentioned Tom Brokaw.
Yeah.
There was a time...
3 channels.
When there were 3 channels, and Tom Brokaw and Dan Rather. You could go down the list. Those were names,
Right.
and hopefully your name will become one of them. But it's a harder environment today to break out and become something where the entire country is watching every single night.
Not only 3 channels, in some cases, no remote controls, right? So if the TV was parked on a channel, it's going to be parked there all day. Listen, it's fractured. You can't ignore that. But I think people are consuming news more than ever before. So how do you stay on top? How do you thrive? I think you have to be everywhere. And it's one of the reasons why I'm doing nightly news and I'm doing my streaming show. So we're going 90 minutes straight. Right when nightly news ends, they flip a switch, the entire studio changes. It's my streaming show, Top Story. And I believe you have to be everywhere at all times.
I think you have 3 hours. He's doing an hour and a half, actually. An hour and a half a night.
Right. Yeah, hour and a half a night. And I think you have to be everywhere. And it's not just, you know, on television or streaming. You got to win the text alert war, which is huge, which is basically when there's breaking news, making sure you get your alert out first, which drives people to your site. 3 to 5 years ago, NBC News sort of changed. They reinvested in digital. It's been a revolution. So when I go to a breaking news story now, it's not only 10 reporters on the story, there's 20 reporters because we have all of our digital reporters as well, all on Slack communicating. And I think you need to be there. You need to be.
But how often are you just grabbing this and just talking to the phone? Do you think that's the future? I mean, do you think that anchors are supposed to do that? Because it's very interesting. It creates an intimacy, but also one of the things that makes an anchor is this feeling that they are somehow in this like separated space.
Yeah, look, I don't think the people on social media, on TikTok or Instagram that are getting their news from there are going to come to nightly news, right? But I think it's good for brand awareness. It's good for NBC News in general because you want to build those viewers early on in their lives and get used to that habit of watching you and seeing you. So I think it's important, but look, I'm not going to try to be a TikTok anchor. That's not who I am. I'm going to be the anchor of nightly news, and I'm going to be who I am.
And the anchor role has changed significantly. I think people have to feel a much more personal connection with you because of how they do feel this with the streaming show, with the anything else that goes.
I agree with you, but I think, you know, you can't lie to that thing right there, right? That thing sees right through you, and I think the viewers know that as well, and I think they're way savvier than a lot of people.
But I think the viewers have changed over time, too. I think the viewers are much smarter viewers than they used to be, and I think there has to be an authenticity and a real talk that comes no matter where you are.
I completely agree with you, and one of the things we're going to be pushing on nightly news, and one of the things I believe in, is immersion journalism. And what is that? That basically, you show the viewers that you are working the story. So if you're doing interviews, you're doing 2-shot interviews. If it's taking you a day and a half to get to a story in Peru, to interview the people at the church where the Pope came from, Pope Leo came from, let's show them that because that process is interesting, but it also shows that you are working the story and that you're out there in the field. Listen, I think at the end of the day, I've been saying this because I've done a lot of interviews about this new gig, I work for NBC News, but I work for the viewer. And the best journalist and the best type of journalism never forgets that.
Yeah, I said that I think last week. I was kidding, but the only boss we have is the viewer.
100%.
Which sometimes gives you some impunity about listening to other bosses, but that wasn't my point. You know what else is important is it's still important that the 6 o'clock New York guys and gals, you need that lead in still. It's
still huge, yeah.
It is, because when I watch TV during the day on NBC, those are what the commercials are for all of our local people. And I think that's what, in the big markets around the country, it's still like that. And then they're tuned in. They watch the local news at 6, and then there you are at 6:30.
Local news, I came from local news, spent some of my best years working in newsrooms in Miami and New York City, and really honed my skills there. NBC News did something interesting. Over the last month, they actually pulled me off the air in a big way, and I traveled the country going to local stations.
Still have to do that.
Getting into local newsrooms, meeting with anchors and reporters from all over the country, from places like Memphis and Baltimore and Cincinnati, and getting to know these people, listening to them, making sure that they know who I am, but I know who they are. So when they need, because we ask them for help a lot. There are eyes and ears all over the country in these towns and cities where maybe we don't have bureaus. And it was, I gotta tell you, it was thrilling to talk to them. It was invigorating because local news is great. They're still working real hard. They've never been asked to do more. And it's really nice.
Okay, so here's my question. After you've gone on this road show of sorts, you've been around the country.
Yeah.
How do you think people feel genuinely about the economy right now?
Yeah, I think it's interesting. The 2 stories that I saw in every local newsroom were immigration raids that were happening in these towns and cities, and then tariff stories. And those were leading the newscasts across the board. And it was funny because every time I looked up, I was like, wow. I was like, because usually every lead is different in every city, but universally right now, that's what people are talking about, and that's what people are doing. I think what Courtney did just now, that was a masterclass on how to do the tariff story. I think it's really complicated. I think it's changing people's viewing habits. Someone like myself, I watch the Today Show, and my next move is CNBC because I know I got to understand the business news of the day. It wasn't always that way. I mean, I've always watched CNBC, but now every day it changes. The tariffs, every day there's new news, and it's going to affect people's bottom lines.
How's your life, you think, going to change because of this?
You know, I talked to Lester a lot about this because the demands obviously are great, and every American deals with this, right? The work-life balance. But my day's getting longer. Luckily, my kids and my wife have known me always as a network news correspondent or anchor. So if you have to leave a Little League game or a school play, it's tough. But they understand that dad sort of has this responsibility. My wife, luckily for our marriage and for our family, she's a former executive producer in news. And so she understands this. She gets it. She gets it, and she's our rock, and I owe everything to her.
When you travel, do you bring a blazer, a shirt, and a tie wherever you go? Because it's something, like, I'm saying when you go on vacation.
Yeah.
Even.
I bring my passport everywhere. I don't necessarily bring clothes because that'll be too much, but I bring my passport anytime I get on a plane, regardless if I'm going to Miami.
You don't have a real ID.
That's
That's
true.
why I bring my passport right now.
I actually don't have a real ID either. I got my appointment in July though, but no, I always carry a passport ready to go.
By the way, news you can use on the passport thing, because I just learned this. If you have global entry and you have that little ID that comes with it, you can use that instead of.
I do have that. Okay.
So
I didn't know that.
You don't have to. Yes.
Andrew, thank you.
We're trying here, folks.
Guys,
Trying.
world travelers, man.
Tom, cool. Congratulations.
Thank you for having me.
Awesome. Really, we're very excited for you.
Come back.
Come back. Oh, whenever you guys want, I'll be
morning.
back.
You got to work late night, so.
I was getting ready for Joe. I feel like I didn't get the Joe treatment, but I'll come back.
Where you go?
We already talked, and your parents immigrated from Cuba.
My parents are Cuban American. Yeah, they came here and they worked really
There's some
hard.
solid conservative values there. That
I'm gonna leave it
instilled in you.
Don Jr. coming up. You got something for him?
Don Jr.
And me.
Yeah, like a question for Don Jr.
Sure.
How's the relationship between your father and Elon Musk right now? How would you describe it? That's where I would start.
Good question.
Yeah.
But while you were, I was also thinking, there was Brokaw, Rather, and I don't remember the other one, but.
Peterson.
But I remember the days where we sat around and there was a guy named Cronkite who was like, and those days will never be back. But think about what Walter Cronkite represented to this country and the way he presented news. And when I heard about Kennedy from him, and when I heard, those were the days of the true nightly news.
You're supposed to mention David Brinkley, I think.
Brinkley, Chet Huntley, John Chancellor. Remember those guys as well? No.
Some.
Millions are still tuning in though every night.
No doubt, they are.
Yeah.
But you just got big shoes to fill.
Looking forward to it. Thank you guys.
Thanks.
Coming up with the aforementioned Donald Trump Jr. And founder of 1789 Capital, Omid Malik, can join us on set to discuss their latest ventures, including their DC-based private membership club, the Executive Branch Club. That's at 8:10 Eastern. Also, we got some SPAC news. Something called Grab a Gun with the symbol PEW. You know why?
Is that why?
That's why. Eastern Time, Squawk Box, coming right back.
right, welcome back to Squawk Box. We've been watching the futures this morning. We've seen a little bit of improvement. We were down by about 150 points an hour and 45 minutes ago. Now we're indicated off by about 90 points for the Dow. S&P futures down by less than 10 points. The NASDAQ off by about 6. If you're watching Treasury yields, earlier they'd come down a bit. This morning we're looking at the 10-year at 441, the 2-year at 391. And oil prices, which jumped yesterday on a combination of a lot of factors, are up once again this morning. You're looking at $62.83 for WTI. You had the attacks from Ukraine on Russia that raised some questions about oil supply issues. You've had a rig count that's been brought down over time, even though you have heard from OPEC Plus that they're going to be continuing to increase supply. Let's take a look at gold prices this morning. Right now, it looks like gold is down by about $15, $3,355 an ounce. And then you've got Bitcoin, which is trading up at around $105,000.
Meantime, we got a market flash because Volkswagen now saying about 20,000 employees will voluntarily leave the company by the end of the decade. That's more than half of the 35,000 cuts that VW and labor leaders had agreed to. Now, back in December, the automaker now restructuring its German operations as it grapples with what has turned out to be a lot of uneven demand for its cars, Becky. And maybe not to Becky. How you doing with the cough there?
I'm okay.
You're okay.
All right. When we come back, Congressman Ro Khanna is going to join us. He is here to tell us why he's worried about the talent pipeline in his home district of Silicon Valley. We'll get into that topic and much more when he joins us on set. And in the next hour, Senator Rand Paul on the reconciliation bill, the deficit, taxes, and more. That's coming up at 8:30 a.m. Eastern Time, and Squawk Box will be right back. top tech firms have long hired international students to try and help innovate, but President Trump's effort to ban foreign-born students could impact the talent pipeline for Silicon Valley, and that is causing some concerns in the district of our next guest. Joining us right now on set is Congressman Ro Khanna of California, whose district is in the heart of the Silicon Valley. And Ro, we always appreciate talking to you. Thank you for coming in today.
Always a pleasure.
This is an issue you want to talk about. What's the impact? What are you hearing from your constituents?
Well, first, let's talk about the economics. I know you've had Secretary Howard Lutnick on. He always loves talking about lowering the trade deficits. Here are the facts. International students contribute $44 billion to the American economy. It's one of our biggest exports of anything. If you want to lower the trade deficit,
Just in terms of tuition, travel,
tuition, life expenses, universities employ about 1.5 million people. You go talk to Stanford, you talk to other state colleges, many of them rely on international students to be able to have the employment they do. They help but defray the costs, so American students don't have to pay as much. And then the reality is that you have people like Elon Musk who were foreign students. I mean, they have been embedded in Silicon Valley and the companies that have been created.
Wait a minute, now you like him for a second again?
I've known Elon 15 years.
No,
I've known him 15 years. I try, you know.
You're a Democrat. You can't say good things about him right now.
Look, I've always praised Tesla. I've praised SpaceX. I've praised his innovation. And you see now him having certain concerns. He's criticized the repeal of the tax credits on clean tech. I guarantee if you have him on, he would criticize banning foreign students.
I don't think anyone really wants to do that. But then, Boulder yesterday, I'm at a loss.
Well, it's horrible anti-Semitic terrorism, needs to be unequivocally
it hasn't been
we debate this all the time. What do you think the answer is? We were talking actually about what happened at MIT just during the graduation ceremony on Friday.
You wanted me to say that I love my alma mater. I did not say that to you. I think they deserve it too.
Well, and that's the question. The question is, what is the right answer in a world where you want to have both free speech, but you also
something different than what we have now?
Well, but the question is, how do you effectuate that?
Yeah.
And clearly, what I think the president is trying to do, he's trying to move the goalposts so far over here, because he thinks the only way to get them to even halfway is that. Now, I'm not saying that's the right approach. I'm just asking what you think is the right way to get there, given that whatever's happened thus far hasn't worked.
Well, first let's talk about the anti-Semitism, then the president's approach on the student visas. On anti-Semitism, you need both parties, people condemning things like chants river to the sea, globalize the intifada, that crosses the line. You can't chant, all Zionists need to die.
Everybody said it's bad, bro, but the lip service isn't going to do it. You need to change from the ground up at some of these places. Where are these people from? And how did it happen? Where did they get indoctrinated like that? Does it go all the way to the professors they've been hiring for the past 50 years? Where's it from? It's insane.
Well, look, I think Alan Garber at Harvard University, he's put out a whole report of things that need to be done better, that he said Jewish students feel unsafe in certain places, they were harassed, Harvard needs to reform. Now, they were doing that report before Donald Trump did anything to threaten the funding, and it would be better if Harvard just reformed themselves. You don't want big government telling universities in this country what to do.
Oh my God, now you like Elon Musk and you don't like big government. Who are you?
Joe, come on, do you really want government telling private institutions?
You do want these universities reforming themselves and actually doing something. I mean, they would say one thing and then they would allow all the students who they didn't
give them their diploma, give them a $65,000 grant, the same guy.
Look, I'm not going to defend the way the universities operated. I liked my alma mater, University of Chicago. They said very clearly non-disruptive protest is not allowed. You can't go in buildings and just prevent students from going there. Disruptive, yeah. I mean, disruptive protests. But, the social media thing, I mean, now Rubio is saying we're going to vet everyone's social media. I got into an argument with Vice President Vance where he said that there was a kid, 25 years old, he said normalize Indian hate on social media. I said have him apologize. The Vice President says, we don't want to look at people's social media. They just make jokes. Now they want to censor everyone's social media, and then they're lecturing the foreign countries about free speech. I mean, Rubio's saying, don't take away the speech for Americans, but we're going to take away
censor them. They just don't, if there's clearly almost activist from the river to the sea, if you see that on someone's social media site, maybe they shouldn't come here. They don't want to censor it. They can do it all they want, but they're not coming into this country, and they're not going to go to Harvard. And I'm not saying that we want to look at everything single student, but it's not censored. That's what your party wanted to do. So they did do it. They wanted a ministry of disinformation, a ministry of truth, and they went to Mark Zuckerberg and said, "Look, don't print this about the Wuhan lab." They already did that. That's not what they're asking now. They're just not going to let these people in. If
Look,
see.
I've stood up for free speech. I criticized.
You did. I saw even the Facebook
on the Hunter Biden stuff. I said you can't censor the New York Post. So I'm not going to defend.
Yeah, better late than never.
I did it. My private email when I had said that. But the point is that look, if you want to have some strict guidelines that you don't want hate speech against Jewish Americans, and that's a criteria, that's fine. But they're saying we're going to look at the social media feed of every student.
Should that person get here if you did see absolutely inflammatory activist speech on a Twitter account or social media? Do we want that person at Harvard?
If there was hate speech that was clearly anti-Semitic,
you don't want that. Right.
No, fine. I think that's a fair criteria. But I don't think that what we want is people looking at, have you ever criticized Donald Trump? Have you ever said anything critical of Benjamin Netanyahu?
Right.
Have you ever said anything critical of government? And what they've done.
Who should be making that decision? Is that the State Department about letting you in to begin with, or is this supposed to be that the universities on their own are supposed to make these decisions? I think that's actually a big thing that's not discussed.
Well, look, ultimately, obviously, the State Department has the final say. Right. They get to control the borders. But I think there has traditionally been a deference to schools to be able to do this, and I would hope that they have a very light touch when and real evidence that someone is actually going to be a threat to Jewish students or Muslim students or anyone here. What Rubio has said, one is they put a ban. I mean, think about this. They're banning all foreign students from coming to Harvard. Second, they've put a pause on any foreign student coming to the United States until they have a social media vetting. And what's the consequence? Folks are now going to Singapore, they're going to Finland. This is what made this country, that people would come from all different backgrounds, they'd contribute here, they'd build companies here, they'd create jobs here. And it used to be your part. Ask Rand Paul how he feels about this when you have him up next. I mean, I think he would tell you he doesn't recognize this Republican Party with blanket tariffs, with the interference on universities.
What do you think happens with the bill that the House has already passed? Now the Senate is considering this. There's a deadline that the administration is hoping for July 4th for this. Do you think that's possible to get to that point?
I think it's going to be hard, but they're just going to add to the deficit. Look, the bill adds $3.8 trillion to the deficit over the next 20 years. We have a $36 trillion debt. It takes it to about 56-some trillion.
Republicans will argue, I know you can name 15 different places that say this. Republicans will argue and say it doesn't consider the growth. What do you say back to that?
I mean, that's always the argument a politician makes. I mean, you want next time a Democratic politician to say, okay, we're going to spend on everything and have 5% economic growth? I mean,
no, they don't even do that. They just spend and they don't even care. They don't even care whether there's growth. Everything they're passing is anti-growth. So why?
Joe, you got to.
Did 2017 did those tax cuts? You don't think they worked?
I think they added to the deficit.
Okay.
I think they added
not to the extent that it was said that they were going to do it. And there's certain things. You know, Republicans think if you added the deficit, you should at least be cutting taxes for pro-growth policies. Democrats just, I don't know what they think when they add to the deficit. I guess they think that the government knows what to spend money on better than the private sector. That's all I can figure out.
Well, no, they think that we should be taxing people in my district more to be not to be having this kind of deficit financing. And the reality is that this
taxing just the people in your, sorry to interrupt, but taxing just the people in your district is not, you know, you have to broaden the base. Sure. If you want to do it with revenue, you're gonna have to tax the middle class.
No, I think you could tax people over $500,000 more and
That's
raise
not enough money. You're going to run out of rich people.
And you stop some of the tax cuts that they're adding to the tax cuts.
No,
and then you look at some of the defense spending. I mean, they're adding $150 billion to defense. Elon was supposed to cut defense. Look, Elon came in there and he said he was going to cut $2 trillion. Then it went down to $1 trillion. Now it's $81 billion. He didn't touch anything in defense.
Now, are you blaming Elon, or are you realizing how impossible it is to this Leviathan that you love so much? I mean, it's impossible to make any progress cutting spending, and that's all you're telling me right now. If Elon Musk can't do it, no one can do it.
Well, it's hard. You know, look, I made a lot of calls that don't turn out to be correct in politics.
Well, you thought we were going to win the White House, and that didn't.
Well, that exactly.
The two of us.
I thought Kamala was, and then
No, you didn't. Nobody really did. And
I thought after the convention she could win.
So Tim would be a heartbeat away from the presidency. That's all we need.
But Joe, when you announce I'm for you in the Midwest, I'm still
Rojo. I told you that. Not Joe. Rojo.
I'm telling you, but we gotta have a real deficit reduction plan, not this.
Oh my God.
Really? So you're gonna go? What are you gonna cut to get to your deficit reduction?
I'm gonna cut defense, the parts of defense. I'm gonna cut fossil fuel subsidies. Would lower prescription drug costs. I introduced Trump's executive order on prescription drugs. I think that's terrific. Let's have Americans pay the lowest price, and let's not negotiate with big pharma. And I would raise taxes on the wealthy.
As somebody who lives in California and cares about innovation, how do you sort of square the circle on drug innovation if we're not going to pay?
So big pharma right now pays more for stock buybacks and for the dividends than they do in research and development. You want to have a research and development tax credit, expand that for pharma, saying if you're actually investing in innovation, fine. But right now, they have a large margin of profit. And there's no...
There's a fair margin.
Well, I think the question is, what is going to allow innovation to continue? Right. Also, if you lower American prices in other countries and European countries may come up. That's Donald Trump's theory. Right. And so at least try it so that Americans aren't subsidizing these big pharma companies around the world. But I think if they weren't engaged in stock buybacks and dividends, they would have an argument. But why, if they want the money for their trials and research, why not have it targeted towards that as opposed to the broader costs?
Ro, who's the head of the Democratic Party right now?
Hakeem Jeffries.
What are the Democrats doing in response? Because Republicans control everything right now. You guys are basically just waiting for the Senate to decide and send the bill back to the House. You won't be able to really make a difference on that either, other than to just say no, we're not going along with this.
Well, we could try to shape some of the bill to get some of the worst parts out. Let me give you a couple examples. Having a moratorium on any state for 10 years to have AI regulation. I mean, that should not be in this bill. I mean, hopefully the Senate takes that out. Having an endowment tax of moving, taxing Harvard and all these endowments to 20%. I mean, that's going to really hurt innovation. The NSF, so right now it cuts 50% of the National Science Foundation budget, cuts in the National Institute of Health. So our hope is that we get some of those extreme provisions out. It used to be a bipartisan consensus in this country.
Are there Republicans who agree with you on this point, who are willing to work with you?
There are in the House. I don't know the Senate as well, but certainly in the House, there are Republicans who don't want some of the Medicaid cuts. Now they voted
the
for
National Science Foundation.
The National Science Foundation is such a small part of the budget. I'm hopeful that that part will get restored in the Senate.
Ro Khanna, Congressman, thank you very much for joining us today.
Appreciate it.
You going anywhere else?
I'm going to go over.
Yeah, I mean, media-wise?
No.
Oh, okay.
He's loyal.
All right, I hope so.
We got to do a town hall together in Ohio or something.
All right. I don't,
You think it's bad for your image? What are you going to do?
I think lately town halls have been tough for both sides. Because the other side sends their people in.
Trump supporters. Now, next time maybe they say they'll saw me on Squawk Box. So they saw this lady says she saw me on Fox News. She asked for a selfie.
What's it called?
Fox.
I'm not familiar.
You don't make appearances there? They don't take your clips. They don't take your clips. Anyway, so then we invited the Trump supporters into the town hall. We got to do more of that in this country.
Okay. Maybe move on. They invited the Trump supporters?
I did. Because they wanted a selfie, because they saw me on Fox News. So there were protesters. But, most folks in this country just want to have a conversation, want to move this country forward. The comment I get the most when I come on this show is, oh, look, that Joe, and how does he tolerate you? I say, he puts up with me, but you're a conservative guy, but we have a conversation. We have disagreements.
We do. We love each other. There's a lot of love. Well, if we're going to run on the same ticket, there must be mutual respect, right?
There is mutual respect.
Well, thank you.
Thank you.
Only 3.5 years. Okay. You might be in the cabinet.
Really? What would be my role?
Secretary of Treasury. It's all. Becky, what would you do? Secretary of
Treasury.
No, I think I'd go home. You all have fun.
You wouldn't take the pay cut.
Right. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, the Organization for Economic Cooperation and Development cutting its outlook for U.S. growth this year to 1.6%, down from a 2.2% previous expectation back in March. Tariff fallout and smaller federal workforce are being cited as the reasons by the OECD. Microsoft is cutting hundreds more jobs just weeks after the largest layoff that it's done in years. That's according to a Bloomberg report that said more than 300 employees were told that their positions had been eliminated yesterday. Microsoft said that the latest job cuts were in addition to the 6,000 cuts that were announced last month. And Disney is laying off several hundred employees across several divisions, including film and television marketing, publicity, casting and development, and corporate finance. The company attributed the cuts to the rapid pace of industry transformation and a push to operate more efficiently.
Take a look at the futures right now. We are down on the Dow about 82, 83 points. S&P 500 off about 8 points, and we're looking at the NASDAQ off about 11. Want to get over to Frank Holland. He's got a look at this morning's pre-market movers. What's on tap?
Hey, good morning, Andrew, Joe, and Becky. Take a look. We're going back to an earnings mover. Dollar General, you can see hitting its highs of this morning, or just off its highs of the morning, now up over 10%, about 10.33%. The company reporting a Q1 beat just across the board earlier this morning. Same-store sales also beat estimates by quite a bit. However, tariffs, a major focus of this report, though the company cited uncertainty around tariffs and an impact on its guidance. Dollar General is the first of the discount stores to report. Dollar Tree and Five Below, they both report their earnings tomorrow. Dollar General shares up just about 10% right now. We're also looking at nuclear stocks this morning. They are surging after Meta announced a 20-year deal with Constellation to buy nuclear power as part of the tech giant's goal of 100% clean electricity. Meta's going to buy about 1.1 gigawatts of energy from Constellation starting in 2027. Other nuclear names like Oklo and NuScale, you can see right here, they're higher in sympathy. Big Tech's been ramping up its interest in nuclear steadily. Alphabet, Amazon, and Microsoft have all recently announced deals. Taking a look right now, you see Constellation shares, they're up over 12%. Oklo up just about 6.75%. Vistra down here up over 5% as well. And also, we're taking a look at shares of HIMS right now. You see right now, moving higher, up over 6.5% right now. You can see the healthcare company moving higher after announcing it's acquiring Zava. That's a European telehealth company. The acquisition will grow HIMS' active customer base by 1.3 million, a roughly 50% increase as it looks to increase its international presence. The terms of the deal, they were not disclosed, but the company expects to close it in the second half of this year. Again, shares of HIMS, you can see they're moving up about 6.5% right now. Back over to you.
Okay, Frank, thank you very, very much.
All right, some news for you. Victoria's Secret is postponing its first quarter earnings release and conference call. The company saying that it detected an IT security incident on May 24th. It says that it restored its website on May 29th and is still assessing the full scope and impact of that issue. In the meantime, the company says that it expects those first quarter results to exceed the high end of its guidance. Right now, you see Victoria's Secret shares up by 5.6%.
All right, coming up, an interview that you don't want to miss with Donald Trump Jr. and Omid Malik, both of 1789 Capital. Lots to talk to them about, including a SPAC, a gun SPAC. Yep, you're watching Squawk Box on CNBC.
and make it count.
And joining us now, 1789 Capital's Donald Trump Jr. and Omid Malik. Gentlemen, you're at the table with us on set.
Great to be here.
Great to have you here.
Thank you.
We're going to talk about lots of different things, but let's first talk about the idea for something that you're referring to as an Amazon of guns, which I don't know, your worst nightmare almost, Andrew.
Andrew's not going to be
but we can talk about
I had a customer, but I actually have interesting thoughts about all this.
Okay, it's going to be back. It'll be within the next month or so.
Yeah.
And I didn't realize, 17 million guns are sold in the United States every year, most of them for hundreds of dollars. It's an industry that has had some pressure for efforts to defund that industry. And I know I'm looking at you, but I'm really looking at everyone. But this would be a way of putting it online. How would it actually work with regulations and everything else?
Listen, you still have to go through the regular FFL process. This isn't like the typical sound bites of, hey, they're just going to mail a gun to your house. No. But what you can do is you can consume and you can shop the way so many people do today. As you see the insanity that's going on in the world, you see fire bombings in Colorado last week. There's a lot of people in the last few years, especially under the chaos of the Biden administration with illegal rampant crime. There's a lot of people that are buying guns that wouldn't have been the typical guys that were buying guns like I've been doing for decades. There's women coming into the marketplace for self-defense. There's a younger generation that's shifting to the conservative side that understands the need to exercise their Second Amendment and wants to do that. This is giving them an opportunity with Grab-A-Gun to shop the way they shop for virtually everything else.
Handguns?
Again, through an FFL, so you have to send it to...
But handguns or would there be hunting rifles?
Rifles, shotguns, handguns, accessories,
easier to load than that Tim Waltz. Remember that?
Yeah, as a serious gun guy, someone who was very involved in sort of the NRA endorsement of my father back in 2016, I said, I don't know that he's the hunter that everyone says he is when he couldn't load a basic Benelli A400 in about 3 seconds. I think it was a Benelli A400, but this is something I could do blindfolded. If he was struggling, he's probably not the hunter that was intimidating the Republicans that they were saying.
The idea of packages getting stolen. I just think about iPhones that are getting
stolen. No, but again, when you send the actual accessories would go directly to your house. Firearms still have to go to a federal firearms license process, right? So that is sent to your local dealer, wherever that may be. But as you've seen, Walmart used to be the largest retailer of firearms in America. Corporate policies changed. You can no longer have that access. You couldn't go to your local Walmart and buy these things anymore. So this is covering that void. But again, it's not what you're seeing with the misnomers of you're sending guns to people's homes and they can just send it to your apartment. It doesn't work that way.
Here's my question. This is going to democratize it and open up for, and likely because it's online,
correct,
younger people. Now, the question is going to be about training and safety and all those types of things. And so the only question I have, I was actually thinking about this in the context of Hims. You know about Hims? Hims is this online drugstore where people are buying...
he knows nothing about... You mean for ED stuff? No, these guys know nothing.
There's not something I never heard of that.
No, but what's interesting about it is effectively,
appreciate that.
You don't have to go to.
I'm not sure that you would actually know that, just for the record either. But
you don't have to go to a doctor on your own. You just go online, say some stuff to the doctor. They send you the medicine, and that's supposed to democratize and make it better. This is a little bit different because you basically still have the licensed firearm dealer on the other side. But as a result, you there's going to be a lot more guns in the country, and maybe that's okay as a Second Amendment supporter. My question to you though is, are you concerned at all though just about the safety issue and what that means?
I'm not. I think the reality is, most of the people that are buying guns are doing so to protect themselves. Part of what we do is try to encourage that kind of training. I say that all the time, right? People have to get out there. I saw that as a guy that lived in New York City, the People's Republic, for years. I used to take my friends that were ardent anti-gun people. And I'd say, listen, you've known me for a long time. Give me a couple hours. What do you mean? No, I don't want to go guns. You take them upstate. We go shooting. Within 5 minutes, that was the greatest thing ever. When are we doing it again? When people experience it, when they get out there, when they do that proper training, which we encourage, it's amazing what you can create. You can take an anti-gun person and turn them into pro-gun, or at least make them not anti in about a couple
hours. Are there
hours.
questions or things that you will do before you'll send them the gun?
There's no difference than if you went into, you can go with no training and go into a regular gun shop and do this. This simplifies that process. But again, through that, you're actually going to that shop. You can learn about the training that they offer, and which we encourage. So I definitely encourage everyone to get those kinds of trainings. I think it should be a passion. I think the more that happens, the more the industry will grow, and I think that's really important.
Do you have any questions about fees on the SPAC? Or
well, no, that's one thing we talked about for years, which is just, at least historically, a lot of SPACs have not worked. It's worked for the promoter. It hasn't worked for the shareholder. That has actually not been the case in a lot of the SPACs that you guys have been engaged in, but maybe you can explain why you think that's been the case thus far.
Yeah, for sure. So when we first started working together 4 years ago, it was during the Biden administration. We were really concerned about what we felt was happening, where elements of the federal government were working with very big companies, in our mind, to suppress certain rights, namely, in our case, the First Amendment. So that's when you had the backlash against being deplatformed, and we wanted to do something about it. So as capitalists, we said, what's the way that we could bring that to the people? We started observing what happened with Truth Social, with the SPAC, and we saw this as an opportunity to democratize capital markets. People went and bought the stock, even though it was a nascent business. So I know you guys were covering, like, this has a $5 billion market cap, even though it's a new company. That showed that people wanted to support it. And SPACs ended up becoming a very elegant mechanism to do that for what we were branding parallel or patriotic economy that we wanted to build together.
Why do you think that it failed in so many cases for others? Meaning, you can go, the SPAC sort of laundry list is littered with effectively failure, and so I'm trying to understand why you think yours are working and the others weren't.
Well, they're working because it allows regular people to buy it and support it. So if you look at what happened with Truth Social, how far the stock price went up, or Rumble, which is another one he was an investor in, or the one we did, Public Square, and now Grab-A-Gun. I mean, I'll give you a statistic. We're trading at like $17 or $18. These things are supposed to be at 10. This shows that people support what we're doing. And look, we're not new to this. We think that capital markets and finance has been politicized for a long time, but it's all been on the ESG side. We're the first people to institutionalize a response to that. And we're not the people out of government.
Really, there was a demand that half the country was being put on the sidelines.
Yeah.
They wanted free speech. So when I got involved with Chris Pavlovsky and Rumble in 2020, I saw what was happening to me. We were getting deplatformed off what was Twitter 1.0. You couldn't say anything on Facebook. YouTube, I mean, if I put up a video on YouTube, I'd be off in 2 seconds. So we saw that demand. Other people felt it, right? Whether you see it in banking, half the country was getting debanked or worried about it. These things were actually happening in America, and so we filled a void that no one else would even touch. It was a landmine.
I get that. I'm just trying to understand the economics in terms of like what your promote is, how long you're in for, when you can sell. Given the projections that you'll make for several years out, are you in for as long as the projection is out there?
And so in the case of Public Square, I joined the board of the company, so you're not selling anything in that case. And he's on the board now of Public Square. So these are ideological investments for us.
We believe in these
We actually believe in these things. But if you look, just the last thing.
The criticism of ESG is that ideology shouldn't be what is the core mission of a company. It should be shareholder returns, and it should be satisfying customers.
Right.
So this, in some ways, 1789, I think ESG needed an answer, but with ESG on the way out, why do we need sort of the same thing on the other side?
The idea is to bring this back to neutral, where there are no politics in corporate America. When I see ESG, does having a trans board member really translate to shareholder value? The answer is no.
Although is the goal really to get to neutral? Because I mean, right now it seems like you guys are banking on tribalism continuing.
But again, what's the philosophy? When I came on here right after the election, I coined my own acronym: entrepreneurship, innovation, and growth. To me, that's not tribalism. That's what America always stood for. Our fund only invests in private American companies. We don't invest abroad at all. If we think we're strengthening the prosperity or security of the United States, we're going to do it. That's our paradigm. We think that's pro-America and ultimately pro-shareholder value. People will make their own decision, but fundamentally what we're doing is capitalist. We are providing options against something that we think went way too far.
To get into, I don't know, everything you read, Don Jr., on conflict of interest for the Trump family with your father in the White House. I mean, here's today's headline: Bitcoin goes all in on MAGA. It's no longer libertarian. It's no longer decentralized. It's no longer cool. Suddenly, it's almost got the rubber stamp of the administration. And lead into some of the other things. The meme coin. Is that okay for your dad to have a meme coin?
I think, listen, of course, when he did that before he was in office, he did these things. The reason we got into crypto, and we're all in on crypto, and we're doing American Bitcoin, and we have World Liberty Finance and USD1, was because there was a time, and probably I'd been on this show, where I could call any single banker in New York City. They'd pick up the phone. I'd be able to get a loan for whatever real estate project I was doing across the street. Then we got into politics, and all of a sudden, they wouldn't take your call. You couldn't get financing. We were debanked. And what I realized, and my brother realized, because we were the recipients of every subpoena imaginable, was that, you know what, we were actually just the top of this sort of pyramid scheme that we didn't realize we were a part of, that the financial system was totally undemocratized. Because we had a certain balance sheet and whatever, we could kind of do whatever we wanted. The regular guy was messed up. Now we were all of a sudden in the shoes of the regular guy that wouldn't be able to take advantage of the markets. And we said, what's the solution for that? The answer is crypto. These decentralized platforms where you're not beholden to this, where you create efficiencies. As a guy that did real estate, why am I paying points in and out for title insurance that could be done on the blockchain? So we got into crypto not because it was like, hey, this is the next cool thing. We got into it out of necessity. We got into it because we understood just how quickly we could be turned off, even as an incredible developer from New York City. I mean, I don't think anyone would argue that we didn't change the skyline of New York City, but that disappeared in an instant. I mean, we're getting sued by New York State AG, $500 million fees for paying back loans on time with interest. These aren't fair markets. There's nothing egalitarian about any of that. So we actually, as innovators, as people who understand these things, we went all in on a concept that makes total sense because we'd actually been the recipient of how quickly that can be shut off. And so it actually makes total sense. The Trump organization isn't doing anything with foreign countries. The first time around in the administration, we actually stopped doing all foreign deals. And unlike the Bidens, we were actually doing international business before we got into politics. But let me finish. We stopped doing those things, and the market still said, oh, they're profiteering off of this, they're doing that. We got zero credit. We shut down hundreds of millions of dollars of business to voluntarily just say, just in case. So now what we're going to do, we're going to play by all of the rules. We're going to do what we're allowed to do, but we got zero credit for going so far above and beyond because, that's the nature of this beast, right? It's a market cycle. I get it. It's click-worthy. It's nonsense.
So let me ask you a question about the meme coin, okay? You may not believe this. I want your father and this White House to have all the credibility in the world. And invariably, people are always going to question whatever any president does. But one of the things that people do demonstrably question is they say this meme coin that your father has creates the opportunity for foreign adversaries, people in the U.S., anybody that they want to effectively funnel money.
It's as bad as Hunter's art or the Clinton Foundation with her getting back into the White House. It just seems like a way that greases the skids for influence.
I think the meme coin, you don't know who's actually doing any of these things, right? So, it's different because it's hard to influence if you don't actually know where the stuff's coming from, right? So I wasn't involved in the meme coin. I'm more focused on, obviously, the stable coin, the Bitcoin mining, some of those things. But the reality is, I think a lot of these things in the meme coin.
You're not taking responsibility for the meme.
I'm just saying, the reality of the meme coin is it's sort of a proof of concept that the crypto world understands exactly what I was talking about earlier. That the markets may not necessarily be fair. The traditional banking system may not be fair to them. So it's a proof of concept of what I think we can move the needle in crypto. And I think that's going to be the future of finance. It's going to be the future of banking. Almost without question, if we can accelerate that process by going all in on it.
But you've heard from people in the crypto industry, I imagine some of your friends who have said that some of these coins and what's happening may undermine a little bit of what's happening because people are questioning, right?
I have not heard that from anyone, actually. What I hear from those people is like, thank you for doing this. You're giving us the legitimacy that we fought for so long. And this isn't just a conservative issue, Jim. I mean, these are highly libertarian people. This is actually one of those, there's 50 million holders of, some sort of crypto, whether it's Bitcoin, stables, ETH, Sol, whatever it may be. There's 50 million in America, and they're not all right-wing. These are people who just believe in freedom. They've seen what's happening, and they're looking for a corollary and a response.
I got one more for you, which goes to, do you believe, if you believe in the U.S. dollar, which I think we all want to believe in, do we think that crypto, Bitcoin in particular, but crypto writ large, can ultimately undermine it?
Actually, I think the opposite. When you look at what's going on with so many of the stable coins, and as you create utility and those things happen, what we're doing with USD1, it's literally one-to-one backed with the U.S. Treasuries. If you look at some of these big, stable coins, they're literally some of the biggest buyers of U.S. treasuries in the world, replacing a lot of the countries that would have been traditionally doing that. So if we want to keep borrowing and spending the way we do for some of these programs, I don't necessarily agree with all of that either. I think these stable coins are actually going to be the savior of dollar hegemony in the world, not a detractor from it. I think that goes without question. If you look at even companies like Tether, I think they're the 4th largest holder of U.S. treasuries in the world. What we're going to do with USD1, I mean, this is billions and billions of dollars of treasuries that other countries who have not necessarily been good actors or who have taken advantage of those things over the years have said they're going to back away from to try to create their own kind of currency to eliminate sort of, the petrodollar, whatever it may be. I think stablecoins could be the savior of U.S. currency.
I'm going to shift gears a little bit to your relationship with VP Vance and some of the stuff we've read lately. I don't know if you've seen the journal pieces about, I guess, the oil and gas influence, and you know who I'm talking about, on the vice president, where market forces are no longer as important. There's a populist tinge to everything. I even think some of J.D. Vance's acolytes wanted to raise corporate taxes, raise taxes on the rich. Your dad is some kind of hybrid now between a Republican and a Democratic populist.
So I actually subscribe to what you're kind of describing, which is...
You do?
Yeah, I do, because I think it's how you got former Democrats into the party.
You're a former Democrat. I'm not going to tell anyone who you voted for. I don't think you want that.
Appreciate that. You're a good friend.
I know, but she was married to a president. So,
again, you're not a good friend. In any event, I think what Donald Trump has done, and what we were actually central in doing during the campaign, which was getting people like Bobby Kennedy and Tulsi Gabbard to endorse President Trump, is an important aspect of what you're picking up on, which is that the tent now incorporates elements that we think are the best of both parties. So MAGA is actually, I think, taking a lot of strong things that the Democrats used to before, which is caring about the middle class and the workers of this country. Being an unadulterated globalist and capitalist, I think, has failed a large swath of our population, and that's what I think Vice President Vance really picked on earlier than others, and has not lost the sense that we can still be capitalists, but if it affects our national security and our middle class, we have to reevaluate some of the assumptions we've made. I came into this, like we've talked about before, in the late 90s, thinking that we could democratize countries around the world if we just simply opened their markets. And I was in favor of a lot of those policies when I was a Democrat. But they have not worked. China has gotten more authoritarian. And it's not smart for us to have everything made with a country that's 4 times our size, has slave labor, and can put people out of work.
But we don't want T-shirts being made in the United States.
I didn't say that, though. There are other things. What are we investing in? We're investing in semiconductors. We're investing in technology to mine rare earth minerals here. And those are jobs. Those are great jobs. We shouldn't make our pharmaceuticals in another country. If there are products that threaten our national security like we saw in COVID, they should be made at home. That's obvious, I think, and that's self-evident. That's one of the things that this administration, I think, is doing a good job. So it's not about being communist or just socialist for the sake of it. It's we look at the international system that has changed dramatically over the last 25 years. Let's find out what the failures were. By the way, George W. Bush made a lot of failures. Obama. President Trump could not have been elected in 2016 if you didn't have the people feel that backlash, and he certainly couldn't have made a comeback if President Biden had addressed those issues.
Well, and re-elected in 2020.
Yeah, well, I always say sometimes you have to hit rock bottom, and I think he took...
That was for him.
That was for him.
He's talking about...
I'm sorry. I'll take that back.
It took the 4 years of Biden.
I take that was totally for you. I'll take it back.
But I think it did take the 4 years of Biden for America to realize how fragile some of these things are. You went from a time of prosperity to a time of poverty. You went from a time of peace to a time of war. These things happened when America wasn't leading with strength. Right. It takes a little bit of that for us to understand just how fragile we were. I think that brought back Trump. And you see, again, the same old news cycle starting, when the S&P dipped a little bit. Oh my God, it's the Trump recession.
Oh God, you said and then your dad.
Well, related. Joe, relax, Joe. You see that, and it's all Trump's fault. When it bounces back to new all-time highs 10 days later, well, it's other market factors. But you saw, yesterday, some of the betting markets, I think it was on Kalshi, said, the sentiment for a recession was we were going to hit a recession by 70% of the market thought we were going to do that. Yesterday, within a few weeks, it was 30, right? these things take time. We've gotten spoiled. We've gotten used to, well, someone's in now, so we expect instant gratification, and within 3 minutes, if the world isn't perfect, nothing happens that way. The process has to happen. You have to take time to go through that. You see what's going on in the negotiations with the other countries around the world. We're going to end up putting America in a better spot. That doesn't mean that everyone else has to lose. You can have a symbiotic relationship with our allies around the world, and if we do that while simultaneously pulling some of those things away from China so we're not dependent on someone who has proven around the world to not be a great actor, that's a huge win for America in the long term.
Yeah. I think even the presidents, a lot of Democrats sort of wish they'd gotten it out of the way already in 2020.
All the Democrats had to do was shut up in 2020. Because
He'd be gone already, and
he 100% won anyway. It doesn't matter. You'd have a Democrat president right now. You wouldn't have a strong Republican bench, which we have now of people who are proven fighters who've been in the trenches. It's such a role reversal from what we've always seen, where the Democrats always had a bench.
2028 kick look like?
Listen, we'll see, but the reality is, no, I am not. Thank you for even the consideration of the mention, but no, I'm not interested in that right now. I'll always keep fighting for it.
Vance Rubio or Rubio Vance?
Listen, I think honestly, both of them have proven to be incredible.
Can I just say one thing also? Just one other thing. Yeah, just to end it with how we started. The show's great. I really enjoyed it, by the way. But also, 1 out of every 2 homes in America has a gun. Okay?
Bring it back.
I want to close on this transaction. I just wanted to make that point that we're trying to make e-commerce available to an antiquated sector, which is brick and mortar. It's happened in other industries, Chewy, Wayfair. This is all the same. Now we're doing it for ammunition and guns. And that's what Grab a Gun is, and that's what this transaction is. So.
And I didn't understand that, like, Pew, I thought was Pew.
No, it's that. I just want it to be done safely. That's all. Look,
and it will. And we're complying with all
that's all I care.
As someone who believes in stuff, there's still a component where pop culture, that decides elections and Supreme Court. Like, you don't want haphazard nonsense out there. I believe in that. So I'm all for the safety and the training. I advocate for that. I came from a competitive shooting background.
Who says to himself, either I'm going to commit suicide and I'm going to order the gun online, that's how I'm going to get it, or that I'm going to plan some kind of mass shoot. That's all. That's what I worry about.
Just so we're clear, the gun is not going to their house. You know that, right? Can we just make that totally clear?
We're making that clear.
Going to a place where the background check is conducted, and the same as it would if you went to a brick and mortar place.
Okay.
Most important thing you take away from this conversation: we are not circumventing.
Correct. And the reality, any of that gun crime, the vast majority is done with illegal guns, not purchased this way. No one ever acknowledges that, right? These things happen in places that gun culture isn't really a thing.
We're totally aligned on that point.
Yeah.
Thank you, Omid Malik. Thank you.
Thank you.
Don Trump Jr.
Really appreciate the time. Thank you. Good to see you.
Thanks.
Coming up, another I don't know, we have so many can't miss interviews, you don't know what to do. Kentucky Senator Rand Paul is going to join us on President Trump's tax and spending bill. Never want to hold back. We'll talk to him about what it's going to take for him to support it. Don't go anywhere. Squawk Box, come back after this.
cancer innovation.
Welcome back to Squawk. The Senate getting ready to start debating the House-passed reconciliation bill. Our next guest says the math doesn't add up, and he's calling for changes. Joining us right now is Republican Senator Rand Paul of Kentucky. Good morning to you, Senator. We were just talking to the president's son, in fact. What would it take for you to support this bill?
Well, the main thing that I object to is raising the debt ceiling $4 or $5 trillion. That's an indication that we'll borrow that much. It's an indication that we'll put the debt on the back burner. We'll have no more discussion of it for a year or two. And really, we're locked in a year right now where in March of this year, most of the Republicans, not me, voted to continue the Biden spending levels in March. So we're operating under a continuing resolution which originated as Biden spending levels. You remember Republicans saying, Bidenomics, Biden inflation, Biden this, Biden that. Well, they voted for that in March. So the deficit here at the end of the fiscal year, at the end of September, will be about $2.2 trillion. I'm not for that, so I voted against the spending levels. But now they want me to vote for $5 trillion worth of increase in a debt ceiling, and I'm just not for that. That's not conservative.
So the question is, you know, when you look around the room and you look at your peers and colleagues, how many people do you think you have with you? What does this bill ultimately look like in the end?
You know, I think there are 3 or 4 of us. If there are 4 of us who want it to be more fiscally conservative, I think we can reduce the spending levels and perhaps separate out the debt ceiling as well. But it takes 4 people with courage, and 4 people with courage can make the bill into anything we want it to. Right now, there are competing factions, though. There are 4 or 5 who don't want any spending cuts, and there are 4 or 5 who want more spending cuts. So it's who sticks together better and who has more courage to stand up and say no. I've said no for 6 months now. I said I will not vote to raise the debt ceiling $5 trillion, but I'm pretty much open to compromise on everything else in the bill. I want to make the tax cuts permanent. I supported them in 2017. I think it's the best thing we did for the economy. It's why the economy thrived in the first Trump term until it was shut down by the pandemic. So I do want the tax cuts. I want them to be permanent. I'm for a lot of spending cuts, but I'll compromise and get as much as I can. I'm just not going to take responsibility for the debt. The debt has always been a Democrat problem and a big government problem. Once this bill votes and this debt ceiling goes through, the debt is owned by the GOP, and there is no more campaigning and saying this is the Democrats. It will be owned by the Republicans, and I think that's a huge mistake.
Different question. If you had to cut this budget to effectively make it balance, or at least make yourself feel like it is a fiscally responsible bill, what would you actually cut?
Everywhere. What I've proposed in the past is something called the penny plan, which is a percentage of everything, but it includes all the mandatory spending, all the discretionary spending, and for a long time, 1% cut everywhere would balance. Now it's up to about a 6% cut. So I've offered a budget last year, and I'll offer one again this year that is about 6% of everything. Now, could you do that without cutting people off of Medicare and Social Security? Absolutely. I think there's 6% of inefficiency in both programs, but we did the opposite. In December of last year, Vice President Vance came over and they campaigned and they lobbied to expand Social Security by $100 billion. At that time, I put forward an amendment to gradually raise the age of Social Security. People say, oh my goodness, it's the third rail. Do you hate old people? And I say, no, I aspire to be an old person. But the thing is, we have to fix these programs. You will have to gradually raise the age, but I got 3 votes. So people in Congress aren't ready for this, but I've been talking about this publicly across the country and in my state. And people come up and say, well, you're right. It isn't easy, but we will have to raise the age of Medicare and of Social Security. But right now, there is not enough courage in Congress to do that, other than myself and a handful of others.
Senator, when you talk about these competing factions, the 4 or 5 of you who want to cut spending versus the 4 or 5 of you who don't want cuts, what determines who wins out on that front? Because that's kind of where all the handicapping is taking place right now.
Intestinal fortitude, who has the strength of character to say no, and you have to say no in the end. You have to say no unless they will change the bill. And that's what I've said from the beginning. I'm open to voting for the bill. I'm open to compromise on the bill. I'm just not open to supporting $5 trillion. This will, in debt ceiling increase, this will be the first time the debt ceiling's ever been increased by all Republicans. It'll be the first time that conservatives lose their moral high ground by voting for a debt ceiling increase, and not a small debt ceiling increase. This will be historically the greatest increase in the debt ceiling ever in our history, at a time when we're having trouble selling the 10-year bond, we're having interest rates at 5%. We also are having the interest payment over $1 trillion. Imagine what happens if the interest payment doubled. We're paying on average about 3.5% now. We were paying 1.7% on the debt. What if it doubles again? I think it'll be unmanageable. It'll crowd out all other spending. So I think we have to draw a line in the sand and take a stand here.
I bring this up because we had Senator Mark Wayne Mullen on yesterday, who's negotiating between the White House, the House, and the Senate on this, and trying to keep everybody on the same page. Joe pointed out earlier, he brought up Susan Collins earlier, while he was talking to us about that. If they're giving kind of praise to her at this point, does that mean they've given up on you, thinking they're not going to win you, so they're going to work on that other side?
Maybe, but we're also going to have another inflection point right now. We're going to vote on a rescission package. I've been bugging the administration for months. They're going to send us one, a very paltry $9 billion. But this is the country's going to be able to view this. If those Republicans who cannot cut $9 billion, the whole country needs to know who they are and why they can't cut $9 billion. Because if we can't cut $9 billion in foreign aid welfare, the country's doomed. This is $9 billion. This is a rounding error. This should be something we should do every day. But that's coming up also. It's the same people who don't want to touch Medicaid, who don't want to look at Medicare, who don't want to look at Social Security, who don't want to touch any of the entitlements. They're the same people saying they won't cut $9 billion in foreign aid welfare. So push is going to come to shove on this, and I've been pushing hard on the administration. We need to have this vote, and we need to see where the chips lie. And if people can't support any cuts, the whole American public needs to know who they are.
Senator, I have a political question for you. It comes to the midterms. And actually, maybe it's the bond market. Maybe they're combined. Do you think if this bill goes through or some version of it and you don't get what you want, that your colleagues are going to pay for that? Or do you think that the public is accepting of this, wants this?
I think the most important thing coming up in the near future is the second quarter growth. We had negative growth in the first quarter, and that was somewhat offset by huge amounts of imports pouring in at the last point to try to avoid the tariffs. If we have negative growth in the second quarter, I think you're going to see a generalized freak out by all the protectionists and all those wanting to, throw this tariff, that tariff, and in a really reckless way around. You're going to see a reassessment if we have negative growth in the second quarter. I can't predict the future, but if we do, I think Katie bar the door. There's really going to be an upset around here.
You wish that we didn't have some of the populist tax cuts in this bill? Would you take all of those out, Senator?
No, I'm a big believer in the Laffer curve. I think the tax cuts actually do pay for themselves. So I have not been a stickler and really don't accept the CBO argument that the tax cuts are leading to a drain on the Treasury.
I wasn't talking about the 2017. I don't even know if I'd call that populist, but tax on tips, some of the other things that overtime, things like that. That made it even more difficult to get it paid for.
If you were designing a tax code, you'd do lower rates for everybody versus singling out special groups to have no tax. But I wouldn't oppose the no tax on tips simply because I think it does have some popularity. It's not the ideal way to do a tax code, but I would support it. But really, in the end, the problem is the mandatory spending and having it be off limits, and the fact that we know the appropriation process that's coming forward again isn't any better than last year. There's been no change in sentiment by Republicans or Democrats around here, and the fact that they're going to borrow $5 trillion is what alarms me. If you borrow $5 trillion, they will spend $5 trillion, and that is $5 trillion they don't have. They will borrow that to make up for spending more than comes in. So I really think that there needs to be a wake-up call. The bond market is already showing this, but I think if growth numbers come in either poor or weak in the second quarter, there's going to be a lot, I think, more vocal opposition to these tariffs than just me.
Senator, I want to thank you for joining us this morning. Always appreciate your perspective on all this, and please come on back as we follow the progress of this bill.
Thank you.
Still to come this morning, the Fed in focus, especially with jobs numbers on the way later this week. After a break, we will speak with former Cleveland Fed President Loretta Mester. Squawk Box will be right back.
And make it count.
When we come back, we've got some Fed speak. Former Cleveland Fed President Loretta Mester is going to react to the latest on everything, on market, interest rates, inflation. And it all comes ahead of two key job reports coming tomorrow and Friday. Stay tuned to watch the Squawk Box on CNBC.
DC.
Welcome back to Squawk Box. Some updated language on the economy from two prominent Fed members. Chicago Fed President Austin Goolsbee saying he thinks the U.S. Central Bank will be able to lower rates once the current tariff uncertainty clears up. He made those comments in a webcast interview with Midwestern Business Journal. Meanwhile, speaking at a banking conference, Dallas Fed President Lori Logan saying that monetary policy currently well positioned for Fed members to wait and watch some of the incoming data that's still coming in. She said the challenge is to make sure the one-time increase in the price doesn't become an ongoing inflation problem. So we're going to keep our eyes on that.
Joining us right now with her take on the latest challenges for the Fed is Loretta Mester, former Cleveland Fed president who's now a professor at the Wharton School and a CNBC contributor. And Loretta, thank you. Look, it's a complicated time for the Fed trying to figure out what's happening in the economy, what's at play. If you were still on the Fed, what would you be arguing to do right now? Lower rates or stand pat?
Yeah, I'm in a stand pat camp. I think that there isn't much cost to waiting at this point. The economy is actually doing pretty well. It's been pretty resilient. We haven't really seen in the hard data much of the effect of the tariffs, but we have to be cognizant of the fact that that may still come. And depending on where the tariffs land and when we know more about where they're going to land, that affects the economy in both parts of the Fed's mandate, full employment and price stability. So I think we should be waiting, or the Fed should be waiting in terms of where they are now. Policy's in a pretty good place so that if things work out well, and they very well could be, if some of the uncertainty abates, if the level effective tariff rate is around 10%, you know, that baseline tariff rate, and we negotiate away some of the high tariffs, and we get some resolution on that, then it could very well be that the Feds will be in a position to go back to the normalization path they had on interest rates that they started last year. You know, those price increases could just be one-ofs, and that is what the Fed would like to have happen, and then they can go back. But we don't know that yet, and there's a possibility that we continue to have tit-for-tat tariff increases, prices continue to rise, inflation expectations destabilize and continue to rise, and then we have a real inflation problem. So we don't know which of those two will play out, and that's the conundrum for the Fed right now, which is why holding seems to make a lot of sense to me. And then if it turns out later on we have the good scenario, the benign scenario, then they can resume cuts. If we turn out to have the bad scenario, then they're going to have a tough choice between looking at the inflation part of their mandate and balancing that against perhaps much weaker growth and employment. And so that's the problem that they face, but not till later in the year, I think.
Yeah, I mean, it sounds like Goolsbee and Logan are maybe not that far off in their assessments, because you kind of said what both of them said in that commentary. Yeah, it would be nice to be able to cut rates, and if we have clarity on tariffs, then we will do just that. But in the meantime, we're going to wait and see how it shakes out.
Yeah, exactly. And it's sort of like if someone asked me, are rates going to be lower on the short end next year, I would say yes, but I'd love it to be, because we've gotten beyond the uncertainty. The price increases were one-ofs. Inflation moved up temporarily, then starts moving back down again. And the employment effects from the tariffs have not been significant or material. But the other case would be we're going into a recession. So we don't know at this point which of those. I think the weight on a good outcome went up when we got some abatement of the tariffs, or at least stay of the tariffs, and we'll see where those end up. So again, it's balancing those risks as we go forward, and as we get a little more information about how that'll play out. And at the same time, as Senator Rand Paul, your last guest, said, Congress is negotiating on the budget bill, the tax bill, and so that also figures into the outlook over the end of the year and into next year that the Fed will have to take into consideration as well.
Loretta, thank you.
Thanks, Becky.
Squawk Box will be right back.
Pumpkin.care.
Final check on the markets this morning. It paired some of the losses. The Nasdaq's actually up. The Dow had been down triple digits. I don't know if we'll have a repeat of yesterday when everything turned around and closed higher. Here are treasuries after some Fed speak, and we had Retta Mester just on, who also seems like when she said it would allow the Fed to start normalizing rates again.
But I don't think that the
Normalizing
answer are all
could-
that different.
could mean
Austin
up.
Goolsby says, yeah, we'd like to cut if we
Once things are
get
done.
the tariffs
Right.
settled. So I don't think they're that far off.
But when she said normalizing, for me, I don't assume that that's low.
Yeah.
Because they seem low anyway. We will be, what's today, Tuesday?
Tuesday.
Hump Day tomorrow. Make sure you join us. Walk on the Street is coming up right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. Futures are off the morning lows, but still red, not getting a lot of help from lower yields as the OECD again slashes its forecast for U.S. economic growth. We'll get jolts at 10 a.m. Eastern time. Our roadmap begins with trade tensions. The White House reportedly pushing countries to provide their best offers by tomorrow. A lot of news on AI today. A new note from Morgan Stanley's Adam Jonas. This Meta power deal with Constellation Energy. Plus why OpenAI's Sam Altman predicts that AI agents will help discover new knowledge as early as 2026. Meantime, stocks are headed for a lower open on continued global trade tensions, Jim. We are waiting for some possible meetings in Paris tomorrow, waiting for clarity on a potential call between the president and Xi.
The president needs a deal. I know that Secretary of Commerce Lutnick talked about any deal. Any deal at this point would be regarded as being incredibly positive and get some momentum going. I think that Europe, which is really familiar with the U.S. judicial system, might just be saying, let's wait it out. This China negotiator ready to play hardball.
Yes, the new one.
I mean, he's deal, no deal. I don't think he feels that they need a deal. Now, I think that they're playing with fire. I think there's a piece today by Rusty Brazil, who is my RBN, which is just the best when it comes to energy. Butane, ethane. We're going to embargo. It's pretty close to doing that right now. Now, what people don't realize is that the Chinese do not have butane and ethane. That comes from us. Yesterday, on May 29, the U.S. Bureau of Industry and Security said to Enterprise Partners, which is a fantastic company, hey, look, slow walk it. We're sole supplier, and they're saying, you know what? Maybe we don't give it to the Chinese as fast.
So we withhold some energy to them. They withhold some magnets to us. That doesn't sound market friendly.
Well, I mean, I've got to tell you that people have been saying over and over again, we're the biggest natural gas liquids. We're just number one. What do you do if you don't have any butane and ethane? What if you have no ethane and you need that to make plastic? What is China? What are some of the junk that they make? It's heavy plastic. We still Dollar General have good quarter.
Yes.
But I think people are missing the point. They don't realize that we are not helpless. And I think if we're slow walking these licenses, it is to this gentleman in China.
Yes.
We have some cards. I mean, right now people think we don't have any cards. We have cards. And the cards we have natural gas liquids in NATO.
Right.
We're sole supplier.
Jim's referring to this piece in the Journal. It's a profile of the Chinese trade negotiator. It's a new one. Some comments from Chinese sources arguing that the old one was too nice.
Yeah.
And this one's more willing to play hardball.
Well, look, I'm waiting. If they tweeted, if they had so, I think what they would say is no more Mr. Nice Guy.
Why would they want to accelerate talks given the uncertainty with our own courts?
I don't understand. I mean, why not play for time? Unless they're looking at a majority. They think that the Supremes could be so far a majority. Right now, that's not the case, particularly when it comes to immigration. The court's not owned. They're just not owned. You can't buy them. If you're in politics, you got to recognize that Chief Justice John Roberts, the guy is part of the branch that is checks and balances. He's not a shoo-in. Right. Not at all. He actually strict instructions.
Meantime, Jim, the clock is ticking on the macro. JP Morgan this morning suggests that we're starting to see maybe some hard data. Construction spending yesterday wasn't that hot. They think maybe by July, August, this really does seep into hard data. And by the way, Apollo today, looking at consensus for jobs, it's 120 for Friday, but by September, it's 64K.
Geez, I don't know, because Katie Huberty puts out this piece in Morgan Stanley, what charts that catch my eye, and I thought it was very interesting that they're starting to see actual reshoring, actual building of new manufacturing. It took me by surprise. I didn't think it was possible. I felt it was far out, but she says, no, we're right here, and that will matter too. This is the reshoring that the president has accomplished. Now, I think the president, this is like Taiwan Semi. Taiwan Semi is a gigantic project.
I was just going to mention Taiwan Semi.
Gigantic project. And so you get a situation where we're starting to see the big projects come here because they want to impress the president. Holy cow, that could be really fabulous.
Taiwan Semi adding another $100 million to their Arizona investment, Jim. Although I did build a couple charts this morning looking at data center construction, part of sort of private manufacturing construction in data center. It's slowing down. And on a 3-month annualized, it's really slowing down. We got a couple of them stuck.
Well, I think that maybe they don't have enough power, hence the Constellation deal, which just shows you right now, when I was out at a switch facility that was built by inside by CoreWeave with NVIDIA, they just said, look, we're just trying to cite them. In the meantime, I think that the that country list, that the diffusion index, that's gone. Everybody wants a data center, so you may have to go overseas. The reason why I'm suspicious of that is Larry Ellison from Oracle said, listen, we're going to build all we can. I do think that you have to build them somewhere that's dry, somewhere where there's no earthquake, somewhere where you are close to some facilities. That's why this Pittsburgh belt is so important. Why the area around Vegas is so important. Not every place is stable enough to put these.
The Constellation thing, by the way, that's 20 years, and this plant probably would have closed.
It would have in 3 years, and I think it's an incredible statement about the need for power. By the way, they're doing it through the grid. It's not around the grid, so there'll be no problem. I understand Constellation at one point is up 14%. Every uranium stock is flying. This is the meme stock gift. These meme stock, they keep getting the gift. And they immediately, you see them, they take the money and they say, you know what, I'm rich today, Joby. I'm rich today, Palantir. And they play that game, and it's a remarkable game. I mean, they have basically, they're doing a parlay. Right, it's a parlay on Nuke, Palantir, and then flying cars. Do you know that Boeing has a flying car? Can you imagine they should just go by Boeing? We saw today a very
Bernstein, yes.
Wow, I mean, look, Boeing is doing incredibly well. They're finally able to start boosting the number of 737s.
Yes.
But the 787 is a star, and they make a ton on that.
B of A, top pick, 249. Jim, you mentioned production. They say valuation works. Liquidity, not a problem,
Right.
as we know.
There's a line in that report which just says once this thing gets going, it's basically not stopping.
They basically call Boeing a momentum name.
It is.
Yeah.
It is. That's what I say. I don't know. Ortberg is a reserved fellow. He's not, I'll tell you, a hail fellow well met. He's hard to be able to get him. You can't get him off the game. It's like, hey, how about the birds? No, that doesn't work. Because it'd be like, yeah, I know, I'm worried about birds and the engines. I mean, no. I mean, I'm talking about the Eagles.
That's actually, I saw a piece yesterday looking at the Tom Cruise stunts with the biplane.
Yes, how about
that? The biggest risk was getting hit by debris. But it wasn't about the actual plane. It was about getting hit by something in the air.
Well, I'll tell you, I think this guy, he'd kill every bird in the universe if he try it. I mean, he probably watches the movie The Birds, which was fantastic.
Yes.
And just wishes that every single bird dies. And certainly was a fan of Suzanne Plachette, who was funny and used to come on Carson.
Bunch of headlines in the world of AI this morning. Morgan Stanley's Adam Jonas has a new note today saying the next 5 or 10 years with AI could bring more innovation than a century pre-AI. Prepare for the tech to develop far faster than the policies can keep up. He also adds, Jim, we want to avoid a situation where the humans get dumber faster than the robots get smarter. His point is you need to continue to retain human talent.
Now, I'm a Jonas follower, and I think Jonas right now regrets that wasn't at the lead. He's passionate about his writing, and he's going to realize, well, everyone keyed on that line. It's a brilliant piece. It's a very quick read. It's a brilliant piece. And it's about reasoning. He didn't use that word, but that's the word that Jensen Huang is using. He's saying the reason why you need to go to Blackwell, the reason why you got to go to Rubin next year, is because you have to be able to, this is what's going to happen, and this is what he's worried about. You're going to have a meeting next year, and it's going to be the lawyers and the bankers. We'll throw a couple of accountants in. And they're going to say, oh, trusted advisor, what price should we pay for Signet Jewelers? And the answer is, well, the machine will reason. And what you do is you fire one fourth of the people who are in the room because you don't need them because the machine is reasoning and knows more than you. And that's the frightening concept that Jonas is talking about.
Mary Meeker's slide deck last week, which we keep referencing, had a piece about what's going to be possible. There will be whole divisions of companies that are run by a machine.
Right, and we keep seeing these people laid off from Microsoft. You think that that's just because they don't have a lot of business? It's because they have so much business they need the machines, which are better. One of the reasons why Salesforce has been a complete disaster ever since that quarter is people felt that there should be a moment where you're seeing that their clients are firing people. I don't think that's going to happen. But you did when they mentioned that they're working with small, medium-sized business, which means to Wall Street, oh, they're out of big clients. But I think that's I'm a believer in Salesforce still because they are going to have reasoning machines. And Jensen Huang I called him Jensen last night at a party I went to, and the person I said says, "Is it really like that?" I said, "Are you kidding me? It's sure. I mean,
Yes.
give me a break."
Yes.
But Jensen is saying, "Why do we need all these expensive people when we have something that is smarter than us?"
So the Microsoft layoffs, you
For
mentioned
something.
another 300. They just laid off 6,000. That was the biggest in years.
Yeah.
You think it's a large part because of this?
Yeah, well, I think that, when you don't say why you're letting people off and you're doing incredibly well, I'm saying that those people are the equivalent, as we said at Goldman Sachs, dead wood. I always thought it was really hard. I said, do I have to tell that guy that he's dead wood? Here's what's up to you.
Right.
I mean, I think that people are becoming dead wood. There's whole burned forests in a lot of places, and they don't know what to do because it's so brutal. But they have to bite the bullet, and now we have to find out whether people are being hired. I mean, if you're coming out of law school, it was like you used to get a job. I don't know. I think you come out of law school now and you think, geez, I don't know. Maybe I go to business school.
Yeah, we'll get jolts in less than an hour. The other line out of Jonas, Jim, and I'll read it. If it's not yet totally clear that China is in the lead on agentic robots, you will not have to wait long.
Yeah, he really depressed us with that. That was the one he should have put last. Jonas watches the show, so I mean, that was just such a downer, and we didn't need that down. We all know that China is beating us on some things, but Jensen Huang is saying, look, we are ahead on reasoning. Well, you know what? They can go be ahead on burgers, and they can go be ahead on robots. We can make robots. It's up to Tesla. It's up to Tesla because everybody else is so far behind. In our world, only Tesla seems to have taken the game.
A lot of what goes into the robot is our Chinese inputs. We know this.
It is.
Right?
But let's see if they can get the ethane. Let's see. If
So
they
this
can
is
get
it. This
the
is like
ethane.
American Graffiti Game of Chicken. Whoever we're driving toward the cliff to see who hit.
Absolutely. It's James Dean one. It's rebel without a cause. Sometimes I feel with our tariff plan, we're rebel without a cause. It's an interesting movie.
Right.
Because it's so right. Not just because Jim Backus is a horrible father in the movie, but it is just like, yeah. I mean, what was the point? What's the point? So if you ask Tim Cook, he would tell you, well, I thought the point was to have less China. Well, it turns out you go to India. And, well, it turns out that it's less India. Where does the president want that particular complex to build the phone?
Right.
Where does he want it? Do we put it next to a nuclear power plant?
It's a reminder, Jim. Next week we're going to get both WWDC for Apple and robo-taxis for Tesla.
I think look, this is the Annus Horribilis for Tim Cook. I mean, if I have to read one more article about how Tim Cook has completely lost it, do you think he's lost it? Do you think he's sitting there and saying, wow, you know what? I went from being really smart to being really dumb. I think there's some things that could come out
But
of
they've
that.
been 30 years establishing a certain kind of supply chain, and now they're being asked to basically, they have been unwinding it.
How can they go to India this quickly? Isn't it incredible? But we can't hand it to them because they were supposed to go to Corning, New York, because in the actual last made Kentucky. They were supposed to go to someplace, and Tim was supposed to have a shovel, and he was supposed to go like this. I mean, NVIDIA did the shovel, and they have the plant, and they're going to put it there, and it's going to be the most recent stuff. And I guess Apple was supposed to just fail. They were supposed to fail. Why not? It would take them until Trump is no longer president, unless he gets that fabled third term, which I'm sure if we had him right here, and I've invited the president multiple times, I think he'd say the third term in the bag, because he's got the cards. In the bag.
You went to law school, so I know you know better than what you just
I
said.
went to law school, and that constitutional law was at 8:30, and do you know it went to 10, and I missed the opening so many times.
You missed that day.
Yeah.
When we come back, we'll hit Netflix this morning, aiming for another all-time high in today's trade, up more than 500% in 3 years. Take a look at the pre-market. We'll get some factory orders today, a little Fed speak. Japan's 10-year demand, pretty good, ahead of their 30-year in a couple of days. Don't go anywhere.
It's a reality.
Getting some auto sales figures for May today. We got Ford just now. Let's get to Phil LeBeau. Hey, Phil.
Hey, Carl, solid numbers for Ford in the month of May, and we're going to see this for a number of automakers. A solid month coming off of April, which was a really good month, as you see promotions like employee pricing continuing to bring people into showrooms. Ford sales for the month up 16.3%. ICE vehicles, internal combustion engine vehicles, powered by the best month of May for pickups since 2001, up 17.2%. Hybrids continue to be red hot, especially when you look at something like the Maverick hybrid pickup truck, up 28.9%. And then you have electric vehicles. No surprise here, guys, down 25%. So there you have Ford, up 16.3% for the month of May. We'll get the other automakers, foreign automakers throughout the morning. Guys, back to you.
Hey, Phil, what did you think about the fact that two of the biggest losers in yesterday's trading were indeed Ford and GM off of the steel trade? Right or wrong?
Right. That is correct. That's they took the hit, and Stellantis as well, Jim, because all of those automakers, because they have so much production here in North America, the concern is that they're going to feel the impact of that a little bit more than those who are importing vehicles. But make no mistake, all of the automakers, it was not a good session yesterday, and they continue to be sort of in this drifting period here. It's not going to stay 25% on imported autos forever, but it's there, and we know that prices are rising. They're trying to eat as much of the cost and not trying to aggravate the president by raising prices, but prices are going up. We did that report from J.D. Power mid-month. We'll get the end-of-the-month numbers. Incentives are coming down. Prices are edging up a little bit. I mean, they can't eat all of it.
So, Phil, you sensing some pull forward still in these May numbers?
A little bit, yeah. It's still there. You still have some pre-tariff inventory that's there in the month of May. Now, it really starts to move away in June, and that's when the automakers likely are going to have to start ratcheting up their prices a little bit more. But programs like employee pricing, you saw some of the other automakers doing similar type programs. That's still resonating with consumers, though the impact when you do those programs, guys, huge right out of the gate. People are like, yeah, I got to get that. You keep doing that over time, it just doesn't attract people as much.
Right. We'll keep an eye for June numbers in a month. Phil, thanks. The other thing, Jim, we got ISM manufacturing yesterday. The price index is up 20 points in 6 months.
Well, I think that the president called out certain companies. You heard what Phil said. They want to try to keep under the radar screen Ford and GM, but look, you got to make money. And you look at a Campbell's soup, okay? Campbell's, I'm sorry. And they try to raise price, but they can only raise price so much. But they have steel cans and they have aluminum tops. What are they supposed to do? Can they just eat that? No, their profit margins are too thin. They're not doing well enough. I think Campbell's is the textbook example of what we're up against because of the president's tariffs.
Right. I mean, overall, margins as a percentage of GDP are pretty fat, historically speaking.
True, but I do think that, look, we're going to be in a situation where normally you might even have to discount anyway. Although, look, it isn't like Dollar General is doing poorly. I mean, that's where you go. I mean, Dollar General is a really interesting store when you go there. It's treasure hunt. People don't realize that. There's some things there that seem almost mispriced, and people are snapping them up.
We are going to get to DG, also Signet this morning. Ollie's got some
CEO, nice price.
Got some insider selling in Target. We'll get Kramer's Mad Dash and the opening bell after a break.
I'm here. I'm here. I'm here.
Jimmy's here.
Oh, mama, I'm excited. I'm almost out of breath.
Okay. Futures mildly weaker. Got some gainers though on the S&P pre-market list. Jim and I talked about Constellation a moment ago.
Good morning. I'm here.
General we'll get to as well. We haven't even gotten to some of the most important earnings of the week. Crowd tonight. Yes. And of course Broadcom.
Woo!
There too. Opening bells coming up in just about 5 minutes.
Opening bells coming up. 5 minutes. Start now. We need to restart your computer. Remind me later. Remind me tomorrow. Okay. How long's that been up here? Hopefully not too long. Oh yeah. We have 2 more minutes to go, and I got to take off my shoes. Make sure my platforms are up. It's very important that they're up.
Time for a mad dash with Jim as we wait for the bell.
You have to sit up and take notice about what J.K. Szymanczyk is doing, CEO at Signet. These were fantastic numbers. SIG, a lot of people shorted. Kay, Zales, and Jared all saw sequential comp sales gains. The growth in every aspect, including service, that had been an issue. I've got to tell you, maybe they put behind them this notion of the lab diamonds that had really dogged them. And I think this man is going to exercise tremendous prudence in what he tries to do.
Prudence.
I say that because there's easy money to be made if you sell these lab diamonds.
Oh.
But then what happens is people say, well, how have they held their value? And lab diamonds don't hold their value. Real diamonds do. And that resonates through all 3 branches. I think it's really exciting.
You think you reclaimed some of the highs from last year?
Yes, I do. I think that this man is... He's not a miracle worker. He's just going back, blocking and tackling, and bringing back the idea that there are...
NATO is pushing for a 5-fold boost on ground-based air defense. 5-fold? God.
I think is prohibitive as they work for value.
Yeah. We're going to get to more retail. There's a big piece in the Times about people using buy now, pay later for food. A quarter of consumers...
Yeah, and there you have a rather...
They got the clap. I never could stand that. I don't want to listen to them applaud. Who in the hell do they think they are? If you're not liberal, you can't work for that place. Roblox. 17 hours ago. I'm going to see what that's doing. I think I mentioned that one yesterday. Oh, it did have a pop today. Okay, we're pulling back. And today is Tuesday. Zim's 1668. Nike's down $1. Google's down 270. Starbucks is up a little bit from when I last looked at it, looks like. Today's winners Baidu, China, Lulu, AVGO again. It seems on a roll here. Nvidia is at 113 up. Netflix up $9. And Boeing again. Boeing CEO Ortberg is winning hearts on Wall Street. And a bunch of lies. Deutsche Bank has price target raised to 235 from 217. Maintains a buy. Take off these shoes. Oh gosh. Today's pretty socks. Okay, we got a descending flag. Well, kind of, there we go. It's 59.60s. Are we going to have another pullback again today? Had another Hawaii yesterday and Meta. Lily trying to break resistance. Meta had a real good run yesterday. Double bottom. There's $4 for SPX. SPY's back to the VWAP. 200. I'll be right back. I should trade this, but I don't. I'm not feeling very good today. We're at a support right now. $370. Bounce, boy. So far, it looks a little bullish. Got a megaphone happening this morning. Good to see a drop. Tempted to take a shower. See if that helps. Got a wide megaphone. Kind of like a dump truck. Yeah, I'm going to take a fast shower and then come back. JP Morgan double bottom. Nvidia up $2. Tesla up $2, $2.60. I'll be right back.
It's numbers, good numbers. The stock's been up about a Sundaram, equity research analyst at CFRA Research, is with us. You took a close look at the Dollar General numbers, the report.
I think we're going to
What
pull
stood
back.
out to you?
Yeah, hey Nicole. Yeah, no. Overall, I thought the quarter was solid, but this has been a company that's been underperforming for the past 3-4 years now. So I wouldn't say this is the beginning of a major turnaround for the company. Like I said, it's just one quarter, and although the company did raise their guidance for the year, that raised guidance is largely due to a strong Q1, not necessarily an improved outlook for the remainder of the year. In fact, we do see some risks for the remainder of the year. Not only tariffs and the weak overall consumer spending environment, but the fact that there's some policy risks as well.
I will say if we pull back here to this support level, it'll be a strong buy.
That could potentially disproportionately impact dollar.
I'm going to put this on here for now.
So overall, like I said, strong Q1, but I think it's still a little too early to say this is part of a major turnaround.
So this feels more like a fake out to you today?
I think they're still early in the early
Dollar
stages
General
of
sucks.
turning around the company. Like right now, for example, Dollar General. This is actually the first quarter in many years where they actually closed more stores than opened new stores. So instead of new store openings, they're closing underperforming stores. They're also focusing more on store remodels. There's over 20,000 Dollar General stores around the country. Just for context, there's a little over 4,000 Walmart stores in the country. So there's a lot of Dollar General stores out there, and a lot of them need that store upkeep, need those remodels. So right now they're focusing more on those store remodels, and I think that's translating into better sales growth this quarter. We'll see how sustainable this is. Like I said, I think they're also benefiting from the fact that drug retailers like Walgreens, for example, Rite Aid, they're closing stores as well. Family Dollar is actually their biggest competitor, owned by Dollar Tree, which Dollar Tree is actually just
got low volume.
Family Dollar, but Family Dollar has been also closing stores as well. So I think the combination of that has helped their same store sales growth. But again, this quarter they saw same store sales growth of 2.4%.
Why are they pumping these 5 and dime stores?
It's still lagging their larger peers.
Dollar General just
Walmart.
literally
And even,
sucks.
Quickly, if I can dig into that 2.4% same store sales number, traffic was actually down at Dollar General this quarter. It was down about 0.3%. The reason
I hate shopping there. It's filthy.
by 2.4% was because their average transaction amount was up by 2.7%, and part of that was due to higher prices. Part of that's due to higher prices, and part of that's due to the fact that those customers are putting more items into their basket. But going forward, we would like to see traffic growth, because traffic growth is more sustainable than higher prices, for example.
Problematic.
Well, we
with
bounced
the
off the 370 to 5.
Right, and
Now
we
we're
do
at
have people
460.
spending more on each ticket.
And this is
because of higher
this looks
prices,
bullish. We have 3
also
white
we have
soldiers,
sort of the upper echelons now.
but I just don't trust it. I think we can reach on down and have a drop and then buy the dip. But this is bullish. This looks bullish right now. But I'm going to wait. I just feel like I need to be patient today. Wait for the perfect setup. If it doesn't hold this 50, I mean, I would buy it on a normal, but I'm not feeling very good right now, so I'm going to go run and take a shower. But if this thing pulls back and hits this, but right now this looks bullish. Getting ready to squeeze. But I'm not going to take a chance. I think we could pull back. See, there it is. I might get this out, do this first. These are the 5960s. Get one more good candle. We got a tweezer bottom right now. I'd love to see one more, but that could have been it. NVIDIA is breaking out. We're almost to 140. We hit 140. And AMD also at 115.78. Well, there's $80 right there. $4 to $4.80, $4.90. Tweezer bottom might have been a buy. Do. Holding up the VWAP on the SPY most of the morning so far, first half hour. Good morning, Funky. Double top on the 3-minute and the 5-minute. 2-minute on that /ES. Okay, here we go. We've got the bottom of the orb already established at 59.30. And we've quadrupled the top of the orb 4 times. 3 being wicks, 4 being wicks. So watch it close right in here. Damn it. Just bounce right back up. I was getting ready to buy one. They kind of like that right there. Still, the 5960s are on watch. George!
2-3 dates on Friday's expiration, and I'm going to play essentially the market maker move slightly outside it, which right now is around
DLTR, they keep pumping it.
And this is again a metric expectation, one standard deviation move above and below the current price by expiration on Friday. So I'm going to sell a credit combo or an iron condor in this case. This is a neutral strategy taking into consideration that market maker move. So I'm going to sell the 102.
It did break out
spread
after hours, or pre-market.
I'm going to sell the 86.83 put spread. And altogether, you could sell this combo for about $1 per share or $100 a contract. So your return is that dollar, and you earn it if the stock stays range bound between 102 high, 86 low, and you have $2 of risk relative to $1 return. So return on risk is about 30%, 66% probability of success. That will stay between.
Did he say iron condor?
Strikes. But if it does blow out on earnings, you can lose $2 on this trade, and that happens if the stock hits 105 or higher or 83 or lower on post earnings between now and expiration on Friday.
All right, thank you, George Sillis. Great to see you. Appreciate it. Thank you very much. All right, so welcome, folks. We're starting the next hour of Morning Trade Live. We're down 62. Stocks have taken a turn here south after we've gotten in the latest on economic data on JOLTS, labor turnover, factory orders. We want to get right to that. You are seeing now the Dow is down 75. The S&P's holding on to a small gain there, up 2 points. So let's bring in Alex Coffey, who's going to be taking a look at this group right now, as he has some of the breaking news pertaining to the job openings picture, which the estimates were 7.1 million. And the truth is, you know, you're hearing more and more that it's tough for the graduates to find jobs now, et cetera, et cetera. What are some of the points?
Well, there's not too many basket weaving jobs out there.
Expected, Nicole. Good morning to you. Looking at it, it's closer to 7.4. They revised up the previous reading as well. Layoff rate was 1.1%. Quits rate was 2%. Total job quitters was just shy of 3.2 million. When you look at final durable goods, which is another print that came in line. Factory orders slightly worse than estimated fall, 3.7% versus the minus 3.2%. So there was kind of a lot of data that came out at the top of the hour. But going back to the JOLTS number, I think this is always a very optimistic look at the labor market. You're looking backwards in time. You're looking at something like job openings, which we know have kind of stale postings on different platforms as those jobs are filled, but maybe the job opening isn't taken down just yet. Nonetheless, though, comparing it to itself, it's painting an improving picture. The prior number was revised to 7.2 million, and this comes in just shy of 7.4. That's saying more job openings. The job openings rate is at 4.4%. The quits rate goes from 2.1 to 2%. And layoffs are pretty steady at 1% to 1.1. Hard not to look at this and say, maybe it's not as strong as at the strongest point of the last 3 or 4 years, but it's not fallen off a cliff by any stretch.
Yeah,
Lily's pulled back to support.
It means you can interpret it in that, businesses feel more confident. They're putting more jobs out there. They're willing to spend on workers, et cetera, et cetera. You want to see spending on labor. You want to see spending on CapEx, et cetera, for research, development, growth, et cetera. Sometimes you worry about how it could also be interpreted if you have a full market, full labor market, it's tight, and then is it a good news or bad news type of thing? Kevin Hanks and I always go back and forth on that. So we'll leave that. Factory orders I see are worse than expected. That's not necessarily great news.
Yeah, worse than expected. Prior was revised lower as well. I mean, of these two reports, though, the market's going to put more, preference to labor market data than factory order data. But it is notable. Transportation for the month of April, it was down 0.5%. But I think it's important to note that we're going back to April. and that things are relatively noisy in this period of time. So that's something to note. I mentioned durable goods as well, which we got those final numbers for. They didn't move much. All in all, if you were to look at this, labor market data today combined with the factory order data today, I think it's more of the same, which is a picture of maybe a slowing economy, but one that's slowing at a relatively moderate pace, and it's not slowing in a straight line. So you look at, factory orders, a little bit worse than expected, but you look at the labor market data, still slowing from maybe where it was over the last couple of years, but it has little moments where it bounces back along the way, and this is one of those moments where, again, it's not a straight line. I think it sets up for a really interesting next couple days where we're going to get
went down in price. It's ahead of the
last week. Is that a single one-off number, or is that going to be a trend? And then, of course, the
Ameritrade's lagging a little bit. I was watching this thing go up, and then over here it was going down. And I'm going, what the heck? On my platform, 470, 460. I kind of want to buy a put today, but I screwed up in my puts yesterday at the end of the day. I still think we can get down here to the bottom of the orb. Maybe a little lower, but definitely down to 59.32. Okay, get ready. I'm going to get ready to get in these calls. Still ain't took my shower yet. I left my jacket this morning at one of my jobs and I had to drive back and get it. I had my wallet in it. Okay, here we go. Get ready. Get ready. Finally got my wish. The, where are they? Okay, the 5960s. $2.70. Megaphone at 270. See that today I pulled a funky. Did you see that? $270 to $360. Take the profit if you jumped in it. There's my first trade of the day. So they're at 380 right now. Got out at 360. Randy and I made some good money on Megaphone there a couple years ago. We had a bunch of triple bottoms, inverse head and shoulders, and then all of a sudden when we started leveling out, We had a bunch of megaphones. So we're getting to the top of the megaphone right here. Now, if we're on fire, we'll break out. If not, we'll pull back here. So these are at 460. There's $100 extra I could have got. So now I'm going to be looking at the puts. The 5920s. Nicole, come back. The Jolts. What did the Jolts have to say? Anything good? U.S. durable, including defense, month over month, even. Factory orders up 3.7, minus 3.7. Over 3.1. Prior was 3.4. Fed Bostic wants more progress in inflation and no rush to cut. We don't want to listen to that. We want rate cuts now. Jolt's job opening 7.39 versus 11, so they're up. CNBC looks like a bunch of dumbasses. The SPY, I got 594.37 resistance. What's the deal? I can't get my... Hello, may I help you?
Hello.
Hello.
Good morning. This is Genesis from Home Security Promotions.
Genesis?
Just really quick, we're reaching out to homeowners in your area to let them know about our state-of-the-art wireless home security system now available with no upfront cost. It includes a free, durable outdoor security camera and professional installation, all designed to help keep your home and family safe. So are you the homeowner?
Yeah, I own 50 homes.
I am sorry, I did not get that. Can you please say that again?
I own 50 homes. I'm a foreign exchange student from Alcatraz. Hello? Are you in shock? My daddy is a millionaire. Come on, baby. Why do they hang up on me all the time? I don't understand. God. They don't like me. I was a stand-up comedian. I can handle it. I've had beer bottles thrown at me before. Okay, well, Funky, I've got 594.37 on the SPY. And the megaphone seems like it wants to break out. But I am no longer in these suckers. Okay. The 5920s puts at $3.60. No, that ain't the one I want. Oh, it broke out. Damn it. Where's the SPY at? I think I'm going to be patient and wait for that 594.37. That ain't going to help me there. Well, you're right below the 200 EMA on HIMS. How'd I get my shoes off? My slippers. Okay, this is it. We're getting close. We're at 5:30. And the 5960s. The 5900s. There's a lot of calls there. There's 15,000 at 5900 for $1.20 puts. That's way out of the money, though. I mean, in the money. I don't know. 15,000. Then the next one's 5930 at 11,000 contracts, almost 12. $4.70, $4.60. 4.60 lotto. So I'm in the puts here at 460 to 59.30s. For a fast scout. If I can stay above that 460, if not, we're right at support, top that megaphone. So if it breaks it, it could be a good drop down to the orb. Or back to this previous resistance right here. Better sell them. I got 2 of them. They're at 520. Oh, there we go. 580. Ha ha ha! Yeehaw! I just don't feel it like everybody else does. 580. To the 21. Inclusion. Oh, Studio took it? Damn, did you see it on the 1 minute, Funky? Am I too loud on mic? Let me know, because I've got my mouth right in it. We went against the odds on that one. $6.20 now. So we went, just like I said, we went right back to the top of the orb right here. So if you're in the trade, make sure you get out. If we're bullish, this will hold. So we want to move over to the calls. The 59.60s. And right now they're at 430. There's 410. If you can get it, 420. There it is, 410. Now if we hold this, Now, why didn't it? Oh, there it is. $4.10. Now you're at $4.60. So that's $50 right there, contract. Now you have a head and shoulders, left shoulder, right shoulder. If it breaks the head and shoulders, it would be a double top. So you get out right now at $4.70. $4.80. If we break, we'll go up higher. But just like Funky says, man, that's $70 a contract right now. In and out of that scalp within a minute and a half, 2 minutes. So what's swaggy stocks mean? SWAGG, swaggy stocks. The best in all-in-one stocks. Social media. People are talking about right now. Apple's pulled back to the 200. TSM is putting another 100 million in America. $100 billion. I thought they said 100 million. Tells Trump 100 billion. A U.S. trip will take time. Taiwan Semiconductor Japan chip factory faces delays. Block. There goes Lily. So Funk/ES broke past my resistance right now at 55.99.77. Dang, things are at 540 now. We got a double top, just like Jimmy said. SPY also has a double top. Coin and Mr. New highs.
.com/coaching and start learning.
Wonder how hard it would. I wish I was a little bit younger. I tried to get a job at Schwab. As long as I got to work next to Caroline.
Well, certainly we are seeing a broader AI theme playing out right now, particularly when you look at the chips, but also let's talk about energy, because we are talking about certainly the secondary effects, particularly in nuclear. We are seeing those stocks very much on the rise off the back of what we're hearing about Meta signing this 20-year agreement to buy nuclear power from Constellation Energy. This very much is part of a broader theme that we've been seeing and tracking over the
nuclear
last
stocks.
year or so of some of these major tech companies that have been investing in going nuclear to support some of that AI
VST NRG OKLO.
It comes off the back of TSMC, of course, the largest contract chip maker, suggesting that the tariff impact, it's not going to have too much of a direct impact on
Semi.
company. So it seems to be downplaying that somewhat
TSM.
today. Also seeing dollar stores on the rise off the back of what we saw from Dollar General. Shares jumping up more than 15% or so initially off the back of the stronger earnings beating estimates in the market.
Screw the dollar stores.
In the other direction are some of those steel companies as well. And
5.
that obviously coming off the back of that rally that we saw yesterday. Obviously the thinking in the market and really the focus has been that would be beneficial, what Trump is talking about.
Steel stocks.
Those tariffs for some of the
NUE, CLF, STLD, and X.
The market is reassessing what we're looking at as far as the global macroeconomic picture and also some of those steel prices.
So that's a lot that we're covering. I mean, there's so many stories, folks, to continue to follow. I will note that Constellation Energy, which early on, to your point, had been up about 15% or so in the early going. In fact, in the after hours, it was up to 363, but it's lost much of the gain. It's up only 1% right now. But the group overall, as you noted, definitely got a boost from this mega nuclear deal, a 20-year deal. So that's big news. Got to power AI across the board. But what happened to Constellation Energy? It was up double digits and now it's up just 1%. We also look at some of the other things on the move. Dan Grant, it's good to see you this morning. The Economic Organization, for Economic
Damn, she broke out again.
Cooperation and Development, that's the name of the organization, actually cutting the numbers for global and U.S. growth. And that spooked stocks early on, but then we got a little bounce back and jobs data. What were some of your thoughts?
Yeah, almost no reaction from the bond market. Yes, and it spooked stocks a little bit, but it's not unheard of.
Spies
we have
within pennies from my resistance level.
The impact, the global impact on the tariffs.
So I got SPY almost at my resistance level. We'll see if it wants to break. and SPX SPX will be right around 59.68. $61. Exactly, same as what they got. So that's another $10. I'm going to fine tune that. TSM has a triple top breakout. Golly, the Dollar General, that Iron Condor went from 1 cent to 95, 93. To 90 cents. And I didn't buy it. I can't believe that. That sucker was down at a penny. George. Jeez. Unbelievable. I gotta learn about them things. Huh. I'm serious. Wow. That's what a heck of an increase.
On Morning Trade Live, I'm Nicole Tedelides. Right now we're seeing the Dow higher by 38, the S&P's up as well, and we're glad that you are with us for this back and forth action. So make sure you keep it here on Schwab Network.
I'm gonna write it down. I'm gonna watch videos on it this weekend. Iron Condor.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe.
Spy within.
Also, because your investor checking account is linked to your Schwab One brokerage
Now,
account,
I'm thinking
you can
about
manage
puts here.
checking and investing in one convenient location. Moving funds between your accounts is
It might be a little risky. I missed it because we just 5 cents off, 6 cents off of my 5 cents off my resistance level. So the SPX put the 5530s. I'll try to get $3 right here if I can. There it is. Well, I don't know if this is going to work or not, but that's what it is. Okay, we got 3. If this breaks out again, I'm getting out. Average 270. Come on now. Let's not get too friendly. And now I'm down $75. $15 contract times 3, it's 45. A drop. We'll see if it wants to stay bullish here. We're above back at the 9. Like I said, it's a little risky, so well, this is not good. Damn it. New high. Well, that'd have been a good add-on place. 220. I wanted to add 3 more. So we're retesting the support. If this thing wants to run, it'll break out from here. Last time the 21 was support on it. We had a tweezer top. Psst. 3 candles, almost 4. So, I take a $30 loss here. 60. I mean, I'll just hold on to it. We could get down to 59.50. Drop. I want that laugh so I can go eat. Cook another hangers and broccoli this time. And back to even. Man, that would have been a nice. So I'd had to, if I'd bought them at 220 plus 2.70. Divided by 2. That'd have gave me 245. Six times 25. I'm going to put TSM over here on this one. I don't have TSM on here. Take Tesla off. Tesla has a double top. That 351.24 I had. TSM new high 196.92. NVIDIA at 141.93 resistance level 142. OKLO nuclear. Looks like it made a new high today. Here's why. Oklo shares a moving volatile Tuesday alongside several nuclear names after Meta Platform signed a long-term deal with Constellation Energy Corporation, CEG, for supply of nuclear energy. CEG. Spy squeezing on a flag. We've got two bear candles on the SPX, or one. on the 5 minute. You got a doji on the 5 minute on the /ES. Still in this put. I don't know for how much longer though. Mister has a triple top on the 1 minute. Master Mo. Think about adding 3 more here to this and double down on it, or maybe 6. Diane King is up.
Brokers.com.
Oh, my girl's up there.
Both of you. Jessica, I want to start off
Jessica.
with the first stop on your list.
Hot lips.
NVIDIA. Look, it's had quite a run over the past month, gaining more ground today. You have Jeffries adding it to his list of highest conviction picks today. Tell me your view here.
Yeah, Diane, we left off last week. We were looking for a reacceleration of demand, and that's exactly what we got from Jensen Huang, and also broader adoption. I read this really great report where 78% of global companies utilize some shape or form of AI, and that was from McKinsey. So there tells me there's broader adoption. Where is that acceleration? And it gave us about 4 reasons. 1, inference and reasoning AI. Obviously, we're way beyond just purely utilizing it for chat. That's ignited exponential demand. Inference costs are coming down. That was a big headwind when we had this integration or DeepSeek came out. However, there's still demand, so that's actually good. That's driving efficiencies, and that's what I think we need to follow. Global AI and infrastructure build-out's the second one. Because of the administration's really fiscal policies, the diffusion rule was lifted, which means there is broader adoption that could happen on American-made AI stacks. I think the headwind for that we really need to watch, though, is with China integration. Jensen Huang said himself, so as those negotiations are happening between the administration and China, I want to see how AI plays into that. According to Jensen, there's 50% of AI developers are there, and as we've seen with the broader large language models, those that are open source tend to really accelerate in their growth. So I want to see that access to China, but we want to see them built on American stack. That's Jensen's words, and that makes sense to me. Third is enterprise AI stack integration. Again, agents are working really, really well. They are great enterprise use cases. And then industrial AI and robotics beyond that. We're seeing that even with Tesla and their self-driving models. All of these 4 things hang on demand from NVIDIA itself, which I think would re-accelerate that AI narrative. Of course, the broader macro theme could be a headwind. Lots I said there, Diane.
Yeah, no, but I understood what you said. Even, especially the point about agents taking over, and one day, who knows, maybe our agents or digital twins will be talking to each other. All right, but this is the in real life version of all of us. Rick, take us through what you're paying attention to when it comes to the chart for NVIDIA.
So the chart for this one, we're at a potential turning point here,
Rick.
key resistance level. If we were to look at our current price, you can see we topped out recently near 143, 144 or so at this red line here that represented a high point and then a low point and then another high point here after our initial fall that took us to our
The head and shoulders, you idiot.
exponential moving average. So this level 142, 143, that is a key point. That's about where we're sitting.
No,
right now.
head and
Just
shoulders.
That point a hair below 142. So for now, though, we can see that we've had a sharp rally off of these lows, 86.62. We're up about 63, 64% from that point here. So it's been a very swift turnaround after the tariff news-related turmoil that sent stocks so much lower here, but rebounded very quickly.
Okay, Jimmy's not doing
You
good.
can also see the 130 level sticks out here. This
Ding
green
thing
line,
broke out
key
again.
Stopping point for price during the past year. High points here, low point, low point, low point, low point, etc. So now it also lines up with our yellow 21-day exponential moving average, a shorter term moving average commonly followed by many traders. So that would be in confluence with that key price level. So an important downside area to watch in the shorter term. We can also see RSI, our measure of momentum, has been fluctuating lately. A little bit of bearish divergence here as price made a new closing high, but RSI went downward here. Seems to be on the verge of being invalidated. If RSI were to break above this trend line, it would not only invalidate the downtrend, but it would also push back into the overbought area, typically regarded as a sign of strength in a trending market here. So now, if we were to look at our volume profile study, we can see that the area where we're passing above right now, this is a heavy volume node area between about 132 to 138 or so. So that's more important news for the bulls, that price is hanging out above this key consolidation point that also lines up with our +1 standard deviation channel, which many traders use to project support or resistance here. If we do keep moving upward,
I'm not
the
gonna
+2
give
channel
up.
comes in near 151. That could be an upside area to watch. But this general level, 130, would be the extreme low point, lining up with our moving average, a key downside area for traders to watch for support.
Okay, Jessica, want to send it back to you for final thought on NVIDIA before we get to your next stock, especially in the context of what Rick was saying about paying attention to RSI fluctuating there.
Yeah, absolutely. I love the way Rick and I have discussed this as well, that he utilizes RSIs. I think so many people use it the wrong way.
Work gets to Rick with you? Work with you?
It's in the overbought territory.
What a lucky guy.
As long as it's making higher highs with the underlying security that we're analyzing. So I'm certainly looking for that. And I'm also looking at that relative to the overall market as well. NVIDIA is a big piece of the macro narrative at the S&P 500. However, the macro narrative
I find it very
is not
difficult
just
to work
growth,
with
and
you,
it feels a little
Jessica.
narrow right now, so I want to see validation, but then I also want to see what that looks like more broadly.
Okay, well, as things stand, NVIDIA now outperforming the S&P 500. But let's move on to your next stock on your list, Kinder Morgan. It's a little higher year to date. What's your view on this one?
Yeah, so for this one, Diane, I feel that we're at risk of a very narrow rally keeping up the market, as we see with NVIDIA now outperforming, which is not necessarily a bad thing, but reminiscent of really a timeline of events after COVID, which we can go into a lot more detail on another time. But because of my picks now, Kinder Morgan, and then the next one, I'm looking again for lower beta and some higher income, so a higher yield. KMI showed up on my technical scan first and foremost, where I look for a crossover of the 1326 moving average to give me an indication.
Very bullish day today.
Increasing, because I like to look at the market quarterly. So that was one that caught my attention. Then I saw the low beta and 4% dividend yield, and that went over to my end thesis of let's just smooth out some of that volatility now that we're nearing those all-time highs. They are in energy security. They have a strategic energy exposure. They've got presence in key U.S. basins. They've got some export growth. They've got some recent acquisitions. So there's a lot of value-driven expansion that's happening happening there. Natural gas.
I can't believe how much that
catalyst for
Dollar
Kinder
Tree
Morgan,
went
so
up.
something to pay attention to. So it definitely is something behind its
The
long-term
5560s hit a
but
grand.
Really, the reason why I chose this one was one, the technical view,
God.
and two, the low beta and high yield that it
I'd
could
be
offer
chilling
to the
that one
overall
up big time.
Okay, Rick, you're up. Tell us about this chart and the technical take that you have on it.
A stock that's been in a bit of a holding pattern here for maybe half of the year. A lot of the gains came during the first half of the past year. Here you can see we made a big push above
Market's
this
very
level
bullish.
here 2021. From there, though, after we had this earnings event, we hit a high near 25.50. Once again, this was a low point a couple times here during the tariff news cycle. It was also roughly where price stayed on in terms of its closing prices. We made a little bit of a dip below that, but for the most part, we also held up at the purple 250 two-day exponential moving average, then regained our traction, tested that 25.50 level once again and held on. Now you could draw an upward sloping trend line, a shorter term white trend line there going across our recent lows, and we are approaching another resistance level.
Okay, let's see what happens here.
Earnings gap down gives us the boundaries to watch of 29 and about 30 or so, just above 30. 29 was where we topped out once again. That's where we're approaching now. 30.17 to be more precise would be where our gap would be closed. So traders often look for gaps to be filled. It's not saying it's going to happen or that it's guaranteed to happen or anything, just a common situation that many traders stay on the lookout for and keep track of these notable gap levels. From there, the next high is 31.48. Our 52-week highs come in. We can see RSI was exhibiting a triangular pattern here, perhaps one of shrinking volatility, as is the case when a stock is more range bound. But now, to the upside, making new relative highs along with price recently. The next step would be looking for that overbought area and for price to break out. So if we were to look at our volume profile study, much of the trading is really right around where we
got $2.10.
This range bound area, the point of control is at 26.77. We're fairly comfortably above that point now. Our moving averages are within that same general range as well. So a move below $26 or so, $26, $25.50, that would be the supportive area to keep an eye on. To the upside then, a push above 30, 31.50, that would be the areas many traders would be watching out for.
Okay, Jessica, I'm going to yield the floor back to you. Any final thoughts on Kinder Morgan before we get to your last stop?
Yeah, this varies from the growth picks because it's an income pick, just like my next stock. So we even segue into that. If I'm looking for something that adds yield, smooths out volatility, which means we're not going to see a larger growth trend because that's not the intent of the trade.
Okay, all right, let's talk about your last one on your list. Verizon, you got it on your list. I'm curious to know your view, especially because I look at it's been trading neck and neck with T-Mobile year to date, but AT&T has been the outperformer here. What's your view on Verizon?
Yeah, so I think Verizon has been the underperformer
59.30s, you got
it's
9
limited
contracts.
tariff exposure, which is ironic, but that means that
I'm
it's
gonna
more
either get out
US
even.
and domestic sales, whereas AT&T is more global. And if we go on the big macro picture, there's a lot of global
If we
exposure
break below the
that's
21.
happening, and especially over in Europe as well. So I think that has to do with performance. But because of that performance decline, if we look at the dividend and then the yield that it produced, it actually was 6%, which is a very, very high number. And again, a lower beta. That to me is another opportunity just to add some income to my portfolio. I actually had covered calls on this a while ago and I was called out, so then it rallied to my strike price and then I don't own it anymore. So we can buy it outright. You can even sell a cash secured put to do that. There are risks associated with that, so please be aware of that. But the intent of this one is, one, that limited tariff exposure is still in play because it is domestic, even though this global trend is happening. That's the tariffs is an unknown, and I like the known that is involved with this because the market does not like unknowns. And then second, of course, is the yield that it's adding, and then the low beta to smooth out the overall volatility if you have a growth driven portfolio like I do.
Okay, so you like the known. So Rick, then the chart is obviously known, and you have some levels that you're paying attention to here. What are you seeing?
Yeah, so this is another one where we're seeing kind of triangular priced activity here, range bound, lower volatility, which can often be the precursor to high volatility as the lines in the sand grow increasingly entrenched. The breakout
Verizon's flagging out.
Can be significant. So the clear lines that stick out to me based on this chart, right around here, this green line, low point, high point, and then more lows here, right around 41. Kind of a general area here is where the price found traction many times there. To the upside, though, 44.50, small gap.
Hims is at 56.
Point, and then breakout. And
we
then
might be at a support on Hims. Yesterday's low.
Most recently, a couple weeks ago there. So 41 to the downside,
Funky.
44.50 to the upside. A couple more interesting things about this chart I would just mention is we had a kind of an inverse head and shoulders type pattern here, a more bullish pattern that lines up with our neckline that we were looking at. So that kind of lends even more emphasis on that general area. We can also see RSI has shown its own symmetrical triangle type shape here, bouncing around that 50 midline. Look for a breakout to accompany price. For now, RSI is within our trend lines here. Price actually is pushing a bit to the upside. It is hanging out above this downward sloping trend line.
I'll be right back. I might have to get stopped out of these if they don't do something soon.
For a rally that would take us further above that 44.50 level. That's the upside area to watch. You can see as well, our point of control is right here. We're right in that general area. This is the heavy trading area near 43.67. This would be another significant point to keep an eye on if price starts to slip below it. But if you were interested in some kind of cash secured put strategy, the downside levels that stick out based on the resist or supportive areas here, 41 is another one really, not only because of how many times it stopped there, but also that's where the volume picks up again. And I'm certainly not saying you should or shouldn't do that. I'm just saying that would be one level that many traders might be looking out for, that 41 area, based on some of these technical factors.
All right, thank you, Rick. That was the track for Verizon. That's our Rick Weekend lead market technician and Jessica Indicator from stockbrokers.com. Coming up next, we are going to spotlight the retail sector, discount retail, and in particular how tariffs have impacted the sector. Several names in the space report earnings. Dollar General, a key gainer today. That's next on Trading 360.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Time now to spotlight the discount retail space. Joining us for insight, we've got Jan Rogers-Niffen.
Drop,
CEO
baby, drop.
J. Rogers-Niffen, WWE.
Got another flag
It is
for
so
me.
good to see you in person. All right, why don't we start out with a look at Dollar General. Shares rallying more than 10% right now off the back of the latest results, helping to give a lift to other discount retailers like Dollar Tree, like Five Below. In their most recent quarter, they reported EPS of $1.78. Sales rose 5% year over year to more than $10 billion. So they really were doing well. And then they had strong guidance here. In terms of the bottom line performance, it ends this, for lack of a better way of expressing it, kind of dry spells, this streak, right, where there was just weakness overall. So what's your take on this?
Well, they reported a good number, and Ollie's reported a good number
Yes.
too. And you know, that's that same
basic customer. So when I looked at it, I said, okay, Jolts this morning was better than anybody expected.
Exactly.
Up to, what, 7.4 million?
Yep.
So everybody's got a job, and now they think if they lost their job, they could get another one because, you know, Jolts is great. And so that customer is also seeing their wages go up more than inflation. They haven't seen that change yet. So far, wages are good, jobs are good, that customer is outspending, and Dollar General is one of the places they go, just like Dollar Tree is, Ollie's is as well. So I think that what we're seeing here is just a nice, solid consumer, and we haven't seen any real negative impacts yet from anybody really on the tariff question. Everybody that's released in the last, week has turned in pretty solid numbers. So if I had to look at it right now, I'd say, okay, I expect that Dollar Tree will be good tomorrow. They'll have a positive comp.
Okay.
We just saw good comps out of these lower end players today. I don't think the consumer's struggling at all yet, and I don't think anything has really affected the pricing on tariffs yet.
Okay.
I don't think it's going to be a big deal. I still think the tariffs are going to be 10% everywhere and 30% on China, not 145%. And if that's true, you only have to raise your prices somewhere between 2 and 4%. That's not that big an impact on the consumer, especially if you can push some of it back, so it's really only 2%.
For the lower end consumer, it might be an impact. And look, to be fair, the CEO saying, you know, they say they're well positioned to serve the consumer in a variety of economic environments, right? But they did talk about that uncertainty. It exists for the remainder of the year. As for the potential impact of tariffs on its business, they said it does have plans in place to mitigate if they return to the higher level. So to be fair, you don't expect it to rise to those draconian levels that we saw at the beginning of April.
I have thought from the beginning, 30% on China, 10% on everybody else. I still think that. I think we'll get there with Europe. I think we'll get there with China. Because if China has 145% tariffs,
God.
they're shut down. We're not bringing stuff in.
It's a sale.
There'll be substitution. We'll be going other places. There may be a few shortages. But I don't expect that to happen. I think 10% and 30%. And if that's the case, that customer you're talking about is saving more on gas right now than they're going to be paying.
Well, some of them are catching the bus.
Yep, we got a new high. These things are badass, eh?
That's true.
Yes.
But yes, will there be, you know, they just went through 9% inflation. Are they going to react really negatively if prices move by 2%? They'll trade down. They'll substitute. But they're not going to quit spending as long as they've got a job.
Jesus.
And as long as Jolt says you can get the next job. We've never seen them stop unless jobs become a problem, and we're still looking at...
Market's starting to get a little scary to me.
Okay, so you make a good point, because I do think, to your view, that the job market holding up does bode well, whether we're talking about the lower income consumer all the way to the higher end. Now, the company also
We got 59.61.
be pressured by tariff-related price increases. In your view, does it depend on how much the price increase is?
Yeah, absolutely. Prices have always increased at about 2% a year, right? It was really bad back in the 70s.
Double
when
top.
I was in business and we were seeing 11%. It was really bad recently when we saw 9%, because you feel that, you see it, and it really changes your life if you're especially a lower end consumer. But that gradual being boiled like the frog in the pot at 2% a year, you know, we've all adjusted to that. Wages go up a little bit. You can live with that.
You kind of go like, fine. You know, you roll your eyes and say, fine, I have to pay for this.
Yes, and you may change something in your life a little bit, but you don't quit shopping. You don't go into your shell and say, I'm done. Because as long as that job number looks like it does, and as long as you're not over borrowed, and the consumer's not right now, their payback ability is as good as 2019.
Oh, they're over
Say
borrowed.
they're not over borrowed. But there's one piece where we don't have great visibility on.
Klarna, yes.
BNPL, and I was exactly, you read my mind thinking about Klarna. So
Starbucks is having a real good day.
How do we account for that? How do we interpret that?
That's the thing I'm most worried about. I'm not the most worried about tariffs. I'm not the most worried about jobs.
Starbucks is ending one of its most generous loyalty benefits as CEO cuts perks to improve profit.
How much pressure is that put on them? Clearly, we're seeing people walk away from their buy now, pay later obligations at the moment. We've always seen that, especially if things got a little tougher. But in this case, I wonder if it's not the vehicle they're walking away from. They look at it and go, you
The
know,
consequences
it's not
are
a
low.
credit
It's
card.
not like it's going to show up on your credit. Not all of them. There's some visibility on
Right.
credit scores, but not all of it.
Right.
Not
So
right
I
now, they're
wonder if
not.
That's not the first thing to go, so that might tell us, oh, it's going to get tougher with the credit cards as well.
That's twice
It
I've
also
been
might
stuck
just
in
be
these
telling us,
suckers.
gee, this was an easy thing for me. I did it, and I don't really feel like paying back, and my student loans are coming due, and I'm done. And if that's the case, that's a problem, but I don't think it's a problem for retail sales going forward writ large.
Okay. All right. Well, we'll have to leave our conversation there. Jen, it is great to see you. It's always great to get your perspective. Got shares of Dollar General rallying more than 10% up, 12%. Dollar Tree also gaining some ground, up 3%, Five Below higher as well. Ross Stores higher. Different kind of retailer there. But great insight on the retail sector. That's Jen Rogers-Niffen, the CEO of J. Rogers.
The market's very strong.
Coming up next, the Disruptors will cover Constellation Energy following a long-term deal to provide nuclear power to Meta. George Soros will have an example trade. That's next on Trading 360.
I'll be right back. I'm gonna go start my lunch. Today will be a burger and broccoli. Just a burger patty. I have to do some magic.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head
Target
over
up
to
a couple bucks.
schwab.com/coaching and start learning today.
I have a feeling Fat Cat's missed a lot of this here boat. New high on CrowdStrike.
Welcome back to Trading 360. I'm Diane King Hall, live from the New York Stock Exchange. We're looking at stocks on the move. I want to bring in Schwab contributor Sam Bottas with a look at block shares higher right now. What's going on here?
Yeah, off the back of the Evercore ISI and analysts
SPX just keeps going.
The price target now. They are looking at an outperform with a price target
59.60s
of
are now at 12.
58, representing 21% upside. So really, I think what we're seeing as far as the reaction in the stock today is that we are seeing some optimism coming from analysts and certainly around a couple of themes, and that is despite some of the macroeconomic challenges, so perhaps representing some positivity now about the resilience and recovery, particularly off the back of the last earnings report, which did highlight some of those headwinds for the company. So what Evercore ISI and this analyst is talking about is citing several reasons for this. One of those being consumer trends, the lower end consumer in particular, they say, showing steady spending despite some of the macroeconomic challenges and uncertainty right now. Also the Cash App expectations that lending will not be as aggressive. They have been worried about how they were actually going to make up for that block, but they seem to have put that in the rearview mirror for now. At least some of those worries have eased. They do seem to be a little bit more confident about this company's risk tolerance at the moment. Also encouraged, certainly Evercore ISI, about new product releases too. But this comes alongside other upgrades also from Jefferies, for instance, as far as price targets are concerned. It does look like analysts are also encouraged by this company's ability to very much adapt and innovate, particularly around integrating Bitcoin payments on the Square platform. I think the big focus from the market has very much been on the competition, the likes of PayPal, for instance. But as we know, in the last quarter earnings, we did see them highlighting some of the macro uncertainties, for instance, the keyword tariffs, as far as what some of those details are going to look like. We know, of course, Diane, that this company relies heavily on those consumer trends as far as some of that confidence, which is holding up for now, but you could say it is looking fairly fragile and a bit cautious at the moment.
Absolutely. Thank you, Sam. Great perspective there on block shares in focus today. All right, time now for the disruptor is joining us for Insight. We've got George Still, senior markets correspondent here with today's company. The Constellation Energy has made this big deal with Meta. That is a multi-decade deal. Shares initially spiked on the news. They are still a little bit higher. But catch people up on what's going on here, George.
Well, obviously, if you consider what's going on in the electricity markets as a result of the demands for artificial intelligence and computing power, there's a tremendous increase in demand for power, electricity. But there are challenges because electric utilities can't really increase their total production as much as the demand has increased over time. But at the same time, we're also seeing this renaissance in nuclear. And this is, again, at the margin, an additional capability for companies like Constellation Energy, which bought Calpine, which is one of the major nuclear power producers in our country over the past year or so. And this is actually a movement for them to increase their total purchase power agreements to major hyperscalers, which includes Meta platforms. They actually signed a deal, a 20-year deal, which is
we're going to hit that damn resistance.
1 gigawatts of electricity coming out of their Illinois production facilities. And this has been a huge boom for Constellation Energy, which has really been, historically speaking, a traditional core utility company that is now morphing into these areas in the electricity space. We're at the
Dollar Generals are at 90 still.
Two-tiered structure of pricing.
Dollar Tree.
Public utilities price, household at a certain level, but at the same time, they're signing specific purchase power agreements with companies like hyperscalers and Meta platform.
AMD just shot up again.
Total supply to them at much higher prices than they can.
NVIDIA hit resistance, and I called that out a little bit ago.
Like technology companies, because they're essentially signing these specific agreements where they can actually increase the prices based upon the willingness to pay of these major hyperscalers.
Okay, so then, George, what's the approach from here for an example trade? Especially, we've come off the highs that we saw earlier in today's session, but it's been an outperformer year to date. So how would you approach an example trade for Constellation Energy?
Yeah, and so it's a good evaluation to bring up, because you'll notice that there was a huge gap to the upside and a pullback in the stock after this news announcement. So we have to look at the trend, which is still positive. We also have to consider year-to-date performance, which is still higher by about 40%. But there is a pullback, but you'll notice that the pullback corresponds to the 10-period moving average, which is trading above the 20-day moving average, and the price is above that. So we are still trend positive. I think the pullback to the 10-period moving average presents opportunities for those who are looking to potentially get in. So in this case, what I'm going to do is
this is one heck of a run this morning.
Combo trade going out to July with 46 days to expiration. I'm going to basically buy a 310 call, then sell a 310 put simultaneously. So altogether, this would cost you about $7 a share or $7 a contract. So in essence, it's a bullish trade. It's close to break even because 317 is your break even by expiration. But at the same time, you have to consider that there's unlimited profit potential, but there's also risk because you can be assigned the shares at 310, but your cost basis is 317. So essentially, this synthesizes a long stock position. Your outlay is $700 versus over $31,000 for a long stock position.
Okay, all right. Thank you, George. That's an example trade for Constellation Energy. Today, we've got some news around it with its deal with Meta. That's our George Silla, senior markets correspondent. Coming up next, time for our 360 round. We'll bring in our panel to preview CrowdStrike's earnings. Those are due this afternoon after the closing bell. Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading.
I'm gonna go get my taco.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
Look it up here.
Where are you going?
Schwab. A modern approach to wealth management.
Okay, we're at 170. $59, $58, $19.
Welcome back to Trading 360. Time for our 360 round. For that, I want to bring in our panel. We're going to preview CrowdStrike earnings, talk about the state of cybersecurity. We've got Ken Mahoney, CEO of Mahoney Asset Management, and Ivana Delevska, founder and CIO of Spear Invest. Thank you both so much for joining us today. Ivana, I want to start with you in your perspective on CrowdStrike. The expectation that we have, we're expecting to see revenue grow by nearly 20%. EPS expected to come in at 66 cents a share. Does that make sense to you?
Thanks for having me, Diane. So that makes sense to us, and the company pre-announced earlier this quarter. So we think that they're going to slightly beat expectations, and that's already in the street numbers. So as we look forward to the call, though, investors are going to be looking at net new ARR metrics. So basically metrics that tell you what new customers are doing and what new business is trending. So that's going to be really key. It's not so much about the reported quarter. It's going to be more about these forward-looking metrics that we're going to try to get a glimpse of the future.
Okay. Where are you from?
Do you share a similar view of when you think about your expectation for CrowdStrike's latest quarter?
Right, so the 66 cents, that's not a rear view mirror, so it's really all about guidance. It's kind of interesting that over 7%, so that's implied volatility is pretty high. It's kind of NVIDIA. I mean, up 7%, down 7%. You know, they missed some time ago guidance, so kind of a little bit cautious. It's expensive, it's not cheap, but then again, they're in the strongest sector. You need this. It's not a company that say, oh, we'll do without internet security. We'll just do our supply, it was do all the data things and put over here in cloud. We don't need security. Obviously, the right in the spot. But the forward PE is 139. So to me, it's a show me, meaning this is Russian roulette. Jumping in front of earnings, we feel, is like Russian roulette. We prefer to actually see the company beat and raise guidance, and we'll be looking for the reoccurring revenue. That's something that's really important because, again, we believe their products and services are sticky, and if that's the case, then we may want to enter. I would only enter after we see the numbers, even if they pay a little bit more for it, to have better certainty of where this is going.
Ken makes a great point, Ivana, about it being the strongest sector, especially when you think about the context of there are different things that companies will give up, especially in the face of tariffs and rising costs, but they're clearly not going to give up cybersecurity. And I feel like we already see that playing out given the recovery that CrowdStrike has had. I mean, shares are up more than 50% this year. Do you think that there is strength to come?
So that's right, Diane. I think you're spot on with your observation. Cyber stocks have done particularly well this year, and it's a function of the fact that they're not going to be affected by tariffs and strong fundamentals. So a lot of it, though, is already priced in the stocks. So you have to be very selective, and it's very stock specific. Other areas of B2B technology that we focus on have a little more short-term upside, just given how beaten down they got as part of the tariffs and the data center skepticism. But cybersecurity is a little bit stretched here as a sector.
Can you elaborate a little bit more about where you see other upside beyond cybersecurity then really quickly?
So Diane, we focus on B2B technology, which is very much related to the AI trade, and a lot of the data center companies got very hard hit as part of tariffs. So companies in the semiconductor space like NVIDIA, but also companies in networking and power generation. So we think these two areas offer pretty attractive investment opportunities.
Ken, I want to go back and get your perspective. When you think about that outage that happened last summer, we're almost a year away from that. Just talked about, how shares have done since then. They do have some legal overhang still when you think about the Delta lawsuit. Do you think all of its troubles with regard to that are essentially the rearview mirror?
I think most of it is priced in now. Like Microsoft, they're also a culprit here. Also, they had old systems. I mean, CrowdStrike basically said it's on you. This is your system, and we protect security and so forth. No, I definitely think that's rearview mirror. However, that would come up again. Again, I think most investors can deal with aberrations like this, almost on anything else that comes out of the field. But if it happens again, then it looks like a pattern. So I would say definitely rearview mirror, but don't let it happen again because it looks more like a pattern.
No, I mean, exactly. Don't let it happen again. No one wants to see that happen again. It affected so many different companies. Luckily, our company was unscathed in that, but many companies were not. Ken, quick 30-second final thought on what you'll be looking out for, what you're paying attention to in the cybersecurity space.
Yeah, look, they're the market leaders. They're the go-to. We want to see top line, obviously. We want to see margins increase. We want to see it all. If you're going to pay 140 forward PE, we want to see it all. And I think we may see that. Remember, the Magnificent Seven, we now call it the Sidestep Seven. Those companies that are not about the tariffs in China and supply chains. This is one of those companies that can sidestep some of the headlines because they don't need China, they don't have to go through supply chains, and hopefully we'll hear more about that tonight's earnings.
All right, Ken, thank you. That's Ken Mahoney of Mahoney Asset Management. I'm joined as well by Ivana Dolevska from Spear Invest. Thank you to both of you all. And thank you so much for joining us here on Trading 360. I'm Diane King Hall. Download the free Schwab Network app. It's available in the app.
Back up her again.
24/7 on SchwabNetwork.com. Stay with us. We've got Fast Market up next.
I'm just going to stop playing puts. Now when I'm a perma bull.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and lots of security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad. I have a question for you.
Sure.
Dad.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
So you show a picture of your daughter?
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock
Hugging you?
access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Your family's freaky.
You can trade brilliantly.
We're going to hit that resistance level. The 59.60s and they're now at 13. I hedged a little bit with them, but I don't think I have any mercy on my puts. Not now. Shit.
Volatility starting to big time out there.
I'm eating tacos.
Coming on, we're going to talk about CrowdStrike, which has earnings after the bell today, and then we'll look at Meta Platforms and Constellation Energy, two names in the news this morning about another big nuclear energy.
Go have another one.
Both these stocks, see which ones are moving, which ones aren't. Before I bring in my co-host for today's show, Kevin Green, let's take a look at the four major indices and see what they say
Tito.
at 11 o'clock Chicago time, 12 o'clock Eastern. The S&P 500 up 0.5%, 31 points to 59.66. The NASDAQ 100 up 7
Dow
points,
Jones up 162.
154 points to 21,646. The Dow Jones Industrial Average, we'll call it 0.4%, 159 points to 42,464.
What's that?
And the Russell 2000, the outperform.
Off of that resistance zone.
I had 59.
59.77.50 on ES.
Yeah.
Oh, that's per pound.
Very good. I have 59.68.61 on the SPX.
Yeah, I don't know that. That trend is strong.
Yeah, very.
that 5-minute AMA cloud, and that thing is big green.
I'll be right back.
We've actually only had 3 of this in 2 hours, which is insane. Let's see what the next resistance is. Regular is.
I think I'll have one more. Lulu's up $13. They were talking about that one yesterday. Nothing's really moving right now.
About where yields are. Everything you hear about, oh, bonds, yields working higher. Kev, this is a pretty benign, boring bond market right now. It was movement when the whole market was moving, but it's settled into a pretty tight range here, Kev. Your thoughts?
It's been a pretty good little run right here for the last hour and a half.
I will say, on the other side of that, bond volatility is still elevated compared to historical norms. I think we could agree with that, even though if you're looking at the rates themselves, you are seeing a consolidated range, but it's still a pretty wide range. You're looking at 4% to the downside, let's say 3.9% to the downside, upper end around 4.7%, 4.75%. It's a pretty wide range to digest over the last 5 months, 6 months or so. But I think if we do see a little bit of a calming when it comes to yields, the equity markets will be able to digest that and move forward. The reason why you're concerned about higher yields is obviously credit availability, and the cost of capital goes higher. And if you have elevated rates over time, obviously that's going to impact consumers as well as businesses. And I understand historically, hey, 4.5%, 4.6%, back in my day in the 90s and all that, and I get that. But the rate of change, I think, is a little bit more aggressive than what we have seen in the past. Going from 0% interest rates 3 years ago or so to now at 4.5%. That's just a different regime that I think several different generations are just going to...
What's that?
I said I can't see any reason why SPX don't get to $59.90 or maybe even $6,000 a day.
Oh God. $6,000.
I don't see any resistance until he has $59.90. Would be what? SPX $59.80.
Well, my next one's 59.68.61. If we don't break, if we break this triple top here, it's kind of bearish flag, but I don't know. Right there.
It's testing the top of the resistance zone. So if it breaks 59.78, there ain't nothing left for it to stop it.
Yeah.
There it goes.
I'm about ready to cut my loss here if it keeps it up. Too far out to add.
So yeah, I honestly don't see anything, dude. can't. I'm unresistant.
You're looking at the ES though, right?
Yeah.
Yeah. Yeah, I can see that. Let's see if it breaks it right here.
Maybe this 59.85 level. Which would be a pre-market low from last Thursday. Market, let's see. $59.85.25. Open interest on the 6,000s is over 3,500. Volume's over 22,000.
$59.60s hit 1,700.
Yeah, the 6,000s have gone from 80 to $1.20 in 5 minutes.
Yep. I was getting out of this one here. I got one contract.
Now, if ES comes down and touches this 59.7750 level, that would be a break retest, and I'll get in the 6,000s. I'll just let that one ride the rest of the day. $59.77.50. It was resistance. It should now become support. I think I'll move up to the 59.90. That's strong.
Yep.
It's having trouble even getting back to that resistance zone. I mean support zone.
Job numbers fooled all these fat cats. I was listening to him this morning on CNBC. Microsoft lays off 6,000 employees. Then to come out much better than what they anticipated.
I'm waiting for it to hit this zone ring, then I'm gonna get in a 59.90. If it touches this 59.77.50. That's a clean break retest. My stop loss will be the 63 on the 1 minute.
We're back at that support resistance that I called out earlier, 59.68.61.
We're almost there. There's the touch. Alright. In the 59.90s at 145.
What, the puts?
No, the calls.
Which ones?
The 59.90s at 145.
Oh. Right off the 21.
Boom. Boom. 195. $2. It's $50 a contract on one candle, boys.
There's a dragonfly doji on the 1 minute.
Very nice. Very nice. She's still got some left in her.
currently sitting on the RSI right at 68.7, so approaching overbought. That's just one tool. That's not something you should pay too much attention to. But Kev, I took that expected move of about $32.
I'll be right
Look
back.
where the stock is right now, about $4.85. Kev, the paper money trade I put on, selling the 510, 515 call vertical. So a high probability risk defined, collecting theta call vertical on the upside. We placed that trade in for about 135, trading about 155 now, as the whole market has rallied since this morning. So it's now trading over 155. Do you want to move those strikes up? Maybe you want to. But Kev, looking at a short call vertical, fading that move, daring the stock to get back up where it was a while ago, around the $500 level. Kev, I don't know if it's been up there, actually. Your thoughts on a short call vertical here?
Yeah, that would be an all-time high here. And you're doing this going into the earnings announcement, Kev, so this is a little bit risky, if you will, but it also is risk-defying. And you actually are looking at a pretty decent credit compared to the spread itself. You're getting $135. It's a $5 wide spread. So let's say the credit's about 20% of the width there. So you are getting some decent premium for the potential exposure to the upside. And what you would like to see is a stock closing below that 510 level at the time of expiration here. And if it does kind of rally through, goes above 515, once again, you have a max loss is sitting at around $365. Can't lose any more than that. But you can also manage the trade post the event because obviously we have earnings today. This is expiring on Friday, so you have a couple of days to also kind of work around it in the event that, let's say that the stock doesn't move at all for whatever reason. You're going to have an IV crush, and you can obviously take some profits off the table here. But there's definitely some risk associated with this, just given the primary trend of the upside that we've seen for the stock. But it seems like you're trying to get paid enough for that risk. Once again, having that 20% ratio of credit compared to total spread.
Probability of finishing out of the money right at 72% on the June 6th 510 call. Obviously, you're defining the risk by buying the 515. The risk on the trade is the width of the strikes, $5, minus whatever credit you take in. All right, Kev, let's take our second break of the day. Come back with Landon Swan. He's going to talk about Meta Platforms. Big announcement by them today. Take another 2-minute break. Come back with more Fast Market. See you then, everybody.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
talking to everyone. Kevin Hinks and Kevin Green back for our third segment of the show. Now let's bring in the co-founder of Likefolio.com, Mr. Landon Swan, to the show. He's going to talk about our featured trade today, and that is Meta Platforms, coming off a big announcement. Landon, you've got a lot of data on Meta Platforms and how well they're doing. This is, remember, Microsoft about a year ago coined a deal with Constellation Energy. Now it's Meta doing the same. Is this the large cap tech world just acknowledging that we're going to need a lot more energy than we thought or we have available, and they got to cut deals? They got to stay ahead of the curve here, Landon, and nuclear might be the best way to do it. Your thoughts?
Yeah, I mean, I don't want to get too much into politics, but we've got to get more nuclear going. I mean, it's crazy, the technology that's available to us, and it became a boogeyman, and it shouldn't be. And so I'm glad that we're finally moving in that direction. I mean, some of the estimates out there, like one is that by 2030, data centers are going to be 7.5% of all U.S. electricity, which is the equivalent of 40 million homes. I mean, that's just data centers. And this is only going to continue to grow. Now, I know that Goldman Sachs said that they think that's going to peak around 2026, and then it'll slow down because of efficiencies. But yeah, technology is going to get more and more efficient. It's going to use electricity more efficiently, but our reliance on technology is only going to continue to grow. And as it can do more things, we're going to build more and more tech. And so, yeah, the tech that's there is going to be more efficient, but I think that pie grows much faster than the efficiency grows. And I think that energy consumption is just going to go through the roof. And so we've got to do this. I mean, we've got Meta, Amazon, Google, and obviously Microsoft. They've all joined a pledge to 3x nuclear by 2050. And 3x by 2050 seems like a no-brainer. You got to go more than that, but at least it's something. And you can see that it's not just about feel-good stuff. It's not just about environmental stuff. We need this. There is a bottleneck, and it's power. And so as that realization continues to hit, and the benefits of signing these deals continue to hit for these companies, Microsoft first, now Meta, others are going to continue. And I think it's going to be great for the world, great for the U.S., great for these companies. And so, obviously very bullish on this trend overall, but it's coming from, again, this technology. I mean, if you look at what Meta has built, they have all kinds of opportunities coming up. I mean, on their last call, they talked about 5 different AI opportunities. Better advertising, which is going to lead to more businesses, advertising with them. They envision a world where businesses can say, this is what we need, basically just in human language, and then the AI goes and builds campaigns for them, including visuals, video, media, optimizes it, just takes it from there, right? There's going to be better content recommendations as AI starts to learn what gets more clicks, more reviews, more saves, more shares. And actually another one that's kind of interesting is as businesses adopt messaging, and we expect all kinds of businesses to start using AI for messaging. WhatsApp, Messenger, Instagram DMs are going to be used more heavily by businesses. Obviously, that's a big opportunity for Meta. Their AI assistants already got 1 billion monthly active users. They're not really monetizing that yet, but they will. As people get more and more reliant on it, it's going to be able to either push people towards different products or advertising, or they can start charging people as it gets more and more useful. And then, of course, the AI devices. I think this is a bit of a sleeper. We're talking about like glasses here, things like that. I think it's a sleeper because the first, couple iterations that we've seen over the last 5 or 6 years were goofy, and nobody really wanted to wear them, and it's like, that's not great. But as that camera gets smaller and smaller, and you can't tell the difference between normal glasses and those glasses, and people can see things in their glasses that you can't, I really think that one's going to be kind of a sleeper hit that people don't see coming, and Meta's on top of it. I would say that they failed early on it, but they're the leader, and they're going to be the leader when it becomes a thing. And so between all of those, plus their Llama program, which is an open source AI that's competing with OpenAI, it's very attractive to a lot of businesses because the businesses own their own data. They install the software on their servers. and they can, actually don't have to worry about API kits and sharing the data with OpenAI. They own it. They've got a lot of opportunity there, and you can see the platform, growing tremendously, tripling over like the last year and a half or so. They've got a lot of good things in the works, Meta does, and it all requires a ton of power, and they're not the only ones. And so this deal makes sense. There's going to be a lot more coming soon, I think.
Landon, what do you think is one of the biggest risks for Meta over the next 6 to 12 months? Obviously, you talked about a lot of the positives, the product offerings, managing the power, artificial intelligence, but what's some of the risk around this name that kind of, I wouldn't say keeps you up at night, but maybe a little bit of a concern for you?
Yeah, I'd say the main thing is that they don't invest enough into technology. I don't see them doing that, but if they did that, that's how they lose. If they, again, this is not the path that they're on, but if for some reason management decided that they've got so many users and they're going to make sure they squeeze every drop out of the advertising, and they don't really worry too much about technology, then I think that's the big risk for them, that someone's going to beat them to it. That seems to be the opposite of their game plan right now. And so I think really probably one of the biggest risks that they have, given that they're very tech forward, is lack of power, and they've just mitigated that. So I don't see a ton of risk right now going forward because they've got that user base. And what we're going to see over the next 6 to 24 months is software is going to become sort of dime a dozen. Everyone's going to be able to make incredible software. The advancements in AI development are incredible. It's unbelievable how quickly you can develop things. So what they have as far as software as a software lead is going to become less and less relevant, and it's going to be more about distribution. That's why companies like Walmart are going to win. They've got the distribution. While on the tech side, companies like Meta are going to win because they have the distribution. Yeah, you can build a better Instagram, you can build a better Facebook, but it doesn't matter if nobody's using it, and they've got the lead. So, even if someone does build something that's better, they can, just improve theirs and distribute it to all of their billions of users, and the competition's instantly squashed. So, right now, the risks that I see, they're not falling into those traps, and so I'm actually pretty bullish on the way they're handling this.
I just worry, Landon, and I'm interested to know your thoughts. Remember, they just raised CapEx on AI spending, and now here comes another big ticket item, energy. Now, we knew they were going to need energy all along, and they actually may be doing the least expensive form of energy going forward. But at some point, is this CapEx going to become restricted to them? It's a lot of dough they pay out, not only for AI and the servers, but now the energy component. And at some point, are they going to be able to monetize this big of a price tag?
I think they will, but I think honestly, if they don't do this, it's a one-way path to failure. They have to compete on technology. They have to they have to compete with AI because everybody else is. It's an arms race. They've got a huge lead, and there's going to be people coming for them. So I think they have to spend like this. So actually, I'm actually encouraged. I understand the threat. I understand the potential problems. But it seems like the absolute best business decision. You've got to be aggressive, and you've got to keep that lead that they've got. Again, I think I've talked about Meta a year and a half, 2 years ago, and I was kind of neutral on them because I wasn't sure if they were going to be complacent with the lead that they had, or if they were going to continue to invest in technology. All of those fears have clearly been answered, and so yes, it's a big number, but when you're this big, you have the ability to make aggressive bets, and I can't tell you how bullish I am on just AI in general. And so the fact that they're betting big on that with this power play and all of the technology improvements that they're going forward, I know they're going to be one of the winners.
I really like the fact that they're using AI to streamline the advertising, right? Because remember, that's their revenue. If they can make that more efficient and better and a better experience for the users, now you're talking about things that actually bring in money or potentially more money or draw in more advertisers. I think there's a lot of competition for advertising where people are putting is more and more people move away from linear and towards streaming. Landon Swan, we appreciate you coming on as always and bringing the knowledge about meta platforms. This is a big day for them and a big topic, I think. Thanks for coming on, Landon.
Absolutely. Thank you, Kevin.
All right, Kev Green, you got a paper money trade for us in meta platforms. What do you got for us?
Yeah, I mean, if you look at the chart, obviously it's been to the upside here. We are seeing a attempted breakout of that $670 level, and we did have some areas of support sitting at around that 630. And so if we continue to see that trend, I'm actually looking at selling a put spread here, Kev, selling the 630, buying the 625, doing this for the June 20th expiration, getting a 75-cent credit on this, so the max profit for this trade, $75, max loss up to $425 with a break-even point at $629.25. This is just, once again, capitalizing on the higher implied volatility here, it's bullish to neutral strategy here, and then also leveraging some of those technicals to kind of get you an area where maybe some buyers really do step in. And if it gets down to that 630-ish level, then you can manage a trade from there. But this is really just trying to scalp some premium as the stock continues to get a lot of enthusiasm and buying activity coming from investors and traders over the last couple of weeks.
Going out 17 days, selling the June 30, June 20, 630, 625 put vertical. The June 30 put, an 82% chance of finishing out of the money. The trade-off there is you collect a little bit less premium, right? You're outside the expected move, but some people will say this is a way to control risk, is to move outside that one standard deviation expected move. Sure, you collect less premium, but the percentages of winners go up. Kev, your thoughts on the trade-off between more premium and a higher probability of finishing out of the money?
Yeah, it depends on the stock that you're trading, and I think you actually had a really decent example previously when it comes to CrowdStrike. You're willing to take a little bit more of a premium in because of the perceived level of resistance that the stock could have. This is kind of the same situation. I see a lot of gaps below here that could be tested or filled, but there is a support line sitting at that 630 level. So I'm going to go with the technicals first and then align the strikes with them. And unfortunately, yeah, there's not going to be a lot of premium coming in for this trade, but feel a little bit better that the technical structure could hold up in the event that we have a pullback. And then once again, you have the flexibility here of adjusting the trade if you need to do so. But I always let the technicals guide me to the strikes, Kev. So it just kind of just depends on risk reward at this point.
The June 20th, 630, 625 put vertical, the risk on this trade, the width of the strikes, in this case $5, minus whatever credits you take in. If it's 75 cents, then your risk is $425. Like I said, an 82% chance of finishing out of the money. All right, Kev, let's take our final break of the show, come back with a market update, and then George Tillis, Kevin, and I will talk about the beneficiary of Meta Platforms purchase today, and that's Constellation Energy. Take our final 2-minute break. Come back with more Fast Market. It's going to be a good one coming up next. See you in a couple minutes, everybody.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market, everyone. Kevin Heaps and Kevin Green now back for our final segment. Before we bring in George Tillis live from Salt Lake City, Utah, let's do a quick market update. As we get to the bottom of the hour here, the S&P 500 now up 0.5%, rallying here as we get through the show, up 37, almost 38 points to 59.74. The NASDAQ 100 up 15/16%, 200 points to 21,692. Dow Jones Industrial Average still up 0.4%, 175 points to 42,480. And the Russell 2000 backing off ever slightly. Up 1.5%, almost 32 points to 2101. Let's call it 2102. Now let's bring in live from Salt Lake City, Utah, Mr. George Tillis. He's going to talk about our final paper money trade of the day, and that is Constellation Energy. George, this stock traded as high as 342. It's now 316. How could it? It just signed a 20-year deal. Its second big deal. First it was Microsoft about a year ago. Now Meta Platforms. Nuclear looks like it's getting slowly but surely more in favor. George, is it worth it to look at a company like Constellation Energy? Your thoughts on this name?
Well, I think it's worth looking into. I mean, I was just looking at the pre-market. It actually ticked to about $362 in the pre-market. So we're seeing obviously a pretty dramatic decline from those initial reactionary pops in price for Constellation. And I think this is certainly a big deal for Constellation, which is one of the larger power production and natural gas utility companies out there. They bought Calpine, which adds to their prowess and exposure to the nuclear energy realm of the supply chain for electricity in our country. I think the aspect behind the electricity business, and this is why I think nuclear is really pretty prominent, is probably going to be more prominent, is the supply of electricity just can't keep up with the demand. You have to think about traditionally either coal or natural gas fired electricity plants. They require a lot of transmission infrastructure, right-of-way infrastructure. And producing and manufacturing new utility plants is very cumbersome, and there's a lot of regulatory red tape getting around it. So nuclear power essentially can increase the yield of electricity production without increasing the total capital expenditure and footprint for new power plants. And I think this is an area that's very interesting, and I think this is why we're seeing some pretty pronounced movements in companies like Constellation and Vistra Energy, which is an independent power producer out of Texas. And nonetheless, this is certainly a secure deal, at least when we see what we see right now from an information standpoint. We don't have the financial, projections here for this deal, this 20-year deal with Meta Platforms and Constellation. But nonetheless, it's a purchase power agreement. And these purchase power agreements are done through four major commercial customers, which actually have a different pricing structure than the utilities and electricity sold to households. This is essentially at the margin what these utility companies are going to be looking for to increase their profitability, because they can't necessarily increase the rates on a whim when it comes down to the households. They have to go through public utility commissions, and there's a lot of regulatory red tape to approve an increase in rates to the households. But the commercial side, especially the power production agreements, these rates can be quite a bit higher than what they charge households. And I think this is why we're seeing a lot of movement of utilities to help subsidize households to increase solar on site for households, while they start moving their pricing structures towards major hyperscalers in this case, which demand tremendous amounts of electricity because of artificial intelligence in these data centers.
George, can you kind of break down the difference between a Constellation and maybe like an Oklo or a NuScale SMR? It seems like everybody kind of throws them in the same buckets, but they're not the same. So can you kind of give us a really quick breakdown of why Constellation is a little bit different than those other two?
Very much different. It's a great point to bring up, because those other names like NuScale and Oklo are essentially modular on-site nuclear reactors that are mobile. These are not companies that are generating their own electricity through core utilities and transmission grids. But a lot of those other names, like Oklo, they're still in their development and regulatory approval phase. They haven't generated any revenue. So that's important to keep in mind here if you're looking to play the power area of artificial intelligence or electricity area. That Constellation is a traditional utility company. They have a tremendous amount of infrastructure built out, number of customers, to the millions, plus, positive free cash flows and revenues. Adding at the margin, these higher price purchase power agreements just adds more revenue streams to Constellation without much additional cost. So that's quite a bit more profitable than what we see with Oklo and the other names, which have been moving in sympathy, by the way, with companies like NVIDIA from a semiconductor architecture standpoint, but also Constellation and Vistra Energy, which is an independent power producer that sells marginal supply contracts to major demand customers like Meta Platforms or Google or Microsoft, for that matter. So, yeah, Constellation is a traditional utility, and so they have the regulatory requirements that they're capped in terms of their pricing, but at the same time, regulation for utilities means they're regulated into profits. So that's important to keep in mind. But this is quite volatile, I have to say, for a utility company. I mean, just consider the movement from the pre-market to where we're at right now. That's double-digit percent, increases and decreases in a matter of, an hour or two. But nonetheless, this is a company that does have revenues, cash flows, and positive profits.
George, it's an amazing story. And,
yeah.
Microsoft, remember, a year ago did a similar 20-year deal with Constellation Energy for 3 Mile Island. That was a 20-year deal. That's in Pennsylvania. This one's in Clinton, Illinois. It's just an incredible story, and it's got to be setting the tone for more deals in the future. So Constellation Energy, certainly something we should be paying attention to. George Tillis, thanks for coming on, as always, spending some time with us. Have a great day, George. All right, Kevin Green, the paper money trade, we looked at something. Now, we've done a short put vertical, short call vertical today. This one, we're looking at something in the call calendar spread family. Going out to the June 27th, buying the 350 call, and then selling this week's 350 call. The stock has backed off. That's now $35 higher. The expected move, only about $15 this week. If you go all the way out to the 27th, it's about $30. So this stock has moved down considerably. We originally put this trading about $4.65. It's trading about $4.35 now, Kev. But this gives you that calendar spread, chances to extend duration on this trade and chip away at the net debit. Kev, your thoughts? We got about 2 minutes. Your thoughts on a 3-week call calendar trading about $4.10 now.
Yeah, you're obviously leveraging the short-dated call in order to reduce the premium for the longer-dated. So you do not want to see any type of really aggressive price action to the upside in the near term here. But this also, if it goes in your favor, the stock say is trading around 350 at the time of expiration on that short call. It allows you to get a little bit more upside exposure, and is once again kind of neutral and bullish. So leveraging the IV, a little bit tactical when it comes to positioning, and rightfully so. It's a very volatile stock.
Yeah, you are buying currently in the June 27th about a 48 vol, selling this week about a 63 vol. But like I said, you can roll into the June 13th. You can also roll into the June 20th expiration. Each time, chipping away at that net debit. Now, maybe, based on the stock selling off, do you want to adjust those strike prices? Yes, you can. You can look at it. Using the risk profile is a good way to do that. Test these out and see where they look. If you're visual, using that risk profile is always a good thing to do for giving you the Greeks, judging the risk, things like that. But this is a risk-defined strategy. Buying the June 27th 350 call, selling this week's June 6th 350 call. Spending, like I said, it's moving around a lot, somewhere around $4.40 now. All right, that's our show for today. I want to thank Kevin Green for hanging out with us for the entire hour. Also thank Landon Swine, George Tillis for hanging out with us. For all of us here at the Schwab Network, have a great day and a great afternoon. Next Gen Investing coming up next with Alex Coffey and Jenny Horn. Have a great day, everybody.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, just like yesterday, it's very interesting how these low pre-market activities have turned into pretty decent sessions, although today definitely firming up more than around this noon hour here in Chicago. So even more strength today right now as it stands. But I have to say, Kevin Hanks called this because this morning when we were lower, he was like, well, wait till we open because it seems like these moves to the downsides aren't holding.
Well, we've been kind of in a range. I don't know if the team can pull up maybe like a 5-day, 15-minute chart of the S&P 500, but what you'll see is really sideways and an attempt finally to break out of that range. So when I look at the S&P 500 now up, 40 or so points, it's impressive, especially given the fact that overnight you saw futures kind of break back into that chop range. Where if you look at, kind of where the price would have been, let's call it maybe 5,900 to about 5,915, where we've kind of grinded and spent a lot of the last weekend. You can see that finally getting out of that range in that chart that we have there. So impressive. The big question mark has been, was this break going to be to the upside or to the downside? There were moments on Friday in particular where it looked like it might be to the downside, but able to weather that storm, post the economic data, and then move higher here now. So good first step. I mean, the only way we're going to get to all-time highs was to break up to the upside here, and so just closing in now on 6K, another 25 points, and then not too far from there to, you could say reasonably 1 or 2 more days like this, and we're flirting with new all-time highs.
I know another failed move to the downside, another nice green session, and we will be looking at levels that we haven't seen in quite some time, or ever, I guess, essentially at all-time highs. But as always on this show, we'll step away from the overall markets, although we have some movers that are obviously linked to the overall market. We'll kick things off here with some things you should have on your radar today. We'll be diving more into some charts and trades than we're looking at 2 names with earnings still ahead, and we'll also be discussing for FOMO today, Constellation Energy, which is an amazing one because we were up so substantially this morning, then fell actually. Now we are slightly higher, but signing a 20-year nuclear deal with Meta Platforms. We'll also be looking at the overall DraftKings and sports betting space, as one analyst says shares of DraftKings, while underperforming, have remained attractive. And we'll close things out with HPE ahead of their earnings out after the close. So in that key software space, we'll have to see if they're going to perform, obviously different companies, more like their counterpart HPQ, or see some upside, because HPQ got crushed on the back of its earnings last week.
Yeah, HPE, at least software, and a lot of the software names have done okay.
True.
But yeah, obviously, kind of a legacy tech firm, so we'll see if it's been able to kind of transition the same way others within that space have. I'm really excited for the sports betting conversation, so we'll welcome in that guest later on from Morningstar to have that discussion. Well, let's get to some of our movers, though. All week long, it's sort of built up, I guess, all week long. I mean, the last 2 days.
It's been a long week.
Yeah, on Friday as well, we started looking ahead to this week. All the chatter was, hey, Dollar General, value, consumables, staples, serving rural areas, recipe for success. And it looks like all the analysts largely had this one tabbed for successful quarter.
Yeah, and I do know that there was some degree of will they be able even to clear this low bar, because they're undergoing right now a pretty massive turnaround strategy, which can be expensive, frankly, in an already expensive operating environment. But obviously, based on today's move, they pleased those that were still enthused in Dollar General, those who held on to the volatility, because this name has not looked too sharp on a more long-term basis. But jumping today, really leading a lot of the S&P 500 gainers after seeing better than expected first quarter results and lifting now its full year outlook. So we did see a comfortable bump from a year ago, also an easy beat as far as the consensus was concerned, and their CEO did say they are uniquely well positioned to serve their customer in a variety of economic environments, noting they actually gained market share growth across merchandise categories in both their core customer base as well as these trade-in customers. So outlook was lifted from what they laid out last quarter. They did also say that right now they have plans in place to mitigate higher tariffs, which is encouraging. And also, we still have Dollar Tree ahead, but so far it does seem like the true discount, the legacy of the dollar stores, although I know nothing is a dollar anymore, are somewhat in a league of their own versus then your discount names, like a Five Below, for example.
Yeah, I don't even look at Dollar General in the same camp as those stores, just because, I mean, it's kind of grocery items serving rural communities. I almost see this more like a Casey's gas station or something like that serves suburbs, but in more rural communities. So hard to make the comparison. And because it is so much more consumable items, so much more staple items, and the lower end on that value scale in terms of price point, it is going to be in more of a position to act more resiliently. Now, the Dollar Trees, I mean, you're talking very discretionary, low-priced items. Five Below, we had a guest on yesterday, was kind of going through that, which is, maybe looking for more of the teen sort of in the toy market, maybe on a slightly higher price point. But hard to compare these companies across the board, even though they all are sort of on that low end of how much you're going to spend. But same-store sales growing. despite the efforts to turn the store around, they're still growing, even though there's probably distraction. Gross margins expanded despite the fact that they're working on some of those things, cleaning up the stores, and the fact that they're still planning to expand stores. This place has so many stores, and they're still planning to open 590 new stores amongst their 2,000 remodels just in this fiscal year. So this is the name of the game alongside Walmart when it comes to scale.
I'm pretty sure they have like 20,000 and like 600. It's just over 20,000 locations.
It's the most, right?
It's the most, yes, of like a store of their footprint, which is why it's so critical. I feel like it gives such a good read on a consumer that is oftentimes not as important, perhaps, to at least like.
And to the point too, 80% of the stores are located in towns with 20,000 or fewer people. So it really does meet a market that's very different than, let's say, even a Walgreens or a CVS. And I know they got the pharmacy business, but you think about how those stores sort of act in urban communities. That sort of Dollar General outside the pharmaceutical stuff, how they're acting more in the rural communities.
Yeah, and a great point there, because again, I feel like I know that most of the spending we watch as far as like metrics come from a very niche echelon of people, but then the vast majority of Americans are familiar with Dollar General. So I always think it's such a great read on that mid or rural size consumer. So next name today though also is taking me out to the suburbs a bit. That is Signet, which does have the brands Zales as well as Jared. So I just tend to think of malls, but having a nice day today, up almost 10% after we saw quarterly results beating forecasts, also raising its full year guidance. So adjusted earnings at $1.18 per share did come in better than expected. Revenue also climbed 2% year over year, and they slightly raised their guidance for their fiscal year ending next January. Also, this reflects this acceleration in the company's share repurchase program. Year to date, they did say they bought back more than 5% of those outstanding shares. I think that some of their commentary, though, was so interesting, because this is just honestly a world I'm not too familiar with. But they did note that right now they are looking to move production further out of China to offset these tariffs. They currently import products in the high single digits range from China, so they're looking to hopefully change the production landscape, move more into the various regions like India, for example, which they've already begun doing. They did also say that they are doing quite well on the lab-grown diamond industry because of those lab-grown diamonds being so much cheaper than the traditional diamonds. They're able to right now raise prices while consumers are still willing to pay for it, which is interesting.
Yeah, this was a pretty strong report across the board. I mean, if you look at both North America beating on same-store sale estimates and international really beating the same-store sale estimates, it goes to show that it's not one market or the other that's shining. And obviously margin expansion shows with a really tremendous EPS beat. I know the guidance was pretty strong as well, but this is just a really good quarter from a company that probably doesn't have as many eyes on it from a publicly traded standpoint as some of the others that we talk about. So when they do surprise, they get their time in the sun. They're getting rewarded for it today.
They absolutely are, yeah. Name I haven't looked at, I feel like, since the last time they reported earnings. But hey, nice move today, and hopefully eating away at some of the losses on the year. Our next name today, though, is totally a shift of gears. Taiwan Semiconductor, as Barclays did raise its price target to 240 from 215 with an overweight rating, saying that the scope for upside in advanced logic remains, but downside risk is still in memory now in 2026. They did also highlight that after the shareholder meeting that Taiwan Semiconductor said U.S. tariffs were having some impact on the company, but to quote, their CEO said tariffs do have some impact, but not directly. That's because tariffs are imposed on importers, not exporters. They are, of course, an exporter. However, they did note tariffs can lead to higher prices. And, of course, when prices go up, demand could go down. So just, economics 101 for you there. Now, Street right now is still very much enthusiastic on Taiwan Semi. There's 18 buys, 1 hold, no bears. But I do think it's also interesting of the group of similar peers in the semiconductor AI space. This name actually trades right now at a forward PE of just shy of 21 times. So that's cheap. I mean, it's not cheap for the rest of the market, but just given historical levels and given the way it's cheaper than NVIDIA, AMD, Texas Instruments, ASML, Broadcom, all on a forward basis, would make the argument that right now shares are relatively cheaper valued on a forward-looking basis.
Yeah, it's interesting because the average price target, though, of those analysts that cover it, even though they're overwhelmingly bullish, is about $216 a share. which implies less than 10% upside. So certainly they are bullish in rating, but not necessarily in how much upside that they see possible. You did, of course, go through that Barclays note 240. The price target implies quite a bit of upside, and then Susquehanna just recently updated their note about a month ago. They have a 250 price target, Bernstein 251. So there are some bulls that have higher price targets, but for the most part, 215, 216 is where the bulk of the analysts end up.
Yeah, that is interesting that, despite all that conviction, and I felt like a lack of analysts, just given how big of a name this is, but hey, still getting some nice news today from the sell side. Last name today, though, is Pinterest, which I know is an Alex Coffey favorite. Now, JP Morgan with an upgrade today to overweight from neutral. Price target raised by $5 a share to $40, which would actually put it smack dab in the middle of the average, which does imply some upside from where we're currently trading at $33.26 a share. But they did note, JP Morgan analysts, that while Pinterest shares have outperformed year to date, they do still remain down about 18% from the February market highs. They also believe the company has made progress across its 2023 Investor Day priorities to grow its users and deepen its engagement as well as improve its monetization. And they believe Pinterest is leveraging its full funnel advertising approach and automation capabilities to capture that greater right now share of ad spending among the next tranche of advertisers. So given all of this, they said in its lukewarm positioning, they actually see risk and reward perhaps now as a bit more favorable.
This is another example of, we talked about this a couple times, I'm not sure if it's always been on NextGen or other programs that I've been on, but something as simple as like a 1 week moving average relative to a 1 month moving average, when they cross, and the shorter dated one is below the longer one, it can indicate kind of a trend shift. If you were to just use that in EMAs on this particular name, it would have gotten you out around late February, early March in the mid 30s, and it wouldn't have gotten you back in until 26, 27 on the way back up. So it goes to show sometimes just sifting through the noise and using some of these indicators to kind of help make some sense of these big moves, because this stock has certainly been volatile this year alongside the overall market, can make things easier. Doesn't mean it's always going to work, but that alone, and it worked for the market this time around as well, could have got you out, saved you some money on the way down, got you back in at lower prices than we are now.
And especially for a name like Pinterest, I know you mentioned this with the volatility, but a name that has not been able to see its highs now, and we're not even anywhere close to the highs in this name, which were just shy of $90 a share. So it's been a volatile ride, especially I think the importance of analyzing different time frames is huge there. But actually, not to steal our next segment, Thunder, we'll be diving more into the charts coming up next. We'll be looking at CrowdStrike ahead of its earnings out after the close today, as well as Dollar Tree, following Dollar General this morning, which releases earnings tomorrow morning.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master. Today we are talking CrowdStrike ahead of earnings out after the close, as well as Dollar Tree. I'm going to try not to say Dollar General 100 times, as they have earnings out tomorrow morning, as we had Dollar General this morning. So joining us is Rick Ducat, our Chart Master. Rick, we'll start off with the name that reports first, of course, CrowdStrike, which did, I believe, touch new all-time highs today. We definitely touched them yesterday, yeah, but I believe now another all-time high today. I mean, the company that continues to surprise and really show momentum. I hope earnings are strong because they have a high bar set forth here.
Yes, and on pace for a new closing high today as well. We'll have to wait and see where that winds up, or if it indeed hangs on. But for now, it's looking like a fairly interesting setup for the bullish crowd here. We can backtrack a little bit and see that our previous set of highs came in near 455.59. From there, we had our W-shaped recovery here, and we held the line at this level near 309, which represents a high point before we had a gap up. So we held on to a significant support area before rallying and taking out the old highs. Now we can see that once again, this measure of support has held. We can see that we bottomed out recently near that same 455, 456 level. Now we are continuing to the upside. However, earnings could be a major potential catalyst here. It could really rewrite the story. So, as always, it's important to keep an eye on when these earnings events are and what could happen for your particular trading strategy here. The momentum as we head into earnings, though, actually looks fairly strong. Oftentimes, momentum slows when a stock approaches a known event risk situation like earnings. In this case, we are, for the most part, moving upward. I can't tell right at this moment if we're making a new high on the RSI. It's like right on the nose here. But what you would want to see would be the RSI to make a new relative high along with price, and perhaps even close in that overbought area here. That would be a sign of strength heading into earnings.
My big concern here is, I mean, we were talking about all the analyst notes yesterday, but that there's just such a now high valuation on a forward basis. I know that the growth has been there, but there's going to be some pretty big shoes to fill when you have this strong price and this obviously high of a valuation. So again, when we're watching big picture into this print day after the close, what are you keeping on your radar?
I guess my response to that would be just because something is high doesn't mean it can't go higher. Maybe it might not make sense in the short term, but it can still happen, and you don't want to be caught unawares in an adverse move here. So if we were to move higher, we don't really have prior price action to gauge where we might look for potential resistance. One study we can use is standard deviation channels. We take our linear regression line, our line of best fit, which is our solid blue line here. Then we could take one standard deviation to the upside. That's about where we have topped out recently. Two standard deviations.
Hello.
Feel better now?
Yeah, I think I have a bad case of hemorrhoids. Or something. Took a big old shower.
He says, as I sit here and enjoy my big plate of watermelon.
Okay, well, I definitely took a loss in the yeah, I didn't want to say it, but I made a chunk in the calls, 59.60s, and the 59.80s. They just got too far out of. Yeah, it's strong. I did a toilet trade. They don't do that very often. I'm gonna make a cup of coffee right now. See if that'll help. So sorry about that room. I just don't have it today.
We got some back on those calls.
Yeah. New high.
That's interesting.
Oh yeah.
Okay, now I just found the price level on ES that I missed because I wasn't looking at 30-minute. 59.93.50 on the ES. Need to watch that.
The way this sucker's going, you could get it all the way past your $6,000.
I know, but if you're looking for a pullback, watch this 59.93.50 level.
I think some guy on Schwab called 6,000 last week. I need one of you girls to rub my butt for me. Rose said no. Go on. Don't you want me to feel better? Michelle.
Our +2 standard deviation channel, just above current price right now near 97. Volume picks up once again up here near 106, 107. And then ultimately our red line here, 109, represents some old highs that we saw. So really that would be a significant mark to get above too, but pretty far above current price for now.
Yeah, and I mean, I guess we could see, obviously anything could happen on earnings, and you know, the important thing is never underestimate the volatility of these moves. But really great insight on two names that we have to look forward to. As I say, it's always earnings season if you are a believer, Educator chart master. And now we look to trade Dollar Tree, and I do think that, again, given the fact that we got a pretty stellar report from its most closely linked peer, that's huge. But it's all about how you frame these earnings calls. As we've known from time and time again in retail this quarter, you need positive sentiment, you need raised guidance, and you also need, like, basically to completely reject the idea of tariffs weighing on your business model.
Yeah, and it's also just hard to compare the companies despite the fact that we always try to. But nonetheless, if you're bullish this strategy or this particular stock, you're looking at the move that it's making already and you want to be neutral bullish as a result, you can do it based off of strike selection, based off of support levels or what you think might happen. But sometimes it can make sense just to do it based off the pricing of the strategy. And so in this case, expiring at the end of the week, I looked at a $3 wide spread and I wanted to find an example.
As of now, the 21 support
thereabouts on that spread, because that creates a 2-to-1 risk reward.
SMCI, NVIDIA couldn't break resistance. We've been hovering around resistance levels for a bit here.
Inverted hammer on the 2-minute. We're going to come down a little bit.
Well, we're squeezing right between the 21 and the 9 right now, so if that 21 doesn't hold.
Yeah, I see that.
On the 2-minute.
But that was an ugly inverted hammer last candle. There was no wick on the bottom.
Well, yeah. One before that's uglier.
Sorry, I got watermelon stuck in my damn throat.
Okay, we're at the 21 now on your /ES on the 1 minute. Or 63.
Are we?
Yep. So this is.
Oh yeah, we are.
Got to hold.
We'll try 59.90 right here.
Well, that last put I did was not a good one. Not smart. You going for the call, 59.90s?
Mm-hmm.
I'll wait till it breaks to 21. Now really it's only $1 if it does.
I mean, 165 and the contract's $2 right now.
Yep. I'll be right back. I'm gonna get my coffee going.
Interesting when you talk about FOMO trade. I had one investor over the last year or so telling me that
FOMO trade
are bringing sexy back, and that is really because of this sort of broader AI trade that we're seeing, these secondary effects. And really this speaks to what we're seeing between Meta and Constellation right now, sort of partnering up now to really power all the energy demand that they need for all the AI. So it has been certainly an interesting performance as far as the stock is concerned today, but really this is part of a broader trend that we are seeing in this space. Now, it is the first for Meta as far as this deal is concerned, and there has been some suggestion and chatter out there in the market that perhaps it isn't the last, that maybe this could be just a part of a broader strategy, but no doubt this is not the first time for Constellation, remembering that we have heard this company has been partnering up also with the likes of Microsoft to power their data centers as well. So this is certainly part of a broader trend. What this news very much ensures now is to really lock in that power for all that data center demand on the tech side, but also to keep these power plants running, because there have been some suggestion that this particular one at Constellation Energy was going to face a shutdown. So certainly an interesting
Sound like she said Meta.
That is very much a focus, very much for investors at the moment. As I said, not a surprise really, this news, but we do need to, of course, lock in that power for all that AI demand, but it is really, I suppose, the market
got a couple dojis now after that.
These deals are happening.
Tweezer bottom.
To the market at the moment, guys.
I could not agree more, and I think that
good
also
job.
the speed in which, or lack thereof, maybe, in which they actually come to fruition, it does feel like we are still a bit of ways away from actually like utilizing all of this energy and this power, but it still has been definitely a fascinating part, a huge part of the AI stories, the nuclear and the renewable energy companies that are chasing some of that coveted market share. But we so appreciate that insight, and thank you so much for joining us today.
Had a $15 run.
Here at the Schwab Network. And now, Alex, as we look to
16.
Trade a name like Constellation Energy, I have to say this name was really, at the end of last year, something that we talked about probably once or twice or 3 times a week. It was basically a daily recurrence. Now it's somewhat fallen off with given just everything else going on, but we actually held in quite well on the year. We're up almost 40% now year to date, which I just hadn't realized how well this name has come back.
Yeah, the 1 week moving average around 310, 1 month moving average on an EMA front around 287. So that goes to show that sort of indicator we were just talking about, where the shorter term upward sloping is above the longer term upward sloping, suggests an uptrend. And even with this pullback we're seeing today, it kind of goes right back to that 1 week EMA, which could suggest a reasonable place for this name to potentially find support amongst this uptrend. So huge moves, obviously, possible with this name. And since it's our FOMO segment, Jenny, I thought for our example trade, we would look at something, defined risk, but that could really benefit greatly if it did make a move, let's say, back towards all-time highs, as that would be sort of what our target for this strategy would be. What I looked at was a 350 call counter. The all-time high in this stock, at least, let's call it year-to-date high, if it is an all-time high, is 352. And so that would correspond pretty nicely with that 350 call calendar. Selling the June 13th, that's not this Friday, that's next. Buying the June 20th 350 call, that's the June monthly, which is 2.5 weeks from now. Looking to spend somewhere around $1.25 on this trade.
Yep.
The debit spent is going to be your risk. So if you did get this for $1.25, that would mean $125. The risk profile is a mountaintop-like shape and basically peaks out at whatever the strike selected is. And so in this particular case, Jenny, the 350 strike was selected. It's FOMO, your fear of missing out to the upside. Big news, obviously, with this Meta story. A lot of optimism in this space right now, so it's the bullish version of this. And then the target selected close to those all-time highs, as I suggested earlier. So hyper customizable as long as there's strikes available. A trader could
got a dragonfly on the one before this one. That's kind of bullish.
Time frame and potential target for the name, but you got to be right with this one. You'll notice that mountaintop has it
there
down
goes
on the backside too, so you can overshoot.
Is that dragonfly?
Lose money on a bullish strategy. Say this stock went to like 450 in a really short amount of time. It could overshoot your strikes as well. So something to note, although it's a bullish strategy, it's more of a throwing a dart strategy, and that dart's being thrown near those all-time highs.
Yeah, this name has been, all over the place today. As I said, it traded, well above where we are currently looking at around $363 a share. Now we're at $316, $317 we'll call it. But definitely even today, seeing that volatility, so always good to be mindful of that risk, of course, when looking at example trades. Now we'll leave it there, but coming up next, time to discuss the latest with job cuts, as we're seeing Microsoft as well as Disney announcing several hundred of layoffs across their companies. We'll also be discussing the sport gaming
good deal.
outlook, as right now we do still have NBA playoffs. We have a lot of sports to parse through, but also DraftKings, how they're benefiting from.
I forgot what Kramer was kind of referring that these layoffs as AI, dead meat. Not dead meat, but he had another word for it. Now, I don't know about Disney. I'm boycotting Disney anyway, so I don't really care. I was at Disney World right after the Rodney King thingamajigger. In California. I thought it was pretty cool. But I don't know if I'd think the same now if I went.
Yeah, I would never go to Disneyland. I only go to Disney World.
Yeah. Is it Disneyland or Disney World in
Disney World.
Anaheim?
Disney World's in Florida.
Yeah.
Disneyland is
Whether
in
you're an
California.
experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live
The
or
2-minute chart
on
is
demand.
pulling.
Head over to schwab.com/coaching and start learning today.
Pulling in and sitting up to 21 now.
Yeah, I think those dojis were a shakeout.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on
The weaker hands, you know, getting out of it.
anywhere, any device.
Yeah, no, I recognize that. 2-minute.
Welcome back to Next Gen Investing. It's now time to discuss the latest with some major corporations and layoffs. And here to join us now to discuss more on this is Diane King Hall, the host of Morning Movers. We will start off here with, we can start anywhere you want, Diane, but Microsoft, I was just doing some quick math because I saw 300 jobs that were added to I know the 6,000 were previously announced, but it's still a very, very small portion of their near 230,000 workforce. So not to say that those jobs aren't critical and those that have been laid off, if it's not a horrible experience, but it's also perspective because this is a massive company.
Yeah, I mean, for both Microsoft and Disney, both of these massive companies, but on a percentage basis, it is a smaller percentage of their workforce. So hundreds of jobs on the chopping block at Microsoft and at Disney. We'll start out with the latest at Microsoft. This is obviously a smaller reduction in force compared to their
65.
previous, as you mentioned, the thousands of layoffs previously. But in this most recent round, this according to multiple reports, it's about a few hundred workers, more than 300 workers, whose jobs were affected and eliminated as of Monday. The job roles range a variety of verticals, including software engineering, marketing, product management, legal, and research science. As you mentioned, this is the latest in a series. It comes on top of the 6,000 job cuts that were announced last month. As you know, Microsoft's been shifting and adjusting its workforce to align with different priorities. And you've seen this overall strategic shift towards AI. Companies like Microsoft investing heavily in artificial intelligence, reallocating resources around those more AI-focused roles while using those tools to also boost productivity. And
AI.
we're clearly seeing this reduce reliance on.
See, the market used to love it when they laid off people. Stock would run.
Because it used to run on technicals.
That there are job openings out there. Alex has talked about this earlier, the JOLTS report, which came in better than expected. Disney also trimming its workforce. You've got a few hundred jobs on there, several hundred jobs on the chopping block there. This is globally.
And we know they're pushing into this 5983 zone on ES. Because it bounced. It was resistance. Now I'm using it as support. It's having a hard time pushing past the 63 though.
Yeah, if it doesn't, on the SPX, the 1 minute, if it doesn't hold that 63, I'll jump it. I don't even want to say it.
Don't you do it.
No.
Don't you fight the damn trend.
'Cause I tried that before and it didn't work.
No, it did not. Look at the 5-minute chart. Look at your 21. Your 21 on the ES is right where I want to buy. It's 21 on the 5.
How in the hell do I get the hour up here?
Come on, push down. No, go back up. God dang it. You're really gonna make me miss it. Get your heavy ass down there into that 21.
Hello?
Nonetheless, I know that the gaming environment has looked a little bit different this year, as we did hear from, a lot of these companies like FanDuel, DraftKings, that it was the most lucrative for the consumer in this past NFL season for the first time really in, I think, like 2 decades. So has it remained to be a challenging environment then for these companies to still grow at the same pace they're expected to?
Yeah, as far as the consumer-friendly outcomes that were, not in the favor of DraftKings and Flutter, you're right, that occurred in the Super Bowl. It also occurred during the NCAA tournament, and it happens when the favorites tend to win. I think the percentage of favorites for the NCAA tournament winning games was 82%. That was about 10 percentage points above the historic average. That tends to be transitory and shouldn't be something that is ongoing. We do think what is ongoing is that in the U.S., sports revenue generated $14 billion in revenue last year. We think that grows to above $30 billion by 2030, not only from existing states continue to gamble more, but also new states that we think are going to legalize. For example, one being Texas, which has a percent of the U.S. Its population is about 8-9% of the total U.S. population.
When you look at this situation as a whole, Dan, whether it's DraftKings or other players in this space, let's maybe take some of the legacy players out of it, but maybe the FanDuel operators or somebody who's a little bit more online only, first and foremost. If there aren't new jurisdictions that come on, line within the expectations, how much of an impact to kind of where your fair value estimate would that make a difference? Said another way, if we were just stuck with these operating areas, are we overestimating what DraftKings is worth?
Sure. So in our discounted cash flow model right now, our fair value, our price target on DraftKings is $54. If we were to remove the handful of states that we think will legalize over, say, the next 5 years in our model, it would probably reduce that fair value by maybe around 10%, high single-digit percentage. But even in that scenario, you still have a very big market growing, maybe not growing as fast, but the other part of the story here in the industry, and for DraftKings, for example, is there's an inflection in profitability. So in 2023, EBITDA margins were -7. Last year in 2024, they went positive to +4. We think that over time can grow to above 20%. And the confidence in that is when we look at mature markets like Australia that are heavily regulated, that have increased gaming taxes, that have marketing bans and limitations, the EBITDA margins for leaders in that space are still at 20%. The U.S. will be a bigger market than Australia. DraftKings and FanDuel, in our view, are going to be the two winners. So we think that there is, even if the market top line doesn't grow as fast as we expect, there's still a very interesting bottom line growth story with these names.
Still squeezing.
So just to get your thoughts really quick before we let you go on, the macro and the
Yeah,
consumer.
Yeah, it's squeezing, but it's still holding 63 on the one.
Yeah.
For right now.
And it's that time of the day.
Now the EMA cloud on the 2 looks about as nasty as it's looked all day. Give me a 63 tap on 2, please. I love that. Lines up right with my zone.
Which now went below it.
Working on the third Black Crow on the 1 minute. Ladies and gentlemen, looking at 59.90s. Yeah, good push. Good push. You got any winner?
We're at a triple bottom right now. That 59.68.61 was my major resistance today, where I jumped in them stupid puts. Or part of them.
59.85s.
I jumped in there. Take that back.
in the 59.85s at 190.
Three Black Crows.
And out at 240, another $50 a contract. The only reason I got out is because we tapped the 63 on the one.
Yep.
But that was $50 in 1 minute. Dude, it gave me exactly. Remember when I said, hey, if you'll just touch the 63 on the 2?
Yeah.
Look where ES turned on the 2 minute.
Beautiful triple bottom to boot.
Yeah, but I mean, that freaking 63 tap on the 2 was exactly what I asked for, and that was as clean as hell.
Yep. Let's see what that does on the 2 minute.
Okay, so let's make it a little bigger picture. Let's see the 1 minute specifically. This is the first time in 3.5 hours that 1 minute is rejecting the 63 instead of sitting on top of it.
And George.
Good job, studio. Did you get the entry I got, studio? Good deal. Studio's a better trader than him. I'm gonna start listening to him.
Number 1, 2, 3, 4.
Mm-hmm. Alright, watch the 200 on the 1 minute.
Got 59, 69, 34. I got a channel of support right off the 200. I got a 59, 69, 34 alert. The 5980s. Tesla pulled back to the previous resistance. It ran $5 up from it.
Come on, I've got 30 minutes to my next call, and I'm gonna be gone the rest of the day because I got a freaking 3-hour customer effort.
Oh.
Just want this freaking 200 touch on the 1 minute because it lines up perfect with the support zone I have. But I ain't even gonna try to miss this.
Right now, it's starting to look bearish. The 5980s. God, I don't want to look at them puts now. Yeah, they're still worthless. Well, they're at 30. The 5980s. Oh, it just dropped below that support. So we're back to the top of the megaphone. I'm thinking right there. Back to the top of the megaphone, folks. We're heading there.
Bam.
Bam, right there. There it is. The 5975s. Right here. And this would be on the Fibonacci. At 260. And the Fibonacci would be right to the first support level on the Fibonacci. So these are the 5975s at 260.
I'm in the 5980s at what up I'm at 130. Yeah. And there's your tweezer bottom on the 2.
There's 320.
Yeah, y'all about to make some good money on this one. That's $100 a contract for me right there.
Yep. 110. $4.
Yep.
Take it. Sold 3 of them at 4.
I'll take 110 a contract.
I got 2 more left.
The 2 minute can run to the 63 because we just broke the 200 on the 1. Got another 3 points. Ah, Studio would win. He got his put money back. My boy's a beast.
So do you see where that got, everybody see where that bounced up off of? Remember that old megaphone pattern we called out this morning? It pulled right down to the top of that megaphone. And if you put the Fibonacci's on it, all the way just as a day, it pulls back to that 38.2% pullback. We could see 50%. And then it let out with a hammer.
That was a great trade to end my day. I gotta go write some software. You have a great day, man. I hope you get feeling better.
I do too. I feel better already, but man, I feel like, you ever feel like you need to take a shit? You can't?
What day is it? Oh yeah, every day. Alright boys, y'all I'll see y'all tomorrow.
Well, Studio, I let you down today. I think he's almost too far out of the money to think about it now. If we break this original resistance level that I had on here, 59.68.61, we could probably get back up to the triple top or break the 9 and the 200. Right now it's kind of a wall, but this was a beautiful trade right here off that hammer. And I still got 2 contracts. That's what I should have held this morning. Excuse me. Back to my entry here. So we're retesting. If this doesn't hold, we're going to drop more. Drop down to that 50% pullback. There it goes. You know, they're cutting loose. This is what I wanted to happen earlier. Pissed off. God. Yeah, I think this run we had this morning was a little bit not called for. So we got a tweezer bottom right here.
I had to jump back on. I saw what was going on. I was like, oh, okay, screw this. I ain't got to be on my customer call for 19 minutes. Like, if this thing keeps, I'm watching the 200
Yeah.
minute.
We got a tweezer bottom on the 1.
Oh, do you?
Yep.
Shit.
160. But I don't know. I wouldn't. I'd still think we can drop down to that 50%. Let me see where that.
You got the 50 fib up?
Yeah. We're back at the top of that megaphone again. $59.55.12. Let me see where that is on the.
Hey, Keeney, let up the 59.75.
Here's your third body now. Triplets.
I want to see the 5-minute RSI get on it.
Oh yeah. Now on the 5-minute, you're at the 63 on the SPX.
Yeah, you're at the 63 on the ES9. I still think she can push like that. But she lost his own.
Oh man, I like it. I just now noticed something about the Fibonacci's.
It's holding the bottom of that zone, and you just wizard bottom on the 2.
Yep. I'm watching this here, these two support lines right here. 59, 58, 19, or the 50% pullback. We got a flag right now. We got to break the 9 before it becomes bullish on the 1 minute. Double bottom. At 180. Got a double bottom SPX at 180.
Right to the 9 on the 2.
Yep, man, we broke the 9 on the 1.
Not on the S. Well,
On the no, SPX. 180 to 2. Right here, we hit the 21, so it's a good spot. Dang, 275. Daggum, 310. So let's talk about this one here. So we had an engulfing candle with a tweezer bottom. It came up and had a hammer, and then it pulled back again to that, made it a double bottom with another tweezer bottom. So you got your snake, breakout, and then it let out with 3 white soldiers. I got out of it once we hit 21. These things are really depreciating a little bit. It's just now at 250 again. This one here was a hammer off the top of that megaphone. So tweezer bottom with a hammer, then it pulls back, creates a double bottom with a tweezer bottom, and then 3 white soldiers, and you get out of the trade. Get out as fast as you can this time of the day. beautiful call from the bottom there. Boom, baby. $4.70. I'm right out from under the money now. beautiful. Oh boy. You know, I got to thinking about my past. And as I get to think about it, I always outpaced everybody I worked with. I mean, I was like 3 employees in one. Sometimes, you know, it got me in trouble. Because people just didn't want to work as hard or as fast or... And make, you know, your average employee look bad. Same thing with learning how to trade. You know, there's not too many people that sit down here every day for 21 years, 8 hours a day. I lost a girlfriend because of it. You know, she probably regrets it now. You pay more attention to them stocks than you do me. I said, hell yeah. That's what puts it, that's what got you that Gucci purse, girl. Same thing with when I was a baseball player. I sat there, school's out, I'd always be at the ballpark. It was hard for me to get people to go out there and play catch with me every single day after school was out. Third grade, playing dodgeball, I was always the last person that got picked because I was the scrawniest and the smallest guy. So I went home and bought a dodgeball and I threw it as hard as I could inside of a tire. Then came to school one day and knocked this guy down. And everybody wanted to pick me. All of a sudden. So I watch a lot of traders that'll sit here forever and they just don't take the time out to learn the patterns or it's like we bounced right here off the 63. So I tried to make it as easy as I could. If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. I'm using the 1 minute. What's 5 minute got to say? 5 minute. We got that triple bottom right here on the 5 minute that didn't hold. So that's going to be a hard resistance. If we break that, we could come up and do a double top on the 5 minute. Break it. 59, 73, 58. If it don't break, we're going to come back down. It's trying. It's trying. It's a hard resistance. Triple bottom. Actually a quad bottom on the 1 minute. I call this a yin yang. Well, we broke past the resistance level. And 75s didn't move up much because of it. 460. Oh. Up 65. We want you to break out. I'm not sure, but it's what we want. Tesla bounced up off that bottom I called earlier. Nicole.
Ladies, the April JOLTS data was released this morning.
She's showing some cleavage.
Expectations, more job openings than what were expected. So we want to talk about the state of the labor market, and we have our panel.
You see how they try to cover it up there?
Clopton economist and president of Clopton Capital, and Jordan Rizzuto, managing partner, chief investment officer at Gamma Road Capital Partners. Thank you.
He can't keep his eyes off her.
I'm glad you're both here today. So this shows that
I couldn't either.
are maybe opening up a few new jobs more than what was expected. Jake, what do you make of that?
Yeah, I mean, I think the report is definitely a mixed bag, right? So we had like job openings up, hiring up, quits down, and layoffs up. So there's definitely, definitely some noise going on in the labor market. But I think there is kind of this undertone of maybe.
It's not government jobs this time, you idiot. The only reason we had good numbers before was the fake numbers that we got, plus most of them were government hires. This is a private sector hire now. There's no mixed bag at all.
Hiring, but what's behind it? And there's so much uncertainty. What do you think here, Jordan?
Well, I think it's definitely reflective of the uncertainty, and while overall the headline may have been a little ho-hum in terms of the lack of major change, there's definitely something to grab onto if you have a bullish tilt or a bearish tilt, right? So
exactly.
On the bullish side, we did see a net positive in terms of hirings outpacing layoffs and quits. The flip side of that is that the longer term trend, you're seeing hires and openings continue to fall. And historically, the JOLTS data goes back about 25 years. That downward trend is only typically during it.
I'll sit and argue with this guy. Well, 1 year they were off, almost 1 million jobs?
every worker looking for a job.
Right.
Whatever, 5 years ago or something.
Whatever.
So there were times
You're fired.
we saw an abundance of jobs and a stronger economy. This is not to say we don't have a strong enough economy, but the concern is what happens next. And what are you watching for on Friday, for example, here, Jake, as you look at
Okay, the
we are
5980s.
expecting more inflation, maybe more unemployment. We don't know, but I think the estimate for Friday is
She said whatever.
30,000 non-farm payrolls, 4.2%. What do you make of that?
Yeah, I mean, my personal feeling is we're probably going to see like a higher print for non-farm payrolls.
Oh, really?
Yeah, because of some of the hiring up and stuff like that we've seen. But I do think over the long term, we probably are going to see something closer to a soft landing, and some of those numbers start to come in. It'll definitely be interesting to see what happens.
So are you feeling more optimistic than pessimistic? Big picture, is that right? Jordan, what do you make of it? I mean, because you're here and you're chief investment officer, you've got to advise people where to put their money. I mean, what are you telling them?
Yeah, it's definitely a mixed bag for the market, right? I mean, we've seen a tremendous rebound off the April lows, and there as well, particularly on a sector basis, we're seeing some encouraging signs, and we're also seeing some concerning signs, right? So on the concerning side, consumer discretionary has been the laggard, or one of the bottom laggards now, really year to date. Bull runs are typically not driven by consumer discretionary lagging overall in such a meaningful way, and especially relative to staples. So that's one concern. Utilities have been a leading sector, which is typically speaks to a more defensive, risk-averse positioning. The flip side of it, since those April lows,
These fundamental traders, they get to me sometimes. Inflation's down, jobs are up, 2 jobs for everyone looking for one.
Have some of the claims come in, and some of those were because of the end of the school year. So we thought maybe some of the numbers last week may have been a bit skewed, but continuing claims shows that there's still folks that have been looking for some time. It's my understanding it's taking longer for folks to change a job or get that job, and that maybe grads this year will have a harder time finding a job, that everything's just slower.
Right.
Is that right?
So the job openings number is really interesting to me, because I hear all the time that, hey, there's all these jobs that are posted and there's openings, but a lot of them just aren't real. You know what I mean? So that is something I hear consistently out there from a lot of different people.
People are having a hard time finding a job.
Who's this guy?
But there's so many job openings. So it just really, I don't know, for some reason I have a little bit of a hard time,
I'm having a hard time listening to you. What do you think you are, Johnny Cash?
And we need, people are not quitting as much, or they're taking longer to do so because it's taking longer to find a job. There is some sort of disconnect that's happened. There's sort of something happening here. Do you have a year-end target when you look at the S&P 500? I mean,
If I was 30 again, I would go straight over to Elon, and I'd put my fist down, and I'd say, "Put me to work."
figures that we were just talking about as well.
Good to see you both. Thank you
Likewise.
so much,
Thanks,
Jordan and Jake. Thank you both so much. Really appreciate it. Jordan Rizzuto of Gamma Road Capital Partners, and also Jake Clopton of Clopton Capital. Thank you both so much. All right, friends, thanks for being with me here on the Watch List live from the New York Stock Exchange. I'm Nicole Petalides. So glad you're with me every single weekday. Keep it right here. Market on Close is next.
Put me to work.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features.
Elon's having a little tizzy fit.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds.
Oh yeah, I mean nowadays,
cash moved to your
I wouldn't be going. I'd be doing what I'm doing right now. Can you imagine? 20, 35, 25 years old, and man, I'd be on a yacht trading stocks, doing YouTube videos. I moved to Hawaii when my midlife crisis. I should have stayed there.
The Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Just over an hour till the closing bell. Good afternoon. Welcome to Market on Close. I'm Alex Coffey. As we take a look at where the market sits, another green day brewing for equity markets. S&P 500 closing in on the top half of its recent trading range here, up about 40 points on the session, about 2/3%. Now, it is just off session highs, but within a stone's throw.
There she goes.
Good enough for to round up here and basically call this the highs of the session. NASDAQ 100.
59.80s from 165 to 235.
0.9%, somewhere in that range, depending on the moment. Russell 2000 has been out in front and continues
1, 2, 3.
to be out in front, 1.7% to the upside. 35-point rally for the Russell. Really, really strong today. And this despite the fact that yields are relatively quiet. So you look at where the equity market sits here. Really, really nice turnaround from some overnight weakness. It's really been the MO for the equity market is a little bit of weakness maybe to start the day, maybe overnight, and then turn that around with some force as the day goes on, and certainly been that way today. Looking at some of the other asset classes, U.S. dollar bouncing back after being a little bit weak yesterday, and so you look at that back over 99. here today. Gold giving back some of yesterday's powerful rally, but all things considered, gold continues to be a freight train. It was up, 80, 90 bucks yesterday, down about 18. It's, more than one or two steps forward and half a step back. That's the recipe for uptrend and upside performance. Crude oil trying to break out of its own relatively tight trading range with an upside move here today. Crude oil has been relatively range bound between about 61 and 63, creeping above and below, trying to do that today. 63.54, up about a buck a barrel here. And then Bitcoin, after making new all-time highs, it did retreat a little bit in recent trading weeks, but nice day today is it's basically keeping pace with the equity markets, up 1.6% for the June Bitcoin futures. Last trade 106,735. Let's talk some of the stories though, and these are stories that you've probably heard throughout market coverage, as they have been two of the bigger ones of the day. Joining me here in studio, Jenny Horn. First, Jenny, let's talk this Constellation story. So this is a pretty major step, and the stock's been quite volatile, but walk us through what the news is. Big time AI player signed a pretty big agreement.
Yeah, I mean, it's a pretty good partnership if you are, of course, Constellation Energy, because Meta Platforms is now turning more and more so to nuclear power for its mass amounts of energy that it needs to fuel its very lofty AI ambitions. So we got news they will be buying the power generation of a nuclear plant in Illinois for 20 years under a deal with Constellation. The financial arrangements were not disclosed, but their CEO did say the Meta deal would help them cover the costs of relicensing, upgrades, and maintenance for that Clinton Clean Energy Center in Clinton, Illinois, which I really have never discussed more than I have today. But they did say it's billions of dollars of capital that you're basically signing up for to run a plant for 20 years. So the deal with Meta will allow Constellation to apply for federal relicensing as well as upgrades that could squeeze more and more power generation from that various plant, which is located about 150 miles southwest of here in Chicago. Meta, as well as other major tech companies, are investing huge in building data centers across the country to train these AI models. Those facilities were historically powered by natural gas, which is the largest source of electricity generation here in the U.S., but now under what looks like this right now power flux, as the grid has to expand in order for AI to expand, we have seen a lot of companies turn their attention to nuclear, as Amazon is one of the front runners of that push. But this is, I feel like, the first deal of its nature we've seen. So I think this will be interesting what this means for the rest of the space moving forward. I mean, Constellation produces more than a fifth of the U.S. nuclear power. So it's a major player, but it's also in a very niche world. And we do know, unfortunately, that the Trump administration has not been read as a friend to alternative energy. But nuclear is a bit different because it's relatively clean, and it's also unstable. So for that reason, there's some concern in regards to nuclear. But I feel like that's also like a public perception thing.
Yeah, and I guess it's not necessarily not a friend. It's just some of the more green, let's say, friendly political aspirations are more mandating things. And so I guess there's less mandated transitions to other power sources. But when you look at the nuclear space, it has a bad rap from incidents that have happened over the years. But all in all, super effective form of power. There's been, a really, almost like kind of like gold bugs. There's been nuclear bugs in a way that have like really believed in this space. And with this onset of AI technology, this has sort of been the boon for this space to build things out. Now, my question to you, and some of this is, it is what it is. There's no way to know for sure. But is the read through the fact that it wasn't able to hold on to the rally, that like at some point when a stock's rallied 400% over the last 3 years, like inking some of these deals is almost built into that performance already?
I almost wonder if it was like a buy the rumor, sell the news, if this wasn't like a huge shock, if there has been like those that follow the nuclear world a bit more than I do had been.
Well, if I had a bathtub, I'd soak in it tonight.
So that's why we didn't see this. Yeah. I mean, it's been a wild session.
I mean, it's doubled since the lows, too.
It has.
So at the same point, it's not just how it's performed and built up over the last several years. Just in the last several months, this stock has gone, I have to say it, nuclear to the upside.
It's a great way to use it. I mean, this is one of those charts, as you can see, actually, I had that up, right, as We pulled it up. The 3-year weekly chart, I think, illustrates the strength because it hasn't felt always that way. We saw nuclear be one of the major themes to close out 24, then saw a pullback substantially with the overall market and the concern, not actually the action, but the concern that the Trump administration would not be as lucrative to some of these companies. I feel like a lot of those concerns now we've seen a bit overblown. But also, as we continue to, I mean, like, hopefully, I know we're lower now, but we initially started the session on a pretty strong note. We are off of those highs by still over 11% and some change. I also think it's a great time for nuclear, I mean, like, generally long-term speaking, because we also see, I mean, Apple, Amazon, Meta, so many of the major players in tech committing to be more carbon neutral or have zero emissions by, I mean, it's like 2050, I believe, is a lot of their targets, but that's still something that we're going to have to see companies rethink their energy sources, and nuclear is read as a clean source of energy.
Yeah, no doubt, and hopefully able to do it safe. A lot of research and things that suggest that you can do it pretty safely nowadays. I think it's important too. We think of alternative energy, we think of green energy and things that are a little bit more clean for the environment. We lump it all together. There's a huge difference between like solar stocks and some of these nuclear names, and especially a name like Constellation Energy that's already really operating in the space, and something like Oklo that has like a cool idea that they hope is going to work and at some point make them, a really powerful name. So knowing a little bit more than just, hey, it's a green energy stock, I think helps us get there. But definitely impressive performance, despite the fact that it's given back some of that rally today. Pre-market, it made a jump that would have been new all-time highs. Intraday, it opened up on the highs, so kind of an ugly-looking candle today, opening up at 342 and basically straight down since, but running into that one-week moving average, which is a relatively reasonable place to think that it could have found some support. Let's shift gears entirely. So we're talking kind of forward-thinking things with nuclear energy and AI and partnerships with companies like Meta. Let's think of something that's a little bit more straightforward. And that's convenience stores in rural, I guess, counties and cities across the country. Dollar General specializes in that, and they are specializing it pretty good, it looks like, this last quarter.
Dollar General, I would have never thought when I woke up this morning that I would have talked about Dollar General as much as I have, but hey, at least on a point of optimism, raising their full year forecast after beating first quarter expectations for earnings and revenue. They did say they're working to reduce their exposure now to China and minimize these price increases for their very cost-conscious consumer. Also, their CEO did say they're attracting more and more of these middle and upper income consumers that are now seeking value. So that's actually what we've seen.
You got to be kidding me.
Walmart's success. It's not so much the
Amish
middle class that's supporting it. It's more of this trade down effect for those that perhaps weren't historically shopping at a Dollar General, Walmart, what have you. So the company did highlight the fact that, well, yes, these current forecasts are given no major changes in trade or pricing.
They're feeding you full of crap.
Right now, the direct imports make up about mid to high single-digit percentages of their overall purchases from China. So they're working to, right now, sort of mitigate that. They said the tariff landscape remains dynamic and...
The only good thing about what happened with Dollar General is they didn't open more stores than they closed. And I'm just speaking from personal, the one that's closest to me right now. I mean, I go in there to buy supplies. Very seldom. There's not much in there to buy. I mean, health and beauty aids, paper towels maybe, and toilet paper, condoms. I think I bought a box of cereal in there one time. No, I just don't like shopping in there.
When I think of
It's always dirty and not stocked well, and stuff ain't rotated. They got a friendly staff, when they're there to greet you. So I don't know. I wouldn't get too excited about it.
Communities that other stores aren't serving. But down the line, as Amazon and Walmart continue to push the envelope towards e-commerce and how fast things
it had a huge pop today, that's for sure.
Do companies like Amazon?
It's up 100, almost 100% in 90 days.
To these communities at a pace that makes it just as good of an experience as going to the Dollar General around the corner or a few miles down. And so that, I think, is a long-term story to perhaps look at. But
still a concern, because Amazon has that pricing flexibility being a
I'd wait for the pullback.
It sells beyond just, I would say consumables largely and lower-priced goods. Something like Amazon or even a Walmart, if they continue down the road that they're going, they're going to be able to provide way more merchandise of all different types from their locations and using their kind of logistics network to get that to people fast and perhaps even at break-even or losses because they're going to make so much money on other things. So tough competition.
Really is.
Dollar General having a really nice not only week, not only day, but really the last 6 months or so as this stock has crept off its lows and having a nice little year to date so far. Jenny Horn, I really appreciate it as always. And a couple stories that, maybe we can leave these in the past for now, but we'll see if they come back up. A lot of Dollar General, a lot of Constellation here intraday. Thanks to Jenny Horn, as always, co-host of Next Gen Investing. We're welcoming in our next guest. That's the Chief Investment Officer at Advisen Investment Management, Brian Huckstep. Brian, good afternoon. Happy Tuesday. Thanks for joining me. Let's start kind of big picture. How do you assess things right now with all the uncertainties and the fact that we're basically back to highs?
We feel that it's time to take some risk off the table. It's time to be defensive. When we get close to those all-time highs, history has shown us that's often the most prudent path to protect value. We're not suggesting people go from stocks right.
Not if you were listening to CNBC. But these guys are smart. They'll at least tell you. We still got a little bit more to go. But we're getting close to double top, triple top. We could break it. I think this happened a lot faster than what CNBC wanted it to. They're still bearish. Again, they got the job jolt numbers wrong. If you listen to them this morning, they get it wrong all the time.
How much earnings are going to grow into those multiples and have not yet been real impressed. I know we're early in
earnings were good,
AI,
you ding dong.
Concerned about that. And the other concern is debt, the U.S. debt. The President Trump has tracked.
Why are they all of a sudden they're worried about the debt? They didn't worry about it during Biden years when he spent $14 trillion over budget in 4 years, double what Obama did in 8. They didn't worry about the debt then. Now we got somebody trying to do something about it, and all of a sudden they're worried about it. I wish I was complaining about it almost every single day. It's like, man, we're spending $2 trillion over budget, plus we got $7 more trillion of spending. Then yesterday I complained about them spending that $93 billion after Harris got beat bad, and they kept on spending.
Market highs, those can be attractive additions to portfolios. They tend to, they're all very different, but for the majority of them, they tend to protect downside. They'll use put options to protect it against a really down type of market, yet the people who use those strategies can participate in the upside. So that's one way that
59.80.
you shift a little bit of your exposure over to those kinds of downside protected
120.
products. That can be one way to protect your portfolio and get a little more defensive.
Talk to us about your fixed income exposure. I see in your notes you're preferring TIPS, basically the inflation protected treasuries. Talk to us about why that's an attractive place to park maybe some fixed income assets as opposed to the traditional
that was a good spot right there.
Treasury assets that oftentimes make up a portfolio.
So I think that the tariff conversations are still in only the second or third inning. I think a lot of market participants think that maybe a lot of the tariffs have gone by the wayside, but I suspect that's not the case. I think after the 90-day cooling off periods end, I think the president's going to keep a lot of the tariffs in place, and that the market, when it thinks about the likelihood of various levels, of various percentages of tariffs that could be in place for the next 3 years, I think they're underestimating what we might end up with. So, when you think about those tariffs, I think we have a lot more to worry about, and that, for the long run, is a good.
We have nothing to worry about, you bald-headed eagle.
In some ways, we applaud those efforts, and in other ways, there could be better ways of doing that, like with taxes.
Question for you, kind of along those lines, because I can hear from what you're saying, I see in your notes, like you feel there's growth concerns. You feel some of these trade policies, even if warranted, could lean on that growth concern a little bit. One of the things I've heard Treasury Secretary Scott Bessent talk about was the idea of, if Apple could charge $3,000 for an iPhone, they'd be charging $3,000 for an iPhone. And despite the fact that many of the headlines suggest, consumers are going to eat these tariff costs, maybe the reality is it's more going to be a margin pressure for companies. Not to say there won't be an impact, but maybe that impact is more of a growth impact. When you look at that and you think about, I see as well, you have sort of this value tilt. You talk about the priced maybe nature of tech. When you're trying to navigate a portfolio, you got a perhaps recession you're worried about around the corner. Are you leaving a lot of money on the sidelines as well?
No, we're trying to stay fully invested. So on top of being
with all your doom and gloom, you're fully invested?
We have the tips.
Are you kidding me? You're just mad because you missed the dip.
If you could charge $3,000 for an iPhone, you probably would. So there are limits to what you can charge, but and keep the same quantity.
He says we're trying to be fully invested.
There is room for companies to increase price.
And he's talking doom and gloom. I don't want to listen to this guy no more. I don't want to listen to him. Get him out of here. $86 the guy.
Small caps also.
Brian Huckstep, thank you so much for taking the time to join us here on this Tuesday afternoon. Appreciate your insights. And
no, I got to get away.
Again, Chief Investment Officer at Advising Investment Management. Coming up, we have the CEO of Applied Digital joining the show to talk about their newest partnership and more. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. The Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Market on Close. I'm Alex Coffey. It's now my pleasure to welcome in our next guest, the Chairman and CEO of Applied Digital, Wes Cummins. Wes, thanks so much for taking the time and joining me here on this Tuesday afternoon. I know you got exciting news, and I can't wait to get to that. But for those who, maybe are living under a rock and aren't familiar with your company, I know it's getting harder and harder not to be if you're following AI. Can you give us the elevator pitch of sort of what you guys do?
Sure, and thanks for having me, Alex. So what we do is we design, build, and operate what we call next generation digital infrastructure. And this is high power density data centers primarily that are really built to run AI workloads.
As someone who grew up in the Midwest, born and raised in Nebraska, I see obviously the North Dakota data center is obviously a huge part of your recent announcement. Talk to us about this leasing deal that you just announced with CoreWeave, another really major player kind of in this grand ecosystem of AI build-out. I know you work closely with companies like NVIDIA and AMD as well. Talk to us about this announcement and what it means for your company.
Yeah, so this announcement, 250 megawatts of critical IT load on our Ellendale, North Dakota campus. This is a campus that we started developing back in 2022, and we started building the current building in 23. This lease includes 2 buildings on our campus, total value around $7 billion for the first 2 buildings. There's an option on a 3rd building that would increase that value up to $11 billion of that contract. And this is a 15-year contract, and this campus is really designed, it's purpose-built for AI infrastructure workloads. So this will be, one of the largest campuses in America with a lot of near-term power coming online. This was done, so for Alex, for you from Nebraska, I'm from Idaho. We built this in a town of about 1,100 people. We really worked with the community there, a lot of renewable energy that oftentimes doesn't get used. So this is stranded power that we're putting to a great use by running these AI workloads in a location where typically you don't see these types of jobs and this type of opportunity available, but it's one of the unique features of these workloads and where we can take it, which is to the source of power rather than typically these things are deployed in population centers across the US and across the world, actually.
I imagine one of the draws to an area like that is that maybe land is of abundance. If you do plan additional expansions, which I'm sure is sort of in the roadmap, you'll be able to do so much easier than in maybe more urban communities that are sort of built out. Is that kind of the idea?
But land is the easy part there, but the real draw, number one, is power. So there's a significant amount of power. We co-located next to a substation there that has roughly 2 gigawatts of wind power that feeds into that substation. And then when we talk about stranded power, there's not enough transmission capacity when the wind is blowing necessarily to move that power out to a use purpose or use case, a load. And so that's number one. Fiber connectivity is number two for us. So this actually in North Dakota, a lot of cross-country fiber routes run through there. And number three for us, we love this Dakotas region of the country. It's a cold region. When you're running big workloads like this, when you're using this amount of electricity, it allows us to cool. The cold region allows us to have a much more efficient data center. It runs our PUE, which is a measure for data center, close to 1. It actually lowers our electricity consumption versus what it would be in southern states, and that in turn lowers our cost for our customer, which is driving costs down, which is really what you have to do on a technology curve of any new technology. And so we're really pushing this region, and we think it's a great region for AI infrastructure.
Amazing. And as we look ahead then, and we kind of take big picture, obviously your company is playing a major role within this AI transition that we're watching take place. And as someone who has, kind of a front row seat to how this is all playing out, not to, kind of ask you the, I guess the kind of boring question of where do you think we are in terms of the baseball innings. But when you look at this space, do you feel it is still relatively early stage in terms of continued AI build out and ultimately where this entire, I guess, internet, 2.0 AI is ultimately going?
Yeah, so let me give a couple of perspectives on this. So just from our front row seat where we're talking to these customers, so we really target hyperscalers, and CoreWeave's, a great customer for us at this location, but we target what are really just a handful of companies that will use really large scale campuses like this for training and inference. So from that perspective, we're seeing still really high demand. We're seeing it from most of these customers as they drive for both, additional training capacity and inference capacity, which is growing even faster. So that's from my front row seat. But then when I look back at the stats, this year, the first part of the year, the first 4 or 5 months of the year, really the first 4 months was, I would say, a really negative news cycle for AI. We had DeepSeek in January, and there was a lot of questioning around data center boom to bust, these types of items. But the things that didn't get really talked about were what we're seeing from, the stats inside the use case here. So let's just look at ChatGPT, which is the number one app here. And ChatGPT from December until May grew, added more than over doubled its users. And then ChatGPT also in the month of May started getting over 1 billion queries a day. So that number, to put in perspective, that's about 2.5 years after the launch of ChatGPT. And to compare that to Google, so Google hit 1 billion queries a day about 11 years after their launch. So the adoption curve is huge. I was reading, there's different articles or different studies about this, but one of the number one use cases of ChatGPT this year is therapy and self-improvement. And so that the number one use case last year was idea generation. So when you move to that type of use case, to broad audience use cases, the usage is going up. You're seeing that in the numbers. It's up, I think 10,000% from a query perspective year over year. So this adoption curve right now, just looking at the statistics, doesn't really look like a curve. It's a kind of a straight up line, and we're seeing it really hit mass market. And there's just a lot of momentum behind these applications and the users adopting it, and whether it's ChatGPT or Grok or Anthropic, but we're just seeing the adoption rate really accelerate in the early part of this year.
Wes, final question. You mentioned kind of the DeepSeek, the overcapacity concerns that maybe kind of plagued this space, maybe a quarter ago, just temporarily in terms of some of the performance of some of the stock prices. But as you know, you work primarily with these hyperscalers that are constantly seeming like, pedal full to the floor here, trying to win this race. Despite maybe some of those concerns, are you seeing any signs that those companies are willing to tap the brake and risk perhaps falling behind some of their competitors?
Yes, I think for the most part, all of the companies are being fairly aggressive. I would say, some of the headlines we've seen this year, you see a rotation around where certain hyperscalers or large companies push really aggressively, and then they'll have a digestion period. And you're seeing that, with some of the news flow that we've seen late last year through early this year. But the piece that I would keep in mind for this market, like one news headline or one company or two companies don't make the market, but there's a really small amount of companies that utilize a huge amount of the capacity. So, when one slows down and maybe another speeds up, like it makes great headlines, but what we're seeing overall in the market is the just very aggressive demand from hyperscalers to go out and secure more capacity and build more data center capacity. I don't think there's anything really of scale left for 25, and we're probably already out to the second half of 26 to get any kind of meaningful data center capacity. So despite a lot of those headlines, we don't really see that in our business and in the market with our customers.
Wes, thank you so much for taking the time and joining me here on this Tuesday afternoon. Congratulations on the announcement and the successes of you and your company, and we look forward to talking to you again soon and seeing where things are progressing. That's Wes Cummins, Chairman and CEO of Applied Digital. Coming up next, it's Options Corner. Kevin Green's going to join us. He's going to talk to us about some of the levels he's watching into the market's close. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
It's Options Corner time. Welcome back to Market on Close. I'm Alex Coffey, now joined by Kevin Green. Kevin, a senior markets correspondent for Schwab Network. KG, good afternoon to you. Really nice rally once again as we look at these first couple of trading days, last couple of trading days of the month, continuing to bring bullish activity. What do you see on the technical front? What do you see in the flows?
Yeah, well, this is the second day where we also saw negative pressure kind of coming into today, and then you saw a rally off the back of that. Now, what I will say is if you look at the intraday trend, especially on the 5-minute chart, we actually had a really strong trend pretty much for the majority of the day until we had this small little pullback here. But overall, you started seeing a lot more participation in this market as well. Not only just seeing the energy sector, which kind of caught a bid a little bit early, but then you started seeing information technology catching a little bit of a bid, as well as communication services. And so what you're seeing to the upside here, 59.75, 59.80 is actually the really key level here, Alex. We have over 111,000 contracts for the 0 DTE expiration for today at 59.80. So that's going to be a pretty decent wall to the upside here. But if we do see any type of break, I'm actually looking at 59.60, kind of a decent balance level. We also saw that as an area of support within this pullback that we had. Maybe a little bit of selling pressure just because of maybe some news flow that came out of the White House here. And then on the negative side, looking at 59.50. So overall, this is actually a really decent day. If we can close above 59.70, I think that's actually a really big win. If you kind of go back to the daily chart, you can actually see it. This has been an area of resistance for us. We've been in this wedge pattern for the last couple of, actually last week or so here, where we have this wedge between 59.70 as your resistance, and then we have support like the 20-day moving average, the 200-day moving average, that trend line from the lows here, all kind of coming together. And so we're trying to have a breakout to the upside, trying to test that 6,000 level. And if we're able to close above that 59.70, I think that's going to be a really big win for the bulls for now. There's still some gaps to the downside that I'm still a little bit concerned about 2 gaps in the S&P 500. There's one that's really significant. We're looking at the futures contract here, but overall, this is actually a really decent setup. We do have some economic data that's going to be coming out over the next 3 trading sessions here. So obviously jobs data tomorrow with the EDP. We'll have initial claims on Thursday, and then the jobs report on Friday. So still a lot of economic data that could give us a little bit of volatility, but it seems like the market's really bracing for us to try to break out to the upside here.
Yeah, it really looks like it's being somewhat confirmed by many time frames and many indicators. KJ, I love this chart you have of the last, whatever it is, 6 months or so on the daily, where you break out of the wedge, momentum starting to pick up on both fronts. Despite the fact that it's come off maybe the overbought level, it's still remaining, well up there in RSI as well as MACD. Talk to me about this. I know it's one of your charts on here. Talk to me about this tech utilities ratio. We've talked about this before, and sort of the idea being utilities oftentimes play a defensive role in long-only equity portfolios. Tech is typically a growth position. So as that relationship and that spread changes, that can be indication of maybe institutional risk on or institutional risk off. And you can see why it matters is look at that relationship between the S&P 500 and this utilities to tech ratio.
Yeah, and if you actually kind of look at that orders line, that tech to utilities ratio here, we still haven't broken out to the upside. So there's still maybe some room to go when you're looking at this ratio as a whole here. But you're right, this is actually a really decent leading indicator. As you start seeing maybe utilities outperforming tech, that's usually when we see pullbacks in the market. Now, we did actually have that action taking place about a week and a half ago. We did see a little bit of a pullback, but we've obviously since then have been able to buy back this market. But that ratio still kind of says that we maybe have a little bit more room to the upside when it comes to the tech sector as a whole. And then if you complement this, and I don't have this chart, but if you complement this with the move in silver, I think that's also another risk on gauge, maybe an inflationary gauge that's being priced into the market, a global expansionary type of story that's also kind of complementing this move. So this is just kind of showing and reflecting that the S&P 500 is trying to break out. The tech utility ratio has still yet to break out to the upside, and I think that gives you a little bit more confidence that maybe we have a little bit more to go. I always want to just kind of highlight once again, there's still gaps to the downside that I still feel will be tested at some point in time. It just seems like the market's not really wanting to test them at this point. So until we actually start seeing maybe us hinging a little bit or getting more defensive in nature, utilities outperforming tech, staples outperforming tech, I think you got to play the trend, and the trend is still saying we have a little bit more of an upside move to go until we get to this top range at around that 6,000 level. And then we're only going to be around 200, 230 points, give or take, from all-time highs, which, we could, that would be in, a couple of trading sessions if we continue to have days like we are having today.
Infield singles, and you can get there at that point. KG, appreciate it. I'll catch up with you at the closing bell 20 minutes or so from now, and we'll get some more thoughts. We're going to take a short break. We get back. Time to talk some Bitcoin. We'll be joined by the Chief Investment Officer of Swan Bitcoin. Get some thoughts on the space as a whole and what role Bitcoin's playing as we go forward. We'll be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market On Close. I'm Alex Coffey, now joined by Ben Workman, the Chief Investment Officer at Swan Bitcoin, to discuss Bitcoin and what's been a very, very impressive run as of late. Ben, when you look at this particular space, Bitcoin, of course, being the leader in it, what do you think's been behind the big move, outperforming basically everything since the lows?
Yeah, it really has, and you've been seeing strength across some of the other store value assets as well, and I think that's because we're really starting to highlight some of the issues that come with a monetary supply that's actively managed by a central authority. And when you saw tariffs come out and several of the other economic factors that started to force people to really pay attention to the value of the assets that they are holding, people are looking for ways to go risk off. But beyond that, I mean, it's moving into the public equities as well. Clearly, strategy is a huge story in this space, and you've seen several others that are coming to the surface as more and more capital is being raised and being poured into this market. So it's just a really exciting time to be in Bitcoin all around.
You know, when you look at something like what Strategy's doing, they're kind of differentiating. They saw an opportunity first and foremost, particularly before some of the products that made this more accessible to everyday investors that didn't want to go out and directly buy these products. Then they, of course, saw competition from some of these new funds and things that were launched, and they kind of became a leveraged Bitcoin play, but already was established in the space. I can see the companies trying to replicate it. Obviously, you can see how that could be a boon to Bitcoin, but how successful do you think those companies can be trying to replicate it? Isn't kind of what they did something that they're sort of a niche for?
Yeah, at the moment, I would tell you that strategy is very unique because of the scale that they achieved. And they're really the first mover in this space, and because of that, everyone's very closely watching how they're executing on this strategy and what types of products it is that they're bringing into the market. And we saw that first with the convertible bonds, and now we've seen it more recently with all the preferred offerings that are competing with bonds. But you're going to see a lot of people come into the market, and I think they're all going to start early on going through equity raises and probably into the convertible bond markets. The one thing that we have to be watching out for is for companies to start competing on volatility. If you try to compete purely on volatility, that means that you're going to be applying enhanced leverage, more leverage than perhaps a strategy would take. And so as we see new entrants into the market, we're really going to have to pay attention to the risk frameworks they put in place to make sure they don't find themselves in an over-leveraged position where they could take their own destiny out of their hands.
I love this point because it also, on the contrary, is one of the reasons that I think even the doubters of Bitcoin have to acknowledge is different in the last several months is Bitcoin has outperformed in both the down move once it turned first and in the recovery and it did so on declining volatility, which is different than its moves in the past. It's been called digital gold by many for years, and it didn't necessarily show those, I guess, characteristics and attributes, but I think it kind of did this time around. Where do you think do you think it's matured now to a place where it has more of that role and it's less of a speculative risk asset?
It absolutely has. And you saw that during the tariff sell-off when Bitcoin really maintained its strength. And I think that was a really pivotal moment for it, where people started to really see it as digital gold. And I think when the White House announced it after they announced the strategic reserve and they put it on the White House website as digital gold, that marketing really took off and people really started to evaluate what it meant to hold a store of value asset. And so as we continue to see weakness and we continue to see growth in the M2 monetary supply and Bitcoin tracking closely to that, I think people are going to look to Bitcoin as their first stop for going risk off in this market.
Ben, kind of final point then is we kind of wrap this up. Obviously, you've built and you're working a part of a business that is spending, obviously its whole entire existence around this. You're a believer. You saw this. You're an early adopter. For those who have been skeptical and are finally coming around, and they're looking at something that they first heard about when it was 10,000 or 5,000 a coin, and they're looking at it at 100,000, and they're kicking themselves and saying, man, I missed that. What would your, I guess, conversation be like with someone who said that? I mean, you're talking about storage of value. To me, that thinks that there's never really a bad time to at least put some money into something like this if you feel it can at least maintain its worth, relative to goods and things like inflation.
Yeah, I think the main thing that I point to is all the adoption that's happening. And it's not just happening from retail investors. Now it's happening from corporations and it's happening from nation states. And I think as soon as you saw the United States open up the strategic Bitcoin reserve and now go look for ways to actively accumulate Bitcoin, you quickly find out that there's never been a better risk-adjusted time to get into an asset like this. So when you look at that curve of adoption and you realize just how early we are and how many corporations and nations still have not adopted Bitcoin, you know that there's still a lot of room for this to run, and it's something that you shouldn't try to focus on the timing of. It's just an asset that you want to be holding.
Ben Workman, appreciate it so much. Chief Investment Officer for Swan Bitcoin, going through some of the factors behind the big-time outperformance we've seen in the so-called digital gold. Coming up, it's time for the big picture. We'll be joined by the team from Charles Schwab to help wrap up the trading day.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Time for the big picture. Joining me now, Cooper Howard, Director and Fixed Income Strategist for the Schwab Center for Financial Research, and Joe Mazzola, Head Trading and Derivative Strategist for Charles Schwab. Good afternoon to both of you gentlemen. Joe, looking at the equity market, it's been choppy the last several days, if not weeks. Trying to maybe put together a little bit of a breakout. What do you make of today's action, given the backdrop of all the data we're going to get this week?
I still think, as crazy as it sounds, it's range bound. It's at the top end of the range. If we kind of settle where we're at right now, that would be right about the high that we saw on May 19th, before the market had a little bit of a pullback, back down to, the 570 or 5750 level, whatever, in the S&P 500. So, we're back around kind of the high of our most recent range. I think that there's a couple of things that are giving me a little bit of pause in terms of whether or not we continue to push up, and we've seen some divergence with the RSI, so that's not necessarily confirming the move. And we're also starting to see a little bit less of equity inflows on a weekly basis. So May overall was a good month. Basically up 6% on the month, and did see a lot of dip buying. But we're starting to see some of that come off the table a little bit as we're moving into June. We haven't seen the same type of market breadth thrust on the buying side, at least.
Used to be go away in May.
Cooper, we got jolts this morning. We got jobless claims
not this year.
Morning. We got NFP Friday morning. What did we learn from jolts that we can take away, if anything, and how that might set up?
See what this guy says about jolts.
Yeah, it's a labor market bonanza, if you will, so this week. I don't think there was too much to take away from jolts. I think that we're still in this notion of the labor market's kind of a no hire, no fire economy. And I think that the jolts report really just kind of reiterated that point. So we saw a little bit of an uptick in openings, a little bit of a downtick in quits rates. So that was somewhat of a surprise. If we try to extrapolate that out in terms of what the non-farm payroll report means, right now the market's estimating that we're going to get 130,000 jobs. Estimate that unemployment rate's going to hold steady at a 4.2% level. Now, I think that this is an important report because I think that it's going to dictate kind of where ultimately the Fed is going to go. Not necessarily this report in and of itself, but how does the labor market develop? So we know that inflation, it has come down from its highs. It tends to be sticky right now, holding relatively where it is right now. But if we see further deterioration in the labor market, I think that would cause the Fed to move a little bit more aggressively than what we're originally expecting, or at least maybe move and begin to cut interest rates.
Cooper, what does that mean for those who are looking to deploy some capital and some fixed income? Maybe they're closer to retirement, they're trying to, iron things out. What types of duration, issuers are you guys looking at?
Yeah, so right now we think that there is a lot of choppiness in the bond market as well. Just like Joe mentioned that there's a lot of choppiness.
I have not felt good at all.
Right now in the bond market, that theory holds true as well. So we would suggest in terms of a duration, sticking to about a benchmark or below duration. Now there is the potential for yields to move up a little bit more from here, given that the term premium has moved up a little bit. And that's just really a risk metric that the fixed income investors, that AUX fixed income investors closely follow. Now, if you're an investor who's nearing retirement, we'd suggest you really take a step back and position your portfolio appropriately. Generally, what we recommend is at least 1 year's worth of spending in cash. That way you know that even if the equity market sells off or there's a lot of choppiness in the bond market, you have that 1 year of spending in cash. Then suggest the next 2 to 3 years of fixed income or 2 years of spending in high credit quality, short-term fixed income investments, those that mature in say 2 to 3 years. And then from there, begin to build out the rest of your fixed income and equity portfolio.
Joe, when we look at this range-bound market, one thing you could also add is, at least in the last month, things have started to really normalize from a volatility standpoint. And boy, what a difference 2 months can make as we're coming down from the world ending to pretty normal benign conditions here, Joe. I'm always surprised by how quickly that happens, but it seemingly surprises me every time.
Yeah, it's interesting. You go from a 60 to a 17 in the VIX handle in 2 months, and it just shows you that the markets are having a much easier time digesting news as it comes along. Even what we saw just in the last couple of weeks could have been really market moving, and then within a couple of days things kind of settled out. So I think it's more of a representation of a couple things, Alex. Number one is that the market's waiting for some type of catalyst before it kind of takes that next leg up. We recovered basically all of the losses, and we're even slightly positive on the year now. But what's it going to take to set all-time highs? We need a deal. We need a trade deal. We need an announcement of a deal, and we need it to happen within the basically the next 30 to 35 days before expiration of that kind of stay of execution when it comes to the tariffs. So it'll be interesting to see as we get closer and closer to that date. If we're not hearing anything, I wouldn't be surprised to maybe see volatility start to pick back up a little bit. But I think this market, if you want to see it go back to new highs, you need a deal.
When you're looking at volatility, is there any kink around July or September, August when we're got more Fed uncertainty or trade uncertainty, or is everybody just selling calls against their positions up here?
Yeah.
I will say this: over the next couple weeks, we're kind of caught in this little bit of a open interest gamma scalping right around this level. So between 59.50 on the low end and 6,000, that's the highest
gamma scalping
open interest for this current expiration cycle, one ending this week. And you're kind of seeing that around the next couple weeks. Yes, as you do start to get a little bit further out, you do start to see a little bit of pickup in the implied volatility, and it makes sense, right? There's a little bit more.
Slash ES bounced off the 200 on the 2 minute.
The fact that you have the tariffs, but remember, July is going to be the kickoff. For
that'd have been a good trade right there.
So that's one of the reasons why you see
nice little hammer with a doji.
Cooper, from one policy
two hammers
uncertainty
actually
to the other, when it comes to some of this legislation that's working its way through the
off
process,
the 63 on the 5.
Is there anything meaningful that we know, to the extent we can, that could impact some of the products in your universe of fixed income?
Yeah, so I think one of the products, obviously, is the municipal bond market. Because they are generally exempt from federal income taxes, they tend to be a little bit more sensitive to changes in tax rates. Obviously, adding on to the debt load is going to have an impact to the Treasury market, or a potential impact to the Treasury market. So I think that's another one. But if we narrow in specifically, Alex, on the on the municipal bond market, I don't think that there's anything major in the tax bill that would alter our outlook for the muni market. We do think that that's one of the areas of opportunity within the market. If you look at yields are pretty attractive right now. Just the broad index of municipal bonds yields about 4%, and that's tax-free. So we think that makes sense for a lot of investors who are in higher tax brackets. Credit quality is also generally relatively stable, so there are signs that there might be a little bit of a headwind coming up, but right now, the here and now, things look fairly stable as we look at it.
Cooper Howard, Joe Mazzola, it's always a pleasure, gentlemen. Thanks for taking the time. We'll catch up soon. We're going to take a short break. We get back, the bells are going to be ringing. We're going to close down this market as our closers panel will join us. We'll wrap up the session, as well as look at some earnings for Hewlett-Packard Enterprise when we get those numbers 5 minutes after the bell. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly.
Trade brilliantly. Big knife at the end of the day.
Accelerate your market knowledge and shift your perspective.
Okay, well, definitely got stuck in a bad trade today. Can't always go against my resistance levels. Not when your market's as bullish as it was today. And then, the sell-off comes later after I get out of it, so. But it's definitely a very bullish day today. Now, when I put risky in them trades, I want you to understand it's risky. When I type it in there, I say this trade's very risky. if I call out something, I said, man, this is great, or, this, as long as I don't use that word risky, especially very risky, it's best that you don't trade them. Do the opposite. But I felt bullish this morning when I started talking about the I wasn't feeling very good today, so that probably had something to do with it too. Oh. I have epilepsy, and when I was younger, I used to have a lot of seizures. Grand mal epilepsy, where you just fall down, and about died one time. I fell through a glass-plated window. Cut my jugular vein coming very close to cutting my jugular vein. Too close. Punctured my lung, had 150 some stitches in my head. But I don't. So I'm happy to be alive today, that's for sure. And I think that's why I like trading, because it makes my mind work. I've always got this ringing in my head all the time. I grew up with that ring. I had to quit everything. I had to quit sports, boxing. I was talking to my sister yesterday. When I was a baby, 1 week old, I had my stomach operated on. I had a muscle up there by my stomach that wouldn't let the food go down in above my stomach. It wouldn't let the food go into my stomach, and I'd spit it up. I was 1 week old. They had to go in there and cut on me. So I wasn't born perfect. And then now I got this, so I'm going to sleep it off. I took another shower just a few minutes ago, kind of cool me off. Usually don't complain about sick. Hardly ever get sick. I don't feel sick, I just feel like I'm full and I can't shit it out. So we'll see what happens in the morning. Might have to go to the hospital. If I get around to it, I'm going to run up to the store and get me some prune juice. Start drinking a few shots of it. And that's about it. I'm going to sit back and watch resort videos and the news, and hearing a couple of people saying in here that they're being a little bit more careful. It's the scalping time right now because we're up there at all-time high again. So we could see some correction going on. Been a little choppy. I've been stuck in some pretty good sell-offs here last month. I have real good trades, and then all of a sudden I overtrade, and then I get stuck at midday. If I'd have held them contracts today, I had 9 of them. They went to over 20,000, 22,000. That'd have been if I held those, it'd been an $18,000 day. So I recognized that megaphone, and I figured that we were kind of overbought, and we'd hold that top of that megaphone pulled back, but no, we broke out of it. That's what hurt me today. So just remember, when I say risky, think twice before you jump in with me. Catch you later. Dieter's tea. Alrighty, well,